Good morning. Okay, futures are higher. Futures looking good. Okay. Mhm. All right, so we're going to test the highs here. Looks like 56, 58. All right. Number of you have asked me, what's the safest way to make money in the markets? Well, my position is selling credit spreads, iron condors, using the gamma channel as your targets to sell premium, sell outside the current levels. All right. So, for example, we know that support is right around 5,600. If we lose that, we could see 5,500. So maybe you sell something below 5,500. Some of you thinking about selling puts on the S&P big cap. It's a little expensive. You might want to do it with SPY. You could do the same thing. And conversely, um, you could sell overhead calls, credit spreads preferably because, you don't want, for some reason, the markets go crazy, ballistic. You know what your maximum risk is if you sell a credit spread. So safest, safest would be doing that or as we've been talking about for since October last year. Corey asked me, that's Golf Mania to you. Corey asked me to start posting the credit spreads I usually take, because I do that very often. Like, for example, most recent credit spread, I believe I posted in the room was Super Micro. Yeah, Super Micro. So that's posted and that trade's working well. Let's take a look at Super Micro on the daily chart. Okay. So what time is it? Oh, we got 12 minutes to go. 12 minutes to go. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Thursday, the 22nd of August, coming to the end of the month again. So the credit spread on Supermicro, just talking safest ways to make money in the markets. A lot of people like to sell premium, like to sell puts, cash cash secured puts on the big cap New York FANG index stocks. All right, so let's go to that for a second. So the New York FANG index is composed of 10 companies we're all aware of. So what I'd be doing if you're looking to make money safely, one way to do it is to sell put credit spreads right now because the markets are moving higher. So I would do something underneath the say the 50-day. You know what your maximum risk is? So the maximum risk you would have on a credit spread for Super Micro, for example, Super Micro. Let's just shift gears for 1 second. So selling put credit spreads underneath price. We're expecting price to continue higher. I'm using RSI as my reference. If RSI were to start to turn back down, I'd probably look to close that credit spread. So I made $255 credit per contract. I have 5 of those. And max loss is $745 per contract. So I have 5 of those. So the broker requires that I put aside what was the number? $3,700. So it's $3,700 I cannot touch, right? But up front, I'm making $1,275. So I gauge the risk on whether or not I think Supermicro is going to keep going. Let's go to the spreads on Supermicro. I think I saved it here. Supermicro. Yeah, so these expire October 18th. Now I will not wait until October 18th because we have a um, split coming up August 1st. So I'll be out probably in the next couple of weeks. But those are already up $50 per contract. Now you might say, well, that's kind of slow. Well, yeah, that's why you do multiple contracts. So at $50 per contract, I'm currently up 250 bucks. So it might not seem like a lot, but I posted that trade. When did I post that trade? On August the 15th. So it was only a week ago. Now, if you have 4 or 5 of them, you can easily make, I don't know, $1,000 a month, $1,000 a week, every 2 weeks. So $500 a week, just current income, just, selling like, say, 5 of them. Doing multiple contracts or multiple stocks, you gotta follow a few more, obviously, but that's one way to do it. So I'm thinking the safest way to do it is not to buy calls and puts, but to sell premium, and you sell outside the expected range. You can calculate that with ATR. So if the stock has a $1.50 range, if the stock has a $1.50 range for the day, for the week, conceivably you could see $7, $8 worth of movement. So I would sell $10 out of the money, or $10 ATR, and use a delta like 20 or even lower. I mean, I could sell deltas of 15. I won't get as much premium, but the probabilities of me having to the probabilities that I won't have to touch it are about 85%, which is a pretty good number. You just have to make sure when you're selling a credit spread, for example. I like to do it when you have intraday price action, dip. Okay, once you see the dip, then your puts that you're gonna sell are gonna be, at the best value. You start to see prices move away. In this case, you had a flat VWAP. So you start to see the price action move away. That's where you want to sell the puts, is down here near the lows. You sell a 15 or 20 delta down here at the low of the day, your premium is going to be high because people are thinking, oh, it's going to just keep going, right? Instead, or you expect that the price action is going to continue to move higher. So you sell the puts. You can see the wicks on the bottom of the candles. I'm always looking at the wicks to tell me, okay, I can sell premium down here. I could add to this, so I could get up to, say, 10 contracts. Um, I could get up to 10 contracts on this one. So that's what, 7,500 bucks. Well, that was a week ago. 7,500 bucks that I'd have set aside. By the broker would hold on to that. That would be my maximum loss, right? But my gain, my premium, is what, 2,550 bucks. So you've got a pretty good rate of return on your investment. So that's the safest way to do it, in my opinion. Okay, selling premium, and I would usually do it 30 days out, 45 days out. Now, if there's earnings coming up, you might want to sell maybe 2 weeks out, looking for the premium to continue to expand. Again, we were talking about selling cash secured puts. So on Tesla, for example, if you were okay with getting assigned 100 shares of Tesla at 210, or below, let's say you sell puts at 200. I don't know what they're going for right now, but you could sell cash secured puts. I would prefer to do credit spreads, just my personal preference, but you could sell cash secured puts and look for prices to continue to move higher. You just collect that premium, and a week or two from now, you just do it again. If you're thinking that the price is going to continue to move higher. I see RSI moving higher, so I'm thinking that I want to continue to sell puts because RSI is rising. Now, once we get up to the highs and you see RSI up here showing muscle, there comes a point where I'm thinking about, okay, let me start to sell call credit spreads, where I'm thinking prices are going to move lower. And we just keep doing that, adjusting down every couple of weeks, selling 2 2 weeks out, maybe a month out, 45 days out, looking for prices to continue to consolidate and pull back. Looking at the 200-day for an area where I want to start taking those positions off. So I'm always looking at price action. I think you can use Bollinger Bands to set your strikes. Weekly, weekly, you can see that there's very high probability that Tesla is going to stay somewhere between 150 and 300. So, 150-point range. We're nearing the middle of that range. So I'm thinking, okay, let's sell 6 months out. Let's sell, say, the 300 call, buy the 310, sell the 150, buy the 140, 10 wide, and collect some iron condor premium. I'm thinking about doing that this week, next week. Depends on what Tesla continues to do. All right, so let's get ready for the opening bell. We got about 3 minutes to go. I was just talking about the safest way to make money in the markets. The safest way is to not bet, but to sell to people who are betting. Now, you won't make as much money as if you buy straight calls or call verticals and the stock goes crazy like Roblox did yesterday. Let's go to see what Roblox looks like today. Roblox. Okay, let's look at Roblox. Okay, so Roblox breaking out. This morning, I saw Roblox was pulling back a little bit pre-market. Okay, let's go look at that. RBLX, Roblox. Now it's moving higher. All right, so Roblox was moving lower. Now we're starting to move back up towards the highs of the pre-market range. The yellow area is pre-market. After hours is the blue over there. So yesterday we closed right around this area. Let's see what Roblox looks like now. Roblox. All right, so Roblox, RBLX. Okay. The what's that? MicroCloud Hologram, whatever the name of that company is. HOLO. That one's on the move right now. Let's see. HOLO. Okay. Trying to take out the highs from yesterday. HOLO. Penny stock. Just happened to be following it because I know that Cayman is trading it. I might buy some shares of this just to see if I can get 30, 40 cents out of this. Okay, so Roblox. Okay, Roblox is bouncing. 43.35. Okay, the other thing is some of you were asking me, what do I use during the day to scan for stocks? Well, I'll use, with less than a minute to go, I'll use the dashboard for stock charts most often. Look at the stocks that are most active. You only have to pick one out of these. All right, so we're open. Futures moving higher. So the first 15 minutes, I'm not doing much of anything except taking profits off the table. So that's what I'm going to look at right now. Okay, what is Bitcoin doing? Bitcoin's need to see a move higher on Bitcoin. Chewy. All right, Zscaler. Let's take a look at a few names. Zscaler, looking for this to do some push-ups and get up there to 208. Next pivot level, 208. There's a 203.75 here. There might be some initial selling. People got stuck here, pull back. They stuck with it because it popped the next day, next week, and it dropped back down below the 200 day. So there's going to be some. This is Zscaler. All right, there goes the futures. Futures on the move. All right, so I'll get off of that. Zscaler taking off. S&P taking off to the upside. Nice big move there. Okay, 0-day setup is mostly bullish. We got the Qs with 5-to-1 up volume. The Qs have 5-to-1 up volume. Qs 5-1 up volume. All right, where is my Qs? Qs 5-1 up volume. Watch your FANG stocks. Okay, NASDAQ 100. Let's see what these look like. NASDAQ 100. Okay, it's about 50-50, 50 green. All right, so booking. Booking is the top of the list right now, followed by Synopsys. Ryan Holmes is back up there at the top of the list. Ryan Holmes. That would be NVR, November Victor Romeo. Big builder in the Northeast. Regeneron, I see some biotech related names moving up the list. Clack Semiconductors, or let's see what semis are doing. Semis were right at the 50-day moving average. Okay, semis are making it, trying to get back above the 50-day. All right, the semiconductors trying to make it above the 50-day. Security stocks have been pretty strong, so you want to check out those as well. SMH. All right, so we're right above the 50-day now. All right, so we're at the mean. We're at the middle of price action. Bollinger Bands, top Bollinger Bands are right overhead, but we're at the mean. The 50-day moving average just determines whether or not we're going to be intermediate and short-term bullish. Short-term, we're obviously bullish. Intermediate term, above the 50-day is what I'm looking for. So I'll be looking at stocks like, say, Intel for follow-through. Nothing there. So look at other stocks that have been moving, like LRCX. That's okay. NVIDIA, of course, is the key. Continues higher. NVIDIA, I was thinking about buying some NVDL. So let me take a look at NVIDIA coming out of the gate. Okay, so it gapped up, looking for some consolidation, maybe a follow-through. Okay, so NVIDIA. Keep an eye on the stocks that are most active on the Dow Jones. These, David, you asked me, these are I'll look at these and see, okay, does these look like they're going to follow through? Walmart, Visa. So Visa looks interesting. Home Depot. We know Home Depot's been on the news lately. Bollinger Band's opening it up. So I'd probably be looking at Home Depot for potential trade. Home Depot for potential trade. And look at Home Depot earnings. Okay, so next time it reports is November 12th. So what I want to see is all four metrics green. So that's a go for Home Depot right there. Now, it's not big earnings growth or revenue growth, but all four of these are positive. So that's good. And it beat earnings expectations, but it missed the high estimate. So now I would go back to Home Depot and look at a potential entry. Okay. And it's early, so I'm not really interested in jumping in feet first, but look at the volume. That tells you institutions have been buying into earnings. So that's a good thing too. Okay, but we do have some resistance in this area. So now I'd go over here and check out Home Depot to see where support. Okay, so it's just about ready to clear some resistance. So if you don't mind scaling into Home Depot, this is a good area to start looking. And then look for 292, or excuse me, 392 is the next resistance. So I'm going to look at Home Depot as well. Home Depot dipping down. Now look at Home Depot right now. It's starting to dip down towards this area of liquidity down below. So if it bounces here, I'll look at potentially taking a Home Depot trade. So let me load that up. Home Depot HD. And I know that I have out until November, so I could take some calls that are, say, a few weeks out. Maybe the end of September. Let's see what those look like. End of September. And I want to do a vertical. Okay, so it looks like it's starting to bounce right now. Look at a vertical on Home Depot. Let's see. So you could do the 375, 380. I'd like to do like 10 wide, 375, or you could do in the money for $15 more. Oh, there's a big spread here. Wow, there's a huge spread. There's like a dollar spread, $2 spread on the September calls. That's stupid. There's no way I would buy that. Vertical. Let's see. So bid is really low. Okay, so I'll go to a different contract here. Let's go see what this looks like. Yeah, the spread on the slippage on Home Depot calls are pretty wide. Let's take a look at Lowe's. Maybe Lowe's is better. Lowe's. Okay, let's see what Lowe's looks like. Lowe's. Okay, Lowe's is trying to move higher too. Let me go take a look at Lowe's here. LOW. Okay, Lowe's. Yeah, it's all right. So I'll pass on Home Depot because the spread is like $2. That's crazy. You could put in a limit order at the bid, see if you get filled, but limit. All right, so dollar. Let's see. Put a limit for $1 down there and see what vertical, what that gets you. People making some big bets on bonds this week. Well, I have to tell you that in terms of August, I think we all have to Home Depot. Okay, Home Depot. Let's go back to Home Depot. Watching for a bounce in Home Depot. Equal weight, all-time highs. Yeah. Mag 7 is on track to underperform for what, the first time in several quarters? But versus the rest of the market? This morning about Mag 7, that they're underweighted, and then I think the institutions say, well, wait a second. If they're underweighted, that's large cap institutional ownership, mega cap tech under ownership. This is a Morgan Stanley excellent piece that tells you that these stocks are not overweighted anymore. I like this. Really? Yeah. I mean, overweighted, really. Yeah, it's pretty amazing. Meta. Oh my. Okay. Meta. David, people, they're actually Netflix. Okay. When you spend at Meta, I mean, like here, this is what you're making. Mark Zuckerberg is a dream come true for any. Meta looking good. Meta looks like it wants to break out. Meta. Apple looks like it's trying to break out. Nvidia looking good. Nvidia. Maybe I'll buy some Nvidia. NVDL. NVDL. I saw Unilever was upgraded today. No, you should be upgrading Procter. D&G, right? That's what you always think about when you talk about a dollar that's getting weaker. Colgate, multinationals. Colgate, which has already had a very good year. Colgate's had an amazing run, but you can't get a word out of Colgate. Not a word. The only Colgate that I get is the toothpaste. The toothpaste, yeah. No, they're very quiet. They're a quiet company. They don't have to at all. Okay, let's. All right, Home Depot is sitting on top of this liquidity level. All right, Nvidia. Watching Nvidia. Okay, Nvidia dipping a little bit now. Okay, watching Nvidia. All right, so hologram is on the move. People are thinking about ag and water plants and auto manufacturers. If this, in fact, a third of their freight crosses the border. It was amazing when I saw that because it reminded me of when the Truman administration was worried about the rails slowing down the U.S. economy. I didn't realize how important these two are to the U.S. economy. Much more than I thought. By the way, there's a backlash to Costco. Okay, HOLO's on the move there, Cayman. I think you probably realize that. Okay, SPY, watching the S&P and SPY. What I'd like to do is sell some call credit spreads if the S&P, once the S&P gets to the highs. 0 day is bullish. We got 2-to-1 up volume on NASDAQ Composite, 3-to-1 on the SPY, 5-to-1 on the Qs, just rounding up, 5-to-1 on the Qs, 3-to-1 on the diamonds, Dow Industrials, and 1-to-1 on IWM. So I would focus on SPY and the Qs right now. Watching NVIDIA, Apple, NVIDIA on the dip, Apple on the dip, AMD dipping at the moment. Those didn't move much yesterday, so I'm looking for a follow through. Okay. S&P cash. Oh, let me put the let me put the ticker on here.
Amazon brought back prices 50% on Prime Day, which is incredible. But you're just right, just in terms of the sheer control these companies have over our lives, because I would argue of superior execution, superior product, and scale and globalization and all of the things that they've been able to benefit from. And you're right, that's incredible execution.
Okay, there's the banner. There's your banner. Okay, so we're S&P cash right now, just watching the S&P cash. Okay, you can see some pretty decent support here underneath price action. Okay, NVIDIA, AMD, watching AMD. Okay, NVIDIA dipping a little bit at the moment.
In the meantime, you can talk to Steve Bannon on one side, and then on the other, I don't know what the opposite of Steve Bannon would be, but you say the same thing. But you just knew Steve Bannon's side of things. Well, he hugged me once. How you doing? He hugged me. Navarro's hugged me. Really? Yeah. He's my brother. You guys are alone on that front. My brother. I was like, is this actually Renee Haas hugged me from arm? That's okay, right?
Okay, futures just sitting here. NVIDIA pulling back. NVIDIA. Okay, so look at the area of liquidity down below on NVIDIA. All right, so I'd be looking at this liquidity level for a test in this area here. Okay, let's go out to the 60 minute, see what that looks like. 60 minute. Okay, there's a fairly large area of liquidity down below. You can see there's 3.75 million shares have traded right there after hours and pre-market. So if it comes down to that level, that would be an excellent entry. Hopefully it just follows through and takes off to the upside without revisiting 128, 129. Zoom with earnings out. Zoom, nice move on Zoom. Okay, I wouldn't chase it, but it looks good.
One of the first people ever to go to Disney World. I went in 73. I worked pretty early. 6 months. As you well know. As we know. Yeah. The cruise. Don't go cruise. Great place to work. Jim Schwab. TD selling a bunch to get some of these regular.
All right, NVIDIA is holding. Okay, so NVIDIA for now is holding. Zoom looks good. NVIDIA. Okay, let's go back and check what's working right now. Dow Jones. Let's look at the S&P 500. Okay, so Estée Lauder, that looks like a pretty good entry, actually. Estée Lauder. This is turning the corner. If you like retail brands, Estée Lauder, pretty solid company.
this was all like the sweep, how much you make in your account. And it was a very opaque issue. But remember, swaps should not be down on this. Swap is just it's a stock sale. And I happen to think the Fed is coming out of it, and that we don't want to hark back to that. I think we're fine in that business. The business is good.
Estee Lauder looks really good. I like this one. Okay, starting to dip. Wait for the dip. Okay, S&P pulling back. S&P. All right, so Bollinger Band. We're at the top Bollinger Band, so I'd wait until we get down to the middle of the Bollinger Bands. I don't like to trade before 9:45. It's 9:47 now. So reassessing the markets. We gapped up. Up volume looked good. Now we're fading a bit.
This is the weakest going back to December. This is the last month at 49.6 was the weakest since December. Now you have back to back under 50. All the numbers up to last month and this month had been above 50. So manufacturing not looking so hot. But the service sector is 55.2. 55.2 on the services PMI. This is well better than expected. 55.2 actually is the best only since June. But do keep in mind, this is now the 19th consecutive month above 50. It's a very solid reading.
Okay, NVIDIA's sitting here. Futures did pull back a little bit, so I'm watching that. Estee Lauder. Estee Lauder. Let's look at Estee Lauder. Okay, NVIDIA looking good. On the hourly chart, NVIDIA looking good. Earnings next week. Will people start to pile into NVIDIA? Will people start to pile into NVIDIA? Okay, NVIDIA's starting to go. Okay. Sorry, this is supposed to be daily. No, let's go to the 60-minute there. And let's go to the 1 minute here. 1 minute. Okay, NVIDIA's starting to move back above VWAP. Okay, I'm thinking about NVDL. Let me buy some NVDL. I'll scale into this NVDL. Just need to see the markets bounce. NVIDIA still messing around here. So AMD pulling back. Apple starting to bounce. Watch Apple. Tesla starting to bounce. Okay, so right now we're negotiating the highs. So far they've faded the high of the day. We're up 1250 on the ES. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Thursday the 22nd. Okay, we're fading back below. So just curb your enthusiasm for the moment. Okay, let's keep an eye on NVIDIA for a sec. Let's see. NVIDIA got earnings next week. Okay, I got a little dip in NVIDIA so far this morning. Let me just go out a little bit. Let me go check this. Restore. Okay, NVIDIA looks like it wants to go. It's at the top. It's in the upper half of its Bollinger Bands, NVIDIA. Let's go take a look over here. NVIDIA, there's no hurry. All right, so curb your enthusiasm. NVIDIA, Doji for now. Okay, can it get going? NVIDIA. AMD still fading. So semis are at the 50-day fading. Apple hit an area of liquidity. Looks like it wants to go. Apple hit an area of liquidity. Let me show you right here what we're looking at. Apple just dipped, okay, down to this area of liquidity. You see that right there? That green band. All right, let's go to the 15-minute, see what more we have down here. Okay, see that area of liquidity right below? Looks like we're going to push higher now. Apple, S&P, moving. S&P is fine. It's just moving back to the center of the Bollinger Bands. Okay, advanced decline percent. Advanced decline line is turning a little bit red. Tick is at 0. We've been up for a few days in a row. So what is this? That was yesterday, was day 10, day 13, day 14 today. Day 14 on the S&P. Just negotiating. Okay. Yeah, today's day 14 on this rally from that low at 51.20. S&P looks like it wants to bounce. Okay, there goes Apple. Apple. Let's get back to Apple. This looks like it might go. Apple. Okay, Apple. All right, buyers at the low of the day already. Apple. Apple's starting to go. That might be a nice play. Apple. Okay, let's see. Where is my entry order screen? Charts. Trade. Apple. Okay, getting a little extended. All right, so watching Apple for potential. I would say 225, 230, or 225, 235, 10 wide or 5 wide on the verticals. See what kind of premium I have to pay for that. Okay. Say hello to Renzo. Okay, so Apple watching. Okay, does it get going? All right, let's look at Apple on the daily time frame. Apple daily, we got a $5. Let's say we'll round it up to $5 ATR. So we're up $1.50 right now. Apple. Say hello to Renzo. He's got a new member in the room. All right, watching Apple for the follow through. It's got potential to run. Okay, let me see here. Trade. All right, I don't want to take too many positions. Apple. All right, the markets are bouncing now. So if you like the S&P, we're still 1-to-1. Okay, so we're 1-to-1, 3-to-1 on the Qs, 1.75 on the SPY. Looking for a follow through. Right now, most likely we're going to just sit here and do nothing. Okay, so Apple, I like Apple. Apple, let's look at the liquidity levels here on Apple. Big level over here on the right. Okay, so that's down at 226.50. So that's $2 lower, $1.50 lower. All right, Apple looks like it wants to go. So let me look at verticals here. What's 30th? 30th, that would be next Friday. All right, so the calls look pretty good. Buy a vertical.
Maybe it's overdone, and that's their point. And that maybe you can sneak in here and start buying Lulu, because even if they, like Citi said, give you an estimate cut, maybe it's bottoming. It's been a horrible run for Lulu, and I point that out because they report on the 29th. A very significant report. Are you willing to take what Piper said about EL in China?
Okay, I just took a 227.50, 230 call credit, vertical rather. 227. Let's see, August 30th. August 30th.
Yeah, no, cruises. Yeah. Then Intuit, which every small business absolutely loves, and Darcy's so fabulous. And then Fortune Brands, people don't realize these guys are involved with like no mold.
All right, so
Insurance companies are demanding that you buy their product in order to be able to stop.
that was 130 limit.
Nice business they have. Over, by the way, China Farm.
Jim, we'll see you tonight.
Absolutely.
At Monday, 6 p.m. Eastern time. When we come back, Philly Fed's Harker live from Jackson Hole. Don't go away.
Okay, I just took a vertical on Apple. Okay. That's in the trading room. Let me post this in the alerts channel. Okay, looking for Apple to continue. Okay, maximum profit would be a move to 230 for me. Okay, so at 230, I'll take some profits. All right, S&P is bouncing. All right, so we had a little bit of profit taking right at the open. It looks like they're going to push this higher. Just keep an eye on up-down volume. Up volume is 2.7 on the Qs, 1.7 on the SPY. New York Stock Exchange showing a little bit of selling. So let's go take a look at Breath. Breath had gotten a bit overbought. We dipped and we bounced. So let's look at advanced decline percent. Okay, so this is currently pointing down. So looks like they're selling into strength at the moment. Let me take a look at tick cumulative. What does tick cumulative say? Survey says tick cumulative looks like it's peaking on the 15-minute. What about the hourly chart? Hourly chart. Okay, so still trending. Hourly is still trending. Okay, neutral on Grover's momentum, tick momentum, neutral on Grover's momentum. Okay, let's look at, you know that NIMO and NYSE, the summation index, crossed over bullish. So that's telling us to look for a few more days upside. The vertical arrows are where previous signals led to 4 or 5 days additional upside. So that turned to start the week. So we're at Thursday. Do we see more or do we have a blue elder stick to deal with? Probably. This is the end of day. So that was yesterday. So looking for more signals. All right, let's go take a look at the S&P equal weight index. Actually, before we do that, let's see what's working. Growth or value? Growth or value? Okay, so we've got growth outperforming again. Okay, so growth is gapping up, a doji. Value looks good too. So we want all of these sectors to be bullish. We want all these sectors to be bullish. All right, Apple, looking for the follow through. Apple. Okay, Apple looking for the follow through. 230, I'll take profits. $230 would be the max profit. Hollow, penny stock, hollow.
In just a moment, we're going to take you live to Jackson Hole, Wyoming for an interview with Philadelphia's Fed President Patrick Harker as all the Fed presidents meet ahead of Fed Chair Powell's speech tomorrow from Jackson Hole.
LGVN, that one has some room to run perhaps. LGVN being mentioned by Cayman. LGVN. Okay, looks like it's trying to get back above the 50-day.
Technology, energy, financials, healthcare, consumer staples, all those groups in the green today, materials and consumer discretionary.
Chewy, what's Chewy doing? Chewy was something that was mentioned yesterday. Chewy. Chewy. Okay, consolidating. Roblox was big yesterday. Roblox giving some back today. No, Roblox is going. Okay, Roblox day 2. Roblox.
For the first time in 9 quarters. The stock is still down more than 40% though over the last full year of trading and way off of its pandemic highs.
Let's get some existing and head out to Diana Olick. Hey, Diana.
Hey, Carl, existing home sales in July broke a 4-month losing streak, rising 1.3% month to month to a seasonally adjusted
Roblox looking good. It's at the top. Bollinger Bands looks like it's going to follow through. So I'd use a trailing stop, 1.5 times RVOL. Okay, following through. Bollinger Bands opening up. Notice the Bollinger Bands on Roblox.
And that's probably why we're seeing more buyers come into the market. We're still at a 4-month supply, though, due to a higher sales pace. A 6-month supply is considered balanced between buyer and seller. And that low supply is still keeping the pressure on prices. The median price of the home sold in July was $442,600. That's up 4.2% year over year, but it is no longer the all-time high price, if that gives you anything, but it is still up year over year. We do have a lot of all-cash buyers in this market, though, 27%. That's up from a year ago. And the sales continue to happen on the higher end of the market. Sales of $1 million plus homes up 26% year over year, and that's because the supply is up over 30%.
Okay. Yeah, that one's going. Hologram is going. Hologram is going. HOLO.
Okay, Diana, thank you. Modest tick up there in Treasury yields on the back of that report. 10-year
Okay. Apple looking good. Apple trying to get going here. Apple.
We get them every Thursday. Number of Americans filing for unemployment claims ticked up a little bit, but to 232,000, I mean, it's still low, and it speaks to a labor market that
You're
has
crazy.
produced a lot of layoffs, which is good news, especially because we're really on guard.
You're crazy, Cayman. All right, watching the S&P, we could just see a doji to start like we did yesterday and then have the markets just take off. Bitcoin is flat. Apple looks like it wants to go, but it's hesitating. Okay, so Apple. Okay, let me show you what I'm looking at. Apple. Okay, liquidity on Apple.
Consumer traffic has remained consistent. Overall purchasing activity has shown some softening. Customers appear to be exercising more discretion in their buying decisions. That jives with what we've heard from some of the other retail CEOs. Advanced Auto.
Let's see.
Consumer-related headwinds related to maintenance deferrals and lower discretionary spending to impact our trajectory in the short term. With respect to quarterly trends, both our pro and do-it-yourself businesses have started off.
I have too many keyboards. I have too many keyboards here. All right.
Wholesale CEO. It's worth noting that members remain discerning in their purchasing behavior, which was evident in big-ticket seasonal categories such as patio sets and structure. So a lot of this, David, talk about discerning, choiceful, value, softening, but not a collapse. You know, and that's pretty much what we got from Target earlier this week as well, where the traffic increased because Target was able to give the consumer value, cutting costs.
Yeah, they lowered some prices. They got brought people in, and they benefit as a result of that.
That's where we
I
are.
always do wonder with some of this language how much of it is an explanation that may be true but not completely true, because some of it has to do with other trends as well, or a lack of execution on the part of the said company.
Everybody always can blame the macro, right? If they're struggling.
Why not?
And you do
Apple.
see a separation of winners and losers. I think it'll be really interesting in the coming week to get some of the stronger names like an Abercrombie, which has not talked about softening of the consumer and not talk about, you know, consumer being more choiceful, because they've just been nailing it on trends and speaking directly to the consumer on social media and getting everything right. So you have to look for the stronger ones. I think also Nike is an example, right? They blamed some.
Okay, S&P is still pulling back. S&P.
That they've seen.
So Mondo has puts on the S&P.
And we've seen really strong results from some of the competitors.
All right, Roblox. Looking for a follow through in Roblox.
So absolutely, that's what happens when.
Okay, Roblox. All right, Apple. Watching Apple, watching the indices, because if the indices starts to pull back, we could see some weakness in these.
Corporate greed and price gouging.
Apple.
You hear a lot about it from the politicians, and Vice President Kamala Harris's big economic response to inflation is that she wants a federal ban on price gouging, particularly for food and groceries. So I went back and looked.
All right, Microsoft. What's Microsoft looks like? If we have Microsoft moving higher, that would help. Microsoft. Microsoft. Microsoft starting to push into this area of supply overhead. You see that? Starting to push into that supply area. If we get above 426, 425 for starters, 425 is a major level, money magic level, 425, right? 425. 425, where's my 425, 430 on Microsoft. If you're not using money magic levels,
There's not a lot of evidence that these companies are juicing their margins by passing on extraordinarily high prices to consumers more than they're paying on input prices. So as far as a federal ban on price gouging goes, I think it's going to be very difficult to implement and perhaps maybe based on nothing.
I know. And then how do you even implement it? Where's the line? You're not allowed to have a margin past what number?
First of all, it's not clear whether it's happening separately.
No, and I
Do you want the government setting fair prices on things?
It's not going to happen.
Right. So a lot of economists are
okay, Apple pulling back a bit. Apple.
Forget the Republicans for a second. Democratic economists like a Jason Furman, who was quoted in the New York Times, an Obama economist saying this doesn't work. Moody's Analytics.
Okay.
Mark Handy, typically people on that. This whole policy.
Well, as we pointed out, front page of the Times today basically discusses it as a notion. There's really no way to tell what exactly the law would do, and argues that maybe the Democrats are happy with that right now, simply riding out the momentum they have in the midst of the convention.
It's a gimmick.
On both sides, as David mentioned earlier, cutting energy prices in half would sort of be the same thing. Let's get to Jackson Hole this morning. Our Steve Leisman sitting down with Philly Fed President Harker. Hey, Steve.
Carl, good morning from Jackson Hole, where the Fed is this evening going to begin its annual summit. And I am here with Philly Fed President Patrick Harker. Patrick, you just reminded me this is our last Jackson Hole interview with you as president.
Yes, it is. Yeah.
We've done this for something like almost a decade now.
Almost a decade, Steve.
Well, thanks for joining us this morning in the cold here. I want to start off knowing that Philly is known for its expertise in macro and micro when it comes to the employment and the jobs market. And Sarah was just talking about this. Do you see weakness in the job market or softening? How do you judge it?
So, do we see softening? Yeah, but we see softening from a very high level, right? We were doing a lot of catch up after the pandemic. It seems to me that we're heading back to what would be normal. Take the revision that we just looked at. That was not a surprise to us. We do early benchmark revision research at the Philly Fed, and we knew the number was going to come down. It went down a little more than we expected, but not by a lot. So things seem to be getting back into balance in a way that I think is good. Look, the number average, we were just talking about this, the average was still good.
174,000.
174,000.
242.
Go back to 2018, 2019. That was a really good number. So I don't think we're in a place right now. And you can't just look at that number. Look at claims today. Look at other measures in terms of job transition rates and so forth that you look at. The labor market has definitely softened, but from a place where it was very difficult to get workers. I've been out and about in my district this summer.
Right.
And what I'm hearing from contacts is it's easier to get workers, except for those things that they were having a hard time, those positions they were having a hard time with back in 2019. Nurses, machinists, you can go down the list.
Skilled workers.
Skilled workers.
So does it change your view on, assuming there's a risk management approach here where you're balancing the dual mandates, does it change your view at all of the risk that the job market may be weaker now and you have to guard more against potential weakness?
Yeah, I mean, it was all inflation for a while.
Right.
Now we're starting to see things, the balance of risk getting more equalized. So we do need to take more into account when it comes to the labor market, for sure.
What does that mean, taking more into account?
Well, I think it means this September we need to start a process of moving rates down.
And how aggressively do you feel you'd have to do that?
That's a really good question. So again,
What I get paid to do.
Yeah, I've been out talking to a lot of contacts this summer.
Mhm.
And one thing I heard from them, bankers, business leaders, community leaders, is whatever you do it methodically and signal it well in advance. Give us time to absorb the change. I mean, they understood why we did what we did to bring rates up very quickly, but they're saying, please don't do that again to us. Now, barring something we don't anticipate in terms of data,
Right.
we need to start bringing them down methodically. What they say to me is, we don't really care that much whether it's 25 or 50. It's just start the process and keep it moving.
Do you care if it's 25 or 50?
No, in the sense, I think what matters more is that we commit to start bringing rates down back to a neutral rate.
Okay, so this brings up at least two questions. The first one that gets me is this notion of the Fed being well positioned to respond to weakness. If you're too far from neutral, you're not all that well positioned, which argues for a more aggressive series of rate cuts to get to a point where you are indeed well positioned.
Yeah, I think we need to let the data speak to this. So right now, I'm not in the camp of 25 or 50. I need to see a couple more weeks of data. But I think it's, again, what people are asking for. And we're seeing this with the longer end of the curve right now. The markets are already responding. That's what matters. It's not the Fed funds rate that matters as
Right.
much as the overall curve.
Well, I'm going to skip a question then. I'm going to go to that one right there, which is this notion of the market is priced in 100 basis points through the end of the year and 200 by this time next year. Is that too aggressive? Is that appropriate?
Yeah, I'll let the market speak for the markets. For me, I don't know what that exact number is right now.
All right, so that gets back to the question I was going to ask, which is how restrictive is the Fed right now? Where do you feel like if you wanted to provide stimulus to the economy, where would you need to be?
But I think we're appropriate right now for our policy stance. But again, what matters is we start to bring rates down. That sets the expectation, because this is all an expectation game, as you know, monetary policy. It's not about the rate today, it's about what the rate's going to be in the future.
Sure.
That's what matters the most, is that we commit to bringing them down.
And when you get to that point, well, first of all, are there lingering concerns about inflation given that you're still above target?
Yeah, it's interesting. So again, I've been out talking to contacts. Shelter, that's the big one that we continue to worry about. What I'm hearing from bankers is they're back in the mortgage business, right? They're now writing mortgages because, again, the longer end has come down. What we'll see, in my estimation, is the lock-in effect that we've seen with mortgages. As rates come down, people are going to start to move and free up some of the housing. Second, I've heard from bankers, developers, that they're sitting on projects and they're not willing to put a shovel in the ground yet until they start to see some sense that the rates are going to get back to where they can pencil it out. We're getting close to that point now. I think you're going to start to see some development. Now, this has not overcome the structural problems we have, whether it's zoning or you name it.
So you feel like reducing rates will bring more housing supply to the market, which will put downward pressure on housing inflation, which will put downward pressure on overall
At
inflation.
least that's the theory, Steve. I mean, we'll have to see how this plays out, but that's what we're hearing from
I'm
contacts.
sorry, but the inescapable conclusion is that you've been making inflation worse by keeping rates high.
Yeah, well, this is one where our understanding of monetary policy transmission,
Which
the
is what we're
typical
talking about
textbook-
here.
Yeah, the typical textbook model. Take rates up, things slow down,
Right.
et cetera. There's a lot of nuance to that, and housing's a great example of that. We're going to learn a lot coming out of this period in history
Right.
about monetary policy transmission. That's why this topic is so important.
Fascinating, Patrick. The idea that if you tighten into a housing shortage, you may make inflation worse.
Yeah,
which is-
and yeah, the shortage was
Yeah.
here before the pandemic
Sure.
hit, right? So
Sure. Real quick, we do have this, I guess it's a Canadian rail lockout.
Yeah.
We've just been through a period of supply shortages and then restoring supply. Are you worried again that you could get some inflation from the supply side?
yeah, potentially, just like we are with shipping, global
Sure.
shipping. So those things will affect the economy. But you know what's amazing if you step back, and I've been doing this now for almost 10 years, how resilient this economy is.
Right.
Yeah, these things hit us, but we react, we respond.
Let me ask you two really quick questions to close out here. What are the biggest risks that keep you up that concern you?
One is just the geopolitical risks that we're facing. I mean, we don't know what's going to happen. There are lots of conflicts in the world. They can affect us pretty significantly. I worry about those. I worry about those not just from the point of view of the economy, but just the humanitarian issues.
And when it comes to the changing rates in September, are you concerned about the optics of that relative to the election?
In that, I'm very proud of being at the Fed, where we are proud technocrats. That's
All right, S&P, we're right back down to the center of the Bollinger Bands. Futures lower. Giving back much of the morning gains on the gap up. We're flat at the moment. Apple pulling back. Apple.
Going to be in Jacksonville for us the next couple of days. Interesting to start to put together the waves of dovishness and hawkishness. Schmidt and Bowman more on the hawkish side, but plenty of others. Goolsby, Kashkari, and now Archer here talking about let's get this thing rolling.
Yeah, I don't think there's a lot of distance. So I feel like, and not a lot of mystery either. They're on track to cut in September, and that's what the market expects, and that's what they're saying. The minutes from July's Fed meeting had one surprise, at least to me, which is that a number of Fed policymakers were ready and willing to start cutting in July.
Several.
There you go. And so, I think that's the Bill Dudley, the former New York Fed president.
Apple still chopping around.
They made an impact. They see bigger risks on the unemployment side than on the higher inflation side. And what they're all saying basically is that we're gearing up for a cut and we're going to go steady and methodically from here. I guess there's a question of whether they would go 50, and it doesn't sound like that from Harker.
Okay, at this point, the markets are testing. Could be the low of the day. Could move lower. Bollinger Bands are down there at 5,600 on the 5-minute 0-day setup. 5,600. We want to stay above that level. We're currently 20 handles above that 5,600. So at this point, if you're not already short, I'd be sitting here waiting for an opportunity to buy. Let's look at the S&P 500. Okay, we can see liquidity down below, which is possible that we test that area first. Okay, so people buy in a hurry as the markets pop, and then they wind up selling it. So these people now are holding the bag. This will pull back. They'll wind up selling their position right in an area of liquidity, looking for the liquidity area to find buyers and for a bounce. So right now I'm just sitting here watching. Apple's pulling back the liquidity as well. Stocks pulling back, generally speaking. All right, let's go take a look at the stocks that are on the move. S&P still up. Estee Lauder fading. Okay, looking for that one to do something. Expedia. Meta looking pretty strong. Meta showing strength. Okay. All right. So right now, Apple pulling back, stocks pulling back. So giving you a directional signal presently. Let's look at the S&P 500. So we've been up for, what's today, day 13? Since the low 3 weeks ago on the 10-year yield popping and the Japanese yen, Australian dollar that blew up. All right, so we could be peaking just shy. We said this yesterday too. We could be peaking shy of this double top, close enough for horseshoes and hand grenades. Okay, futures continued to pull back. All right, so we've been up. Today's day 14. Day 14. All right, so okay, right now it looks like we could see some short covering.
It was all inflation for a while. Right. Now we're starting to see things, the balance of risk getting more equalized. So we do need to take more into account when it comes to the labor market, for sure.
What does that mean, taking more into account?
Well, I think it means this September we need to start a process of moving rates down.
That was Philadelphia Fed President Harker moments ago with our Steve Leisman in Jackson Hole. Joining us this morning, Jefferies chief market strategist and CNBC contributor David Zervos joins us from Chicago. David, good to see you. I wonder if you're hearing any surprises either way in this sort of pre-Powell commentary.
Not really. I guess I would say I kind of agree with what Sarah said in the last segment that there's really not that much division here. There is division. I thought Schmidt was a little more hawkish, Pat was a little more dovish, but the differences aren't big. And really, we're trying to get to neutral. We're talking about the path to neutral. I think Steve pressed on the path a little bit in the last interview with the Philly Fed president, and he didn't budge on it. He sort of said we need to tell the market how we see that path, but we haven't really decided on what that path is. And I think that, Carl, is really what the market wants to get to the bottom of, is how quickly are we heading back to neutral? Give us some milestones, give us some landmarks, talk about the data requirements, or not.
Amazon.
Get us back to something probably in the mid threes before we can say we're at neutral and things are normalized.
Okay, watching for the 9 EMA is down there a little bit lower for Amazon. Looking at Amazon. Renzo, I assume that you meant Amazon. The 9 EMA is at 176.48, so another $3 lower. Let's see. Watching the S&P, we've been up for 14 days, so you should expect to see some consolidation. Target, TGT, Target. Paddock is looking at Target. 155 previous breakout, Target. 155, 53, 53.
And then in many ways, I'm not sure, as we started this conversation, I'm not sure that it matters that much whether we go quickly or we go.
Okay, Target. Let's take a look at Target. TGT. Okay, Target. All right, let's look at the daily chart over there on the right. Daily chart. Okay, so you're right at a supply zone, liquidity.
The economy, the soft landing.
I mean, Sarah, everything indicates that all the haters out there that were talking about Jay Powell being the reincarnation of Arthur Burns and that this was the worst Fed in modern history. It was all wrong. I think he pulled it up. I think he's nailed it. And I think we're going to see tomorrow, some victory lap type discussion.
Okay, looks like we could see a bounce in Target. All right, the S&P is starting to bounce. So if you want to try a reversal back to the top of the bands or the highs of the day, we need to see up volume also agree. Tick cumulative tick is flat at 0. Histogram, TTM histogram is blue bars. We're looking for MACD to turn back up.
You keep using neutral, and they use neutral, but I feel like nobody actually knows what neutral is right now.
I think you're right, sir. It's debatable, but I think we could at least agree it's come up. The R-stars come up in the S&P. We'll see if it comes up again in September when they release their latest stocks. But my personal number is probably closer to 3.25, 3.5. I think.
Okay, nice bounce so far. Nice bounce. S&P at an area of liquidity. S&P coming back.
over the last year.
All right, let's go to the
That's right.
third.
I think that's
So
right.
30 minute. Let's go to the 30 minute.
I think a larger balance sheet at equilibrium allows for a higher rate at equilibrium. And I think we're gonna
Okay,
have
high or low.
even though,
Okay, micro cloud hologram. That penny stock is starting to bounce. ABCD pattern on hollow.
You feel the housing question because Steve got to it with Harker. We just got our first monthly gain on existing since February. Got the 30-year fix down to 6.5. Some of these prices are coming off records. Do you think are we in the process of unlocking?
I think there's a little bit, but there's a lot more to go. I think it's a pretty important. part
Okay,
of
so we were looking at
back over the next
breadth.
level of 3.25 to 3.5. I think that's an
Generally, breadth has been very bullish for the last 14 trading days. We've turned the corner.
from all the Harris folks. There's a lot of focus on housing. I don't know whether
So we're a bit extended, maybe.
I don't think it is.
Okay, a little short covering there.
There's going to be a lot of focus on housing.
Okay. New York Stock Exchange, McClellan volume oscillator still pushing higher. It hasn't gotten to the red zone yet. So we're looking for dips to get bought. We know that we have positive gamma.
Rates are coming down. That's important. But this election is really crucial. What's going to happen in the next 75 days? I think is really
5,600.
a lot of those specific questions, like what happens in housing, what happens in energy, and what happens overall on the regulatory landscape. It's a big deal for the outlook for these financial markets.
Okay, S&P 500 is in a state of positive gamma, so we're looking for some mean reversion. We could see a little bit lower. 5,600 is the level we want to stay above. We're at 5622 presently. 5622. You can see 1.4 billion shares right there on the S&P 500, right below, right at that 5,600 level. So that liquidity could get tested before we bounce. Okay, you can see the liquidity levels building on the way up on the daily on the right side. Okay, so S&P cash, 5,600 could get tested. That would be a good entry level if we do test that and bounce. Apple still pulling back. Apple not working, so watch your stops on Apple. NVIDIA not working yet. NVIDIA not working. Okay, I did want to buy some NVIDIA, but I haven't done anything yet. Starting to bounce a little bit. NVIDIA.
And access support by phone and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech. Trends?
All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, well, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing fees.
Okay, just waiting.
Up to 25 stocks in just a few
We got a 50% retracement on Apple. Watching Apple. Thank you, Rick. 50% retracement so far. Apple's still pulling back. Okay. S&P still drifting lower. Booking.com is number one on the NASDAQ 100. Booking.com. Lilly is moving up the list. Let's take a look at Lilly. That was one that we were looking for a flag. We got the flag to start the week. Monday, Was a doji. Tuesday, we followed through. Lilly looks like it wants to break out.
Coming off a little bit here this morning. CFO is back with us. Sheila Glazers is Chief Financial Officer at Synopsys, ticker SNPS. Sheila, welcome back to the Schwab Network. Thanks for being here.
Nice to see you, Oliver. Thanks for having me.
Appreciate that. Firstly, let's talk to you guys' big.
Okay, what's Roblox doing? RBLX. That was higher earlier. Okay, a little profit taking at the highs.
Plus deal. It seems like right now the news flow I've been reading is that you guys might be getting the eye of regulators across the pond in Europe and the UK. What's the status there?
Sure. So we are in the process of acquiring a company named Ansys. Ansys does system and analysis. So think about it as sort of design environment for physical designs, crash testing of cars, things like that.
Okay, we're up against, you can see the supply over there on the right screen, S&P 500. So you shouldn't be surprised. We're running up against 35 billion shares.
With each one of those, there's different processes for literally every country that we file in, and we're anticipating successfully completing all that and closing the acquisition in first half of 25. We're super complementary businesses. We've gotten lots of positive feedback from customers, so we feel like the regulatory process is very manageable.
Yeah, I think this kind of fits into the broader conversation about Synopsys as the company, as you guys' revenue now.
Okay, S&P continues to pull back.
Heavy toward the semiconductor side, the design application for all these chip companies that are coming out with these new tools.
Down volume is leading. Down volume is leading.
Kind of modeling business. I mean, they complement, but it's not like you guys are gonna like not have any competition. It's not like you're having the exact same business on top of it, right?
Exactly, as you say. So you think about us as creating a design environment for people that are going to make leading edge semiconductors. So think about that, the digital design environment, and the environment that they help engineers with is the physical environment. So how mechanical, thermal things happen. Right now, those are two completely different environments. And with the pace of
All right, the Japanese yen. Let's take a look at the Japanese yen. Carry trade.
Because if you can understand what's going to happen in the
Okay, still looking like a fade. So this is bullish equities if this continues to move lower.
But creating a unified design environment. And of course, we've always been open. They've always been open. Customers are going to want to have different design environments inside there. And so it's really just creating an opportunity to help our
56.17. We're getting very close to an area where we should see some buyers coming in. S&P, I'm inclined to buy some calls soon. S&P.
How much of the revenue right now at Synopsys does come from the semiconductor vertical, and how much has that changed over the past year?
What is the high? The high
It's been
was
really interesting because really everybody's building chips now. Because in the end, you want to build a chip that's workload specific. So over the last several years, we've moved from being mostly indexed to just semiconductor companies to about 45% of our revenue comes from systems companies. And we can even see semiconductor companies are moving into systems companies. Even some acquisitions that happened earlier this week, where it's important to know what happens at the chip level, but it's important to know what happens at the overall system level. So we can see really even traditional semiconductor companies moving in that direction.
Does it look like the momentum
looking for a bounce.
is still keeping pace with the last couple quarters?
Okay, up volume starting to go green.
Guidance higher. It seemed like you're continuing to do that, but also kind of getting a tighter range and understanding maybe where that's going here over the next couple quarters.
Yeah, so as you said, we've raised throughout the year as we've seen even stronger business conditions.
Okay, S&P cash is sitting on top of liquidity. So far, we look like we are finding some buyers. Let's go to the shorter time frames. Okay, so VWAP is still drifting lower. Okay.
So we're seeing a super strong design environment, which is really fueled by AI technology.
Apple starting to bounce. Apple, AMD, NVIDIA, nothing yet. AMD still drifting lower. AMD, bearish looking day. Tesla, still bearish day so far. Tesla. Microsoft, drifting a bit lower too.
Is there any read-through on where the strongest momentum is right now, kind of within some of those subsectors?
Well, certainly, when we thought about AI a year ago, we saw it happening in the data center, but now we actually see AI happening across the spectrum. I mean, really, it's hard for us to even find a chip that isn't some way, shape, or form an AI chip. We're seeing AI in PC.
Okay, most stocks are a bit lower at the moment.
Customers are seeing is driving them to actually speed up the pace at which they're developing.
Okay, Target, nice bounce on Target so far.
The other thing is that the complexity our customers are dealing with is really quite high. And, that's one of the things that we bring to the customers, helping them tame complexity and these advanced designs.
Target buyers at the low of the day. You can see Target starting to bounce. You can see the wick underneath the candle. Target. Okay, big move on Target. Maybe some Target shares. Target. Target.
Going forward, I mean, expectations just for your gross profit margin, or you go EBITDA margin, whichever one you look at, it's like really impressive the way it keeps going up, even as the sales growth is somewhat slow. And how are you pulling that off, Sheila?
Yeah, so our expectation on revenue growth for this year is 15%, and our long-term expectation is double-digit growth. And in terms of operating margin, what we're really focusing on is making sure that we're putting our investment, R&D obviously fuels our company, so we're putting our investment in R&D, but not just in R&D, innovating how we're doing R&D. So just as much as we're helping customers innovate how they do R&D, we're doing that same thing with ourselves. And so we're really making sure that we're helping drive scale for the company, and we're committed.
What's Bitcoin? Bitcoin trying to get above the center line of this linear regression channel. We've got Bitcoin, linear regression channel. We're at the midpoint. Okay, getting rejected. Okay, that's the midpoint of this linear regression channel. Okay, so once we get above the midpoint of here, we should see a continuation of these higher highs and higher lows. Bitcoin. Okay, Target. Target looking for the follow through. Target going.
Jurisdictions, and our expected conclusion of that will be first half of 25. We'll obviously hone that exact date as we get closer.
Okay. All right. Sheila, thanks a lot for the catch up. Appreciate it very much.
Great to see you. Thank you, Oliver.
Yeah. All right. Exciting stuff connected into the AI ecosystem in a big way. Sheila Baker, CFO at Synopsys, more than 300% since 2020, and still climbing on the year. When we come back, let's talk some upgrades and a few hesitations on the AI side for Dell, price target cut, and then the upside will be shoes. There it is, Crocs.
Target, nice follow through on Target.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free, and available on all your favorite streaming.
All right, looking for a bounce in the S&P. I'd like to buy some S&P big cap calls here. Looking for a bounce. Okay, looking for a bounce. How much longer can we manage this follow through? We got a double top overhead coming into that supply zone. Looking for a higher low now. We're on a buy signal for now. S&P buy signal. Let's see if we can get above 56.25. That should do it. We could see a move back up to the highs.
investors. Everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guessing.
Okay, looking for a bounce, looking for a higher low, looking for higher low. Microsoft's still dipping a bit. We need to see these big cap names. Apple tapping an area of liquidity down below. The way this liquidity works is you come into the day and you see see chasers higher. They short, we drop back down. We're looking for areas of liquidity below this green band below. That's liquidity. You can see we tapped it on that wick right there. Do we follow through yet? Haven't seen it yet. MACD is still pointing down, so we need to see volume pick up. And this area of liquidity lead to more buyers. You can see we've been up 14 days straight for the most part. 14 days making higher highs and higher lows on the right side. You can see that area of liquidity where they were buying 512 million shares, and then progressively as it moved higher. Okay, so the liquidity down there is where we're looking for entries. That happens to line up with a 50% retracement that Leestar was looking at.
Let's call it around 30%, maybe closer to 35%. Buy rating is kept on the shares. This is all ahead of the company's earnings results that are scheduled for release a week from today. Bank of America as a firm still believes that the fundamentals for Dell are strong, and the stock's pullback offers a particularly attractive.
Okay, so we're in a positive gamma state, so we're expecting mean reversion. Anticipating mean reversion as long as we stay above 5,600, S&P 5,600. That's the line in the sand for now. We're at 5,620. You can see the amount of liquidity down below and prices above that level. So any dips down to that area most likely see the indices get bought. On the right side, you can see the daily, and that red band is noting overhead supply resistance. Okay, so we want to get above that. I doubt we're going to do that. You know what I was thinking this morning? What happened back in 2020 when we had that big V-shape reversal, S&P. Let's go to the, let's see. You know what? Let me do this. S&P equal weight index. Okay, so here is the big move over here. Let me just zoom out a little bit. Let me go out one more year. Okay, so we had this big move lower. And as we came back up to that potential double top back in 2020, remember when we came back to that double top? And everybody was expecting a move back to the downside. Now, this is obviously a different time, different types of risk back here, but same idea. We were looking for a double top, didn't happen. We just continued to move higher. What was the main thing that changed back in 2020, 2021? What was the main thing that changed that kept this double top from becoming rejection or resistance? As I look at it, the biggest change was the call walls kept moving higher progressively every month. September, October, November, into 2021, January, February, March, just kept moving higher. And then at a point right over here, back towards the middle to end of 2021, we started to see the call wall shifting lower. It would move up, it would move back down, and then eventually the bear market started. So what's going on right now? We've got the call wall shifting higher. The call wall keeps shifting higher. Okay, so what's the call wall now? 5750. All right, so that's the ceiling that the institutions have as their options. Their open interest, that's their highest open interest up there near 5,750. Now you can look at those levels on Money Magic's channels too to get an idea where the call walls are and where you would expect to see resistance. So long as these call walls continue to move higher and don't suddenly start dropping lower, 5,500, 5,600, 5,500, 5,400. As long as that doesn't happen, we eventually should see a higher high and a higher low. Okay. All right. So today we've got support at 5,600. Below that, 5,570. Resistance overhead 5,620, 5,650, 5,665. Okay, while we're waiting on the indices, looks like we're going to dip a little bit more now. Okay. So right now we're at 5617. 5617. All right, 5625 is a level right in between these two big peaks. Okay, you see that? There's a little peak right there. That's 5625. Where did we get rejected this morning? We got rejected at 5640. We got rejected at 5640. So 5640, there's 5650. So we got shy of 5650. We got rejected. We're below 5625 now. And the next level below, which is a major gamma level, we got 152 million in puts, 188 million in deltas on the call side. So a little bit skewed to the call side with 5,600, a major support level. So right now we're at 5617 and we want to see a bounce soon. We want to see a bounce soon. So there's no hurry to do anything at the moment, basically. Yesterday, if you had waited until midday to buy anything, once we started to see a bounce, if you had waited until midday yesterday, BNC pivots started showing up. Those were better entries. So if you were monitoring your trades early yesterday morning, you know that we started to fade. And then at some point during the day, we built that doji and we're in the midline and nothing was moving. We had flat VWAP everywhere. Waiting until about 12 o'clock, 1 o'clock, we started to see some buying coming in. So I'm looking for the same kind of action today, some mean reversion, because we're in a positive gamma state above 5,600. So what I'm trying to say is that there's no hurry to buy anything at the moment. Okay, you could stand to wait. We could stand to wait a little bit for an opportunity. Apple, we're still looking for a bounce in Apple. That hasn't happened yet. SPY still pulling back. Now, if we were to drop below 5,600, markedly and see lots and lots of selling, see the volume spike. If we were to see that, then we would get more risk off. For now, let's go take a look at our risk on signals. Let's look at risk on signals. Junk bonds, we want these to be higher. Okay, they're consolidating at the highs. They're not dropping. So what's this telling you? It's telling you that the risk on is still here. Maybe just some profit taking. Okay, some consolidation at the highs, but it's not like a big drop like over here. We don't see any big red candles. If we started to see big red candles, okay, moving from the upper Bollinger Bands down to the lower Bollinger Bands, then we would get more risk off. That would happen. If that were to happen, we would also see simultaneously probably a loss of 5,600. All right, so that's one thing I'm watching. Also watching the S&P equal weight index. We were at a triple top high. Okay, what's the equal weight doing? So if you discount Apple, Microsoft, Nvidia, Amazon, etc., if you discount those names, what are we doing? We're a doji. We're at the highs. We're at a triple top. Okay, let's look at the New York Stock Exchange as well. When you're in doubt, check the New York Stock Exchange. Okay, we're at a triple top on the New York Stock Exchange. Are we making forward progress? A little bit. Bollinger Bands are starting to come in. So what's that telling you? If this starts to turn in and the upper band starts to turn in, we would start to look for consolidation right near this triple top. Okay, between the 9 EMA, 21 days, somewhere in here. No guarantees, but if the Bollinger Bands start to turn in, we could start to see more narrow range days that we're expecting today, a narrow range day. So far, we've got positive gamma, looking for a mean reversion at some point today. Looking for mean reversion. Okay, so that was New York Stock Exchange. All right, so let's look at that's the okay. So let's look at the S&P 1500. The 1500 composite, composed of the S&P Big Cap 500, Mid Cap 400, Small Cap 600. What's it doing? It's still on a bullish signal. Still on a bullish signal. Histogram is above the 2 trigger line. The trigger line's at 2. Looking for histogram to stay above that. We're near the upper bands, near a double top on the S&P 1500 as well. We're producing a, that's yesterday. We're producing a blue elder stick. So this is telling you neutral. It's telling you not to do anything, just to take it easy at the moment. Okay, what else can I tell you? Let's see. Let's once again, let's look at the. Okay, so you can see growth is starting to underperform right now. It's starting to, that line is turning down. That's telling you value is slightly outperforming growth, or growth is slightly underperforming value. Both are still above the 21-day, but extended, so we could see a pullback towards the 21-day, discounting the idea that we're in positive gamma. What else do we want to look at? Let's look at bonds. Okay, TLT, the 10-year yield. We want the 10-year yield to moderate down here, stay down here. We know that the Fed is going to cut rates. It's just a matter of when and how much. Some are expecting 0.25, 25 basis points. Most are thinking 50 basis points. So let's look at the CME FedWatch tool. Let's look at the CME FedWatch tool. Okay, the next FOMC meeting is 27 days from now. Okay. FedWatch, 26% are looking for 25 basis points. Okay, so that's one thing that the markets are looking for, a rate cut. Yields have already discounted that, looking for a bounce or another fade in the 10-year yield. Let's look at the dollar, US dollar. Okay, we want this to hang out down here. The US dollar is near 100. That's the weakest we've seen in a while. Let's look at the weekly time frame. Nothing to do right now. I'm just sitting. I'm going through analysis of where money is flowing, looking for a bounce in the S&P. Don't see yellow histogram bars yet. Remember yesterday, we were looking for yellow histogram bars, and we made a lower low. Around 11:30 yesterday, we made a lower low in the S&P, so that's still possible. We need to see yellow histogram bars showing up on the 5-minute 0-day setup. Down volume is still leading lower, down volume. Okay, let's look at Home Depot. Home Depot, just out of the corner of my eye, I saw Home Depot. Buyers at the low of the day, Home Depot. Okay, buyers at the low of the day on Home Depot.
CPI is not their preferred measure. We know it's PCE. With it having a 2 handle now, that really helps the case for the Fed to move forward on the path that's expected for September. But it's really striking that balance. Can the Fed achieve that soft landing that has been
Home Depot, persistent bid in the off the lows here. Home Depot. Okay, Hims and Hers. Okay, that one pulled back on earnings, right? Hims and Hers. Okay, starting to turn the corner. Look at the Bollinger Bands. Bollinger Bands starting to come together on Hims and Hers. So acceleration, expect price action to stay somewhere between this level and the 50-day, 17 to 20.
Kerr. Thank you for joining MTL. I'll see you this. This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week. Election trades are fraught with risk. No agenda, no hysteria, just good old fashioned.
Okay, so with Bollinger Bands coming together, that's telling you to expect price to stay between 17 and 20. The 50 days wrap there at 20. So that looks pretty good. Okay, S&P, we see that liquidity level. Wicks down there, all these wicks down here are starting to see some buyers. All right, looking for a reversal in the S&P. Just watching the 0-day setup.
How did you find your way into trading?
Trading the trust a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. So if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So, how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not its formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward.
All right, looking for a bounce in Bitcoin.
Have an emotional reaction.
I'm not very good at sales. Turns out. I'm very
All right, what's Roblox doing? Roblox was higher yesterday.
Over 10 years now. And it's
Okay, dip buyers coming in. Roblox Doji. Renzo, check your DMs. Check your DM.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying,
A way off with their head.
AI feels controversial and it's going crazy right now.
It is going crazy.
so what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this.
All right, starting to see a little bit of no, not really. Need to see yellow histogram bars on TTM. Roblox, watching Roblox.
Market Overtime on the Schwab Network. Thanks for tuning in.
Roblox starting to see some dip buyers coming in. Okay, Home Depot. What are you doing, Home Depot? Zscaler. What's Zscaler doing? Zscaler. I want to see Zscaler above. Okay, so Zscaler looking better. Zscaler watch list.
Good morning. We're 9 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalidi, live on the floor of the New York Stock Exchange. Glad you're with us. We have a big show for you today. Our 360 spotlight will take a look.
Zscaler starting to push off the 200-day. Bollinger Bands opening up. B bands expanding. Top, bottom. Equal fast move.
But higher for the week. The S&P and Nasdaq both up more than 1% this week. The S&P right now is down 4 points, 56.16.
Okay, Zscaler, you're starting to see these Bollinger Bands open up top and bottom. RSI is saying strength of trend is improving. All right, so this is another one with 14 days on the reversal. Double bottom. What a beautiful chart. This is so... It's telegraphing some good price action. Look at the weekly. Zscaler.
Biggest story of all. In the meantime, story stocks
Kevin Green's with us, senior markets correspondent here on Schwab Network, taking a look at Snowflake down down 13% after selling off the earnings, getting hit again for Snowflake. Some of your thoughts?
Yeah, it does seem like investors are a little bit disappointed when it comes to the earnings announcement here, Nicole. Now, they actually did beat both from the top and bottom line. They had revenue coming in at $868 million, beating the street's estimates of $852 million, and the adjusted earnings per share came in at 18 cents. Street was looking for 16 cents. But it has been the margin of percentage. We are seeing margins actually continuing to decelerate.
Zscaler looking good. All right, so Zscaler should continue.
Products over the last couple of quarters, but they have not seen a material impact when it comes to trying to improve cash flow as well as improving their margins. You are also seeing some analysts really getting a little bit frustrated when it comes to the rollout of the new products.
Okay, S&P, dip buyers, positive gamma.
And you could kind of look at the valuations compared to their competitors and make that the question, is this company still a little bit overvalued? Now, they did actually announce a $2.5 billion buyback program that's going to last until March of 2025.
S&P dip buyers. I don't know why that happened.
Questioning the fact that is it at really the best use for that capital where they could actually try to right size their business, try to make it a little bit more efficient, and try to shore up margins at this point. So we are seeing it sell off. Let's see what the bottom is going to be for Snowflake, but another disappointing quarter when it comes to the earnings and the guidance moving forward.
Yeah, understood. And with Berkshire Hathaway selling out, I mean, there was a lot of excitement around this name, and it's just only disappointed shareholders again and again.
S&P, we got dip buyers. Okay, so looking good. Shorts will cover. AMD. All right, let's take a look at AMD for Renzo. AMD, I like this idea too, AMD. Okay, so we got a huge level of, you see that, Renzo? You have a huge level of liquidity here. Okay, so I'd like to see a follow through.
Yeah, well, good morning, Nicole. Thanks for having me. Good to be here. Yeah, it's been a little unsettled lately. I think a lot of times it feels like there's always something waiting around the corner for us to get us, and there's always a reason. And if you think about the carry trade that occurred in Japan a couple weeks back with them.
Okay, so you can see this right here. We want to see this. Want to see this go back up into the positive direction. We want to see this liquidity right here, Renzo. We want to see that area hold. That wick right there is indicating that they came down and tested it. Now we just need to see volume. Now we need to see volume push higher. Okay, it looks pretty good. So watching this area right here at a discount. Watch your MACD. Looks good.
Resurrected itself almost immediately. So it feels normal. I wouldn't be surprised to see a little bit more selling at some point, but we went down and sniffed that 200-day moving average and bounced right back up. And I think the market is moving on from that reason. It's not like we had an economic problem here or something happened with housing or something happened with jobs. All of that has been at least steady recently, although going down a little bit. So I feel like it's okay, and I'm not surprised the market bounced up from that.
Yeah, look, we got claims in today. From last week, they rose slightly up 4,000 to 232,000. But I think everybody sort of had to digest yesterday's Bureau of Labor Statistics rebound of what happened from 2023 spring to 2024 spring. I mean, it's nearly 1 million jobs.
Okay, looking for a follow through on the bounce. Okay, AMD. Thank you, John. So AMD looking for this MACD to turn. Okay, you can see that what I'm looking at here. Looking for volume to pick up, and I'm looking for this area of liquidity down below this green band to hold price. Looking for it to move back up in the opposite direction. And you can see on the daily chart on the right, there's quite a bit of liquidity underneath. So on this pullback, we should see, hopefully see some bouncing. If it does, if we do see the S&P turn back up, that'll help out. Apple's starting to turn on a 50% retracement.
I don't know if they'll come out and say we're going to cut rates next month. They'll probably wait till next month to actually say it, but I think they're going to indicate that. And I'll be interested to see if they're going to indicate another cut by the end of the year, another quarter point. You know, it's interesting you mentioned the jobs and that revision from 9 months ago or 7 months ago, I guess it is. That's almost old data. And when I think about the beginning of this year, and there was folks talking about a recession that was going to occur in the summer, which never manifested, and we were going to have 7 rate cuts this year, and to go back and then revise that jobs data 9 months ago, I wonder how valid that is. It's kind of like housing data, which is often a lagging indicator, whereas the stock market is a leading indicator. And by the stock market not dropping on that news yesterday, I was interested to see that it kind of, I don't want to say
Datadog.
competitive, but I was
All right,
interested
Tesla's starting to see buyers coming in. Tesla.
tomorrow to see how much of a rate cut is priced.
Tesla.
Will we get a sell-off tomorrow because he comes out and says, yeah, we're probably going to cut rates, or is the
Okay.
market
All right. So we're watching AMD. No change yet. AMD.
as the perception that that's stimulative?
Okay. S&P 500. Looking for this area of liquidity to hold.
We are seeing an uptick in activity.
Okay.
And maybe you were going to say that later in the show here, but I mean, I saw a stat this morning that for the first time in 5 months, we saw existing home sales go up. I think people are starting to see activity there. It's not as hand-packed as it once was.
Okay. S&P cash. We still have a lot of resistance overhead, but we are bouncing. We'll see how far they take this.
Yeah, certainly. With all that's going on right now, you know, the magic word of the time now is the election, and people are sort of waiting to see what they might do with that. So how do you make money now? I don't think tech, even though it's kind of having a bad day today, I don't think tech goes away. If you think about, you know, is Apple going to sell just as many iPhones next year as they did this year? Probably. So I do like tech, and in particular, the AI. I think AI is, we don't know who the winners and losers are going to be in AI, but I think it's going to be a big part of our lives. There's quantum computing in there, and there's a whole bunch of companies that are not public yet that are trying to figure out how to monetize those technologies. So I think tech's with us forever. I like financials. Financials, you know, if we have an ease in rates, you know, maybe we'll see some more activity there with mortgages. If a company has been waiting to expand a facility for lower interest rates, you know, that might stimulate some movement there. I also like utilities, which is interesting for me to say. I think I like the dividend there. Consumer staples would be a similar thing. It's almost, we're not worried about going into recession, but if the economy is slowing a little bit, perhaps it makes more sense for people to focus on the Home Depots of the world and Targets of the world, which are consumer staples, as compared to Tiffany's and Lexus, which are more luxury items, which they may pull back on and not buy as much. So we're definitely loading up on companies that are consumer staples. If they have a dividend is a really good inflation hedge, and so that's where we're focusing. Yep.
Yeah, great to see you, Jay Hazen Becker, Harmony Private Wealth at Stewart Partners. Thank you. Plenty more to come here on Trading 360. Up next, the big three. Three trades. We'll go through the tactics. Scott Bauer is here with us and go through the trades from Marathon Petroleum, Texas Instruments, and Celsius.
Okay, so the S&P not bouncing. Just maybe we're taking out some stops. We'll see if we get a bounce here. Looking for a bounce. All right, look like we're taking some stops there. Okay, 0-day, we still don't have good signals at the moment. So the bears have it for now until we see if this liquidity level can hold or the one below that. So we filled the gap, filled the morning gap. We're down, currently down. Ooh, what are we down? We're flat basically, off 3 handles at the moment.
He's Alex Coffee. I'm Jenny Horn. Join us for Next Day Investing.
1 p.m. Eastern, only on the Schwab Network.
Target pulling back a little bit, looking for a higher low. Let's see what Home Depot looks like. Home Depot moderating right around 368 or so. We've been up for 14 days straight, so you should anticipate that there's a distinct possibility we could move a bit lower first. We're 16 handles above that 5,600 major gamma level.
Especially on the consumer side. And I know we got some decent reports from Walmart and from Target, but when I look at the amount of debt that the consumer has built up, record amount of credit card debt, record amount of defaults, to me that's a concern because we know that the consumer is 70+% of what drives this economy. So I like where the market is, but I'm definitely cautious.
Yeah, understood. You were watching Marathon Petroleum as oil has pulled back, right? We thought.
All right, just sitting and watching the S&P. Whatever the S&P decides to do right now will dictate. Okay, we're starting to see yellow histogram bars on the S&P. That could very well change back to red, but we're watching.
The stock from a technical standpoint sitting right near just above its 50 and its 200-day moving averages, which have both been fantastic support in the past. Implied volatility, option volatility, extremely cheap right now for this particular stock. So I think that given the geopolitical risks, and I think that's a big reason.
Okay, so we're trying to produce some yellow histogram bars.
But the risks have not gone away. I'm looking for some upside here, and I'm buying an October call spread, the 175, 185 call spread. I can do that for $3, $3.25, somewhere in that range. And again, I just think that the technicals here are very, very strong, even while we're seeing crude down back towards the bottom of its range.
Yeah, understood. Ben, good morning. We wanted to know what you thought.
Just sitting and waiting.
Good morning, Nicole. Hey, Scott. Yeah, I think longer term it's still in a bit of a trend up environment. Short term and intermediate, it looks to me like the bulls have lost a little bit of control, but let's establish a couple key areas to keep an eye on to where we can determine.
Okay, you can see the 0-day setup is trying to produce some yellow histogram bars and move back towards the 0 line, some mean reversion. Okay, this could very well change back to red. All right, so like yesterday, you can see that dip all the way on the left. That first dip, red histogram bars turned to yellow, and we had a nice little rally back up to the top Bollinger Bands. Okay, we just got another red bar here. All right, so another red bar. So it looks like we're going to move lower first. Okay, so watching, assessing, and it's back to yellow again. So we'll see if we can turn this corner. There's a lot of liquidity down below. You can see 77 million shares, and right below that, 95 million shares at 56.10. So there's liquidity down here. Looks like they're taking out some stops for now. We have mixed results on up-down volume. The New York Stock Exchange Composite, the NASDAQ Composite are both red, 1-to-1 red. The SPY and the Qs are 1-to-1 green, while the Dow Industrials are 1.8 down, and the IWM is 2.5 down. Let's take a look at the IWM. Okay, yesterday IWM got back above VWAP before the S&P and the Qs, so maybe this will be a signal. If we're making higher lows now, look for small caps to push higher. Shorts continue to win at the moment. Tick cumulative is still rising, so that's a good sign.
On the way higher. So yeah, again, on the short term, more intermediate, not necessarily what the bulls are looking for, but this chart really supports that positioning yourself at the long side.
Yeah, that's a nice long-term chart to show that, because the high was 221 in April or something, and it's been, you know.
Okay, we're testing the lows again. Looks like we're going to move lower first. Lower Bollinger Bands. Okay, so this yellow histogram bar, this last yellow histogram bar is turning red right now. So we're testing the lower bands. Looks like we still got a few more points down. We could go another 10 points down or so. S&P 500, 5,600. Okay, we're coming down a little bit more. All right, watching Chewy. Chewy, CHWY, Chewy. Okay, yeah, I like it.
So I am looking at that potential rejection there, and I'm just buying a put spread to the downside here. This one I'm not going as far out as I did FPC. I'm just going to September, so about a month.
Okay, Chewy turning the corner. S&P is still drifting lower. A little drop there. Apple, all right, Apple's selling a little bit more now. Apple.
Would be a bullish sign that on the next move up, it could break through this 209, 210 level that we're sitting at.
Yeah, look, I mean, I saw the reports from Citi and JP Morgan. They were both bullish. Citi had 235 up from 200, and JP Morgan put 230 by the end of 2025. So they did see this upside potential, 30% upside potential. Let's see what Ben has to say about the technicals, please, Ben.
Everything's pointing higher here for me, Nicole. I do see the key area that Scott's talked about where we could run into and could possibly fail at this level. But let's just get into the charts. I'll show you exactly what I'm focused on. 5-minute candle chart first and foremost, just like our last example. We'll work from a more intraday time frame into a bigger picture. And here again, a prime example, basically a mirror image of what we just looked at with MPC, right? We were talking top left to bottom right. We had two areas of value that had formed lower in this instance. It's bottom left, top right. So the mirror image, 5-minute candle show the value in this instance is moving higher. Actually, three I identified here. 199, 202, and then again more recently around this 208 level. So no rejection of these upper levels as of yet. This rally we've seen back and through this 200 level, adding a little bit of time on from a 5-minute candle through a
30-minute candle chart. So we're now looking about 4 or 5 days worth of price activity. And you can
Okay,
see
so we got about 75% of the NASDAQ 100 is red at the moment. 75% is red. 25% is green. All right, so S&P pulling back more.
really no rejection. Adding a little time on, you're going to see
All right, we're right at 5,600 now. We're right on top of 5,600.
to a daily candle chart. I was just kind of just keeping it real simple here. 2 areas my eye was drawn to off the lows that we saw, if you remember back in October of last year, 139.
Okay, this could turn out to be a confirmed reversal signal. It all depends on 5,600. This could turn out to be a bearish engulfing candle at the highs, just shy of a double top. For all intents and purposes, this is a double top. Okay, AFRM squeezy. AFRM.
Hold above these lows or even take that low out. But as long as we hold above 167, it looks like the bulls remain in charge here. And if we do fail, could establish some more randomness again around this balance area, but that's still within this very bullish pattern that continues to play out.
Yeah, yeah. All right. Final thought on that, and then I want to get to Celsius, Scott.
Agreed. And you know,
Affirm, watching Affirm
and if it does reject,
breaking higher. Affirm.
that's when I look for what would be the triple top in the breakout.
Yeah. All right. Next
Okay, Affirm is breaking a downtrend.
you have to rub your eyes because this stock took off. They made that deal with Pepsi. They had great distribution. They had store shelf space. Now, you see articles about stress on the shelves, stress on the consumer. And this went from $99 down to $36. And I see underweight from Bank of America, $32. Today it's at $40. Where do you think it's headed, Scott?
Yeah, as you just said, Nicole, this stock has had a natural 2.5 to 1 split, which is not a good thing over the last 3 months. 100 basically down to 40 or so. That is just not good. However, it has been consolidating recently, and it really is at a critical point technically in the history of this stock, especially if you go back on the charts to a year ago, May of 2023 here. This 36 to 40 area has been a really critical area. So the fact to me that it has been consolidating around here gives me a slightly bullish outlook. And
Okay, S&P continues to move lower. All right, more and more starting to look like we could see a bearish engulfing candle today. Still giving the benefit of the doubt to the bulls if we can hold on to 5,600. Below 5,600, we become more risk off. Okay, we've got traders taking a break, really, going into Jackson Hole. Not a lot of people taking risk on. Junk bonds, again, are at highs. Junk bonds pulling back a little bit today, but not selling off. So this is a good signal so far. 5,600. Anticipating that we could see a bounce. No bounce yet. 5,600. Okay, looking for a bounce.
From there, it could go either way at this point. I'll show you what I'm talking about when we get into that bigger picture. First and foremost, we're going to start off again with 5-minute candle chart. This one, very little rhyme or reason with it, right? Scott mentioned how we've been kind of consolidating, and so that's what you'd expect to see versus our last 2 examples where you get that really well-defined staircase pattern of downside with MPC, and then again, talking about the big move up that we just looked at a minute ago. Taking a look here, though, at shares of Celsius, you can see a chop trade with on the 5-minute candle chart, not a lot of conviction. When we take a step back, you can see an hourly candle chart, and this is where you get a bit of a trend environment to the downside. So 60-minute candles help tell the story. Areas of consolidation that formed at lower and lower levels, and then again, balance, which is basically established itself around the $40 level here. So a trend lower, to say the least, on the hourly candle chart. Now, let's pull up the daily candle, because here's what I talked about, how we've come off quite a bit. Let me get this into a view here a little bit.
Watching 5,600.
That double top up around 99, we'll call it 100 just to keep it simple. And we've invalidated the trend up. So again, it's kind of
TTM continues to show red bars for now. TTM.
Off those May levels, the spring levels from last year that Scott was talking about. But I want want to show you because I always talk about
Down volume is leading. The Qs are now 4-1 down.
Value and all that, helping us determine trend. But Nicole, what I also like is it also helps us determine not only when trend's present, but when it no longer is. Because as we were balancing around 80, March, April, May, June, July, prior to the breakdown.
Okay, Affirm breaking a downtrend.
To solidify that working assumption that we're trending higher. Instead, again, balancing around 80, what happens? We take out a key area that was established on the way up. So that invalidated this longer term trend to the upside. Again, at this point, it's kind of all bets are off. I don't really know where we're going from here. I can tell you that we're not trending higher anymore on this longer term anymore. We could bounce here. We could sell off further. I think it's kind of a bit random in some ways, but again, default to Scott on this one. Just want to point out how these theories, these principles, these concepts not only help you determine trend, but also when it's no longer present.
All right, Ben, thank you for all these great charts and final thoughts, Scott.
On Celsius, yes, I do agree with Ben. It's kind of in no man's
All right, Affirm pushing a bit higher. Affirm.
May 23 level.
Okay, what other stocks are we looking at here? Roblox had a good day yesterday. Roblox. Okay, at the highs, Roblox, Home Depot. Okay, pulling back a little bit. Home Depot, Target. Target trying to hold. Buyers stepping up. Nvidia, what are you doing, Nvidia? Nvidia down the list. Okay, looks like we could see a few days, at least a few days, consolidation. We already have 3 days inside of Monday's candle. Nvidia. Once again, let's check what is working. What stocks are working? Okay, got Host Hotels. Host Hotels. That one looks pretty good for a cheap stock. All right, looks like Host Hotels could break a downtrend. Watch Host Hotels. This might break a downtrend. Volume has been piling up in the last few weeks, so it looks like institutions. When did they report earnings? Host Hotels. Host Hotels. HST. Host Hotel. I don't want that. I want Host Hotels. HST. Okay, so they report October 30th. 3 metrics. This is close to being green. All right, so the last earnings was good. They beat, but they missed the high estimate. Pretty decent numbers for a hotel. Host Hotels, self-managed, self-administered REIT. Owns properties and conducts operations through Host LP. Okay, so that looks pretty good. Host, changing direction, maybe some in the money calls. Let's see what those look like. Host.
Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Nvidia still moving lower.
Live on the floor of the New York Stock Exchange. Glad you are with us. It's time to spotlight the presidential race and how it impacts the market, your money, your portfolio. Mike Townsend is with us, managing
Host Hotels, HST. We're still dealing with this area of liquidity down below.
Democrats have had an exciting week. This is the 4th night of the Democratic National Convention. What are the expectations?
Host Hotels. Okay, what do we got here?
Going to be really interesting tonight. This is a big night for Kamala Harris, no question. I I think we've seen a very successful convention by the Democrats over the last 3 days. And really, over the last month, everything's been going kind of their way. You've seen a lot of energy, a lot of enthusiasm, a lot of unity among them.
Okay, looking for a bounce, S&P.
Took more prisoners of the war in what he calls an exchange fund to swap for captured Ukrainians. Zelensky did not cross into Russia during the visit, which could have been seen as a major problem.
Okay, we still only have about 25 stocks green on the NASDAQ 100. So that's telling you to at least be cautious, looking for a bounce. Want to see more of these stocks go green on the day from the lows. S&P, bearish day. Finally, we got a bearish day.
Sources tell NBC News the Kennedy and Trump campaign are working toward a joint appearance.
Silvano, thanks very much. Coming up after this, Vice President Harris's economic agenda and its impact on stocks when Money Movers continues in just a moment.
PayPal at 72.50. PayPal. Okay, PayPal continues to extend. PayPal extending its lead. Okay. Okay, S&P continues to drift lower. Okay, so we're taking out levels below SPX. Taking out liquidity levels. We're right in the middle of 5,600 now. Okay, we're below 5,600 would get, we'd be more risk off for the next couple of days. Okay, Tesla continues to slide lower. Tesla. S&P back down to 5,600. We made a nice run for 14 days. So while it is, if you're constantly taking calls, while it is a little disappointing, it's not unusual to see a little weakness into this strength. So 3 weeks ago on that Wednesday, we had that big red candle over there in the right screen I'm looking at. Okay, here's the daily. So 3 weeks ago, we had that move lower on the Japanese yen Aussie dollar pair carry trade. We had that move lower. Let's go take a look at that right now. Let's see. Aussie dollar, Japanese yen, JPY, AUD. Okay, so this is hanging out just above parity. So consolidating or moving lower, I guess would be good, right? The Nikkei rallied on the reversal, still pushing higher. This is what, day 12? Day 12 on the Nikkei. S&P looking for yellow histogram bars on TTM before you do anything. So we're trying to get yellow histogram bars. We've got one. Now we've got two. I don't know. We're in an area where we would expect to see some short covering. Not yet. You can afford to wait. All right, we got a change in character now. That chalk showing up at the low right there. All right, do we bounce off of this area? There's a lot of liquidity in this zone that we're looking for. Looking for buyers. Shorts to cover.
Brand ambassador for its brand Hey Dude. Williams, in fact, upgraded Crocs to buy from hold this morning on that partnership, while also raising its earnings estimates for the stock. The price target there up to 163, with shares this morning up almost 2%. Sydney Sweeney is a bit of an it girl, has a huge following, and I bet can make these Hey Dude shoes a lot more
Yeah.
cool than they already are.
In terms of influencer weight,
She's got
carries
it.
a lot. Yeah.
Especially from guys, I think.
That's
There's a
true.
lot of
Actually.
Very beautiful. Meanwhile, the fourth and final day of the DNC is underway. Vice President Harris expected to formally accept the Democratic nomination tonight. Investors are wondering what Harris's economic proposals may mean for the markets. Joining us now is Wolfe Research Head of Politics and Policy, Tobin Marcus, who is in Chicago for the DNC. Tobin, trying to separate the policy from the noise. In other words, what we've heard so far from her on the ban on price gouging and the tax on unrealized gains, like, doesn't feel very realistic or specific. So how should investors take it?
So the thing that I think investors need to keep in mind about the policy consequences of the Harris administration are that she's probably not going to have control of Congress. And that if she does, in the absolute ceiling case for Democrats, they're going to have a razor-thin 50-vote majority in the Senate that they need to tie break. So
No yellow histogram bars now.
ideas,
0 day is very weak.
capital gains is something that Biden first proposed a number of years ago. Has never gone anywhere. It's never come close to going anywhere, even when Democrats were putting together a party line reconciliation bill in 2021 and 22 that ended up being the IRA. And the price gouging ban, leaving aside the ambiguity about what's even meant by that, as something that's not fiscal in nature, couldn't even go into one of these party line reconciliation bills in the unlikely event the Democrats have 50 votes. So the actual policy consequences now here are going to come, largely around what happens with this $4 trillion worth of taxes that are expiring, which will probably need to be dealt with on a bipartisan basis if Harris wins and is presiding over divided government, along with more routine questions around personnel, around regulation.
Yeah.
So, she's spinning out a voter-facing aspirational vision this week, but a lot of that's not going to have a chance to get done.
Yeah, that was sort of my point. So on personnel, what do we know about who's advising her on the economic policy and who might fill those top policy jobs? Treasury Secretary, Council of Economic Advisors. Do you have any intel on that?
So I don't think that there's any intel to have. I don't think those decisions have been made. Certainly the message that Democrats have been trying to send this week is, we're playing from a little bit behind. We can't take anything for granted. We're treating ourselves as underdogs. And so I think that those kind of transition type decisions about who's getting what job feel premature, feel like measuring the drapes. And so we haven't really gotten there yet in terms of how Democrats are planning. But what we've seen so far in terms of the way this campaign is being run is that they're kind of running it with the people you'd expect, the kind of Democratic establishment in terms of, both kind of time-tested political operatives coming into the campaign, seasoned Democratic policy hands who are doing some of the policy development both inside and outside of the campaign. And I think in the Harris administration, you'd see a similar thing, the kind of foreign policy hands who've been lots of experience in Democratic.
All right, we're losing it a little bit more.
Similarly on economic policy. So I don't think you're going to see a really big ideological lean. I don't think she's interested in being pulled into sort of factional fight between,
The 1145 low that we saw on Wednesday is right just below price right now.
within the party in service of trying to win and then figure out what happens in 2025 down the road.
Although some have tried to argue that relative to the president, she is a more pragmatic Democrat, a true California Democrat.
Home Depot trying to bounce.
Tony West informing her business sense. Would you argue that's true?
Home Depot trying to bounce. Watch the S&P. We are weak.
I think that there are different lenses through which
Home Depot trying to bounce. AMD still moving lower. AMD no bounce yet. AMD. Big bearish out engulfing candle on AMD. Okay, AMD. What about some call credit spreads? AMD. AMD call credit spreads. AMD. Let's see. Let me go take a look at Money Magic's levels on AMD. Money Magic. I'm thinking about selling some call credit spreads on AMD. Okay. Ooh, let's see. AMD, we got 160 and 165. So selling outside of 165 makes sense. Let me see what those go for. AMD. They're at the low of the day, so we'd want to see a bounce first. AMD.
Never quite easy to predict what exactly it's going to mean for various industry groups, but you have laid out very different policies for healthcare companies, financials, defense, energy, from two very different visions of the economy from different parties. Is it too soon to start making these bets? And where do you think the biggest gap lies?
Yeah, so I think certainly there are some places where there are quite predictable differences between the parties that are kind of invariant to the detailed staffing decisions that Harris makes. And those are primarily in regulated industries where there are kind of big regulatory proposals on the table where there's a stark difference in view between the two parties. So financials, I think, are probably the clearest example. The Basel III endgame rules have obviously been an enormous focus, very material regulatory proposal for large cap financials. Where the Biden regulators have proposed this very aggressive plan. It's in the process of being dialed back. But I think if Trump wins, and that largely gets put on ice and they kind of start from scratch, if Harris wins and they try and get some moderated version of that over the finish line, that has important impacts. In healthcare, I think the decisions around Medicare Advantage rate setting, around whether or not to allow...
Okay, Apple's still moving lower. That stop should have been hit. Your stops probably were hit on Apple. That didn't follow through. We got the bounce and then pulled back.
For managed care. And then, so that's most of what we're looking at in terms of the things that you can reliably think through in terms of sectoral and company-specific impacts from an election win. And then, from a fiscal perspective, again, the legislative thing that has to happen in Congress, no matter who wins, is dealing with this huge tax expiration. In divided government under Harris, we think there's been a very underappreciated set of tax risks.
Okay, we're dropping pretty fast here on the S&P.
Tax deduction for past
Stocks pulling back.
Important and under the radar sectoral implications from what's generally been discussed as sort of a kind of individual tax question.
Yeah, that's interesting. Don't usually hear REITs come up as a political play. Tobin, we'll leave it there. Thank you very much for sharing what you're hearing and what you're telling investors after the DNC from Wolf Research.
When we come back today, OpenAI pushing back against some new safety legislation. We'll get some details when Money Movers comes right back.
All right. Well, we are pulling back. We are below 5,600 for now, 55.85. Okay, so I would definitely be sitting on my hands. If you didn't get short at the highs like Mondo, then I would definitely be sitting on my hands waiting for a bounce. Pretty significant selling. TTM is red. TTM is red. So what I like to do is wait. I mean, especially on a day like today, what I like to do is wait for B and C pivots between, say, 12 and 2. If we get any kind of bounce, I'd be looking for maybe retracement back up into today's candle, or it could be starting a series of moves lower. That's possible too. So that's what it looks like for now. Risk off. So either sit on your hands and do nothing if you didn't get short at the open. Wait for something to happen. Anticipate that we could see a few days downside. We have a bearish engulfing candle now in the S&P 500, as you can see. So there's no reason to go long, except for maybe a few stocks that are showing relative strength. Home Depot was one of them at one point earlier. I didn't look at it late in the last few minutes. Home Depot. Let's look at the S&P though. S&P, all right, bearish engulfing candle. Still very bullish trend. We're just shy of a double top. All-time highs are right up there, 5,700 plus or minus. We know that 5,750 is the call wall. So while we had a 14-day move higher, on day 14, we're starting to show signs that we could pull back. Still very early, hard to say if they're going to keep pushing this lower, keep selling. But any bounce now, intraday, I would use as an opportunity to take risk off, not to put more risk on, because we could see more a retracement back to the 50 days possible now that we're below 5,600. Okay, 200 day. Okay, we retraced to the 200 day on that Japanese yen, Aussie dollar carry trade. All right, so this is basically sideways for now, but still above zero, above 50. MACD starting to, okay, so you can see MACD is starting to change direction. Perhaps the bulls have lost control now. And stochastics is also embedded. Okay, so let's take a look at what happened last time. Stochastics was embedded. Okay, we did manage to move higher. We've created this cup and handle pattern. We dipped down to 50. That's possible. Okay, you can see that last bearish engulfing candle over there on the left, right in the handle. We came back down to the 50-day. Is it possible we're going to test the 50-day? We should be planning on it just in case. Starting to see some buyers coming in. Shorts are starting to cover. Okay, so what I've been talking about and what I generally point out is that this time of day, if you were thinking of an entry this morning, if you were thinking going long this morning, because we've already pulled back, the best time to do it now is waiting between, say, 12 and 2 o'clock. If we get any kind of bounce and you're thinking about day trading to the long side, this is the time of day where you start to look for BNC pivots between now and 1 o'clock, 2 o'clock. But this is a definite warning sign at present. You got a bearish engulfing candle. This could get a lot more ugly. We're below 5,600. So what's happening is dealers are starting to sell futures. That's exacerbating the move lower. What I wouldn't do is buy puts at the low of the day. Now, you could conceivably make money still at this point, but I wouldn't be buying puts down here. The time to buy puts is when we lost VWAP overhead. We never bounced. We lost the area liquidity. We're dropped below it now. We have a change of character. Markets are looking bearish. So sit on your hands. If you're thinking long, sit on your hands. If you're thinking short, don't buy puts at the low of the day. Wait for a little bounce back towards VWAP. VWAP is way up there at 56.20.
I mean, isn't one of the dangers of going at this more aggressively on a state level that companies will just leave the state if it gets enacted, or is this some sort of blueprint for a bigger federal legislation? So that's what OpenAI is saying, is that this could cause companies to leave California and just develop elsewhere. We've seen that in other industries.
Okay, we continue to move lower.
That doesn't make any sense because even if you operate within California, you would be subject to
Next levels, 55.50. There's a very large area of liquidity down there at 55.50. Okay, so if you're thinking about puts, at least look for a bear flag. Look for a little drift higher as shorts cover. More than likely will roll over again. So the better entry on a puts would be on a bear flag at this point. All right. I would wait doing anything on the long side at this point. Stocks are fading. Let's look at a few names. Let's look at Chewy. Fading. Home Depot. Fading. Apple. Fading. Microsoft. Fading. New York FANG Index. New York FANG Index fading. Big bearish candle today. New York FANG. So we've had 14 days up. 1 day bearish at the moment. So we should have anticipated that. Hopefully you did. We've been looking for some resistance for several levels this week, Monday, Tuesday, Wednesday. Finally, we're getting some resistance. But the trend is up. The trend is up. Let's see, what do we want to look at here?
No one uses their credit card because they have the cash in the bank to spend, right? So we've drawn down that so-called excess savings. Savings has continued to be diminished, and there is certainly a wealth divide in our country between the haves and have-nots. And so we are seeing some.
So breadth thrusts, they're still above zero. So that's good. We are pulling back.
So that's another reason to bring down the federal funds rate to help bring down those borrowing rates and perhaps give the economy less in the way of headwinds. So I would say that's probably the number one thing to be concerned about these days is the strength of the consumer.
Yeah, and Noah, if we take a look at the consumer, do you feel that we're in a tough spot, or are you feeling like we're
10-year yield is moderating at 3.85%. Not a whole lot to do today. We have very bearish price action. What's TLT doing? TLT. Higher highs, higher lows, still pushing higher. Almost got to 100 yesterday. TLT. Okay, let's see what the S&P says. All right, so Host Hotels, Estee Lauder, Lamb Weston, Edwards, Benjamin Franklin, Dow Jones, JP Morgan looks like it wants to break out. Triple top on JP Morgan. Assume a triple top will be resistance for now on JP Morgan. So we'd need to move above 220. AXP, trying to find some buyers there. Travelers Insurance, sideways. Merck, grinding higher. Merck. McDonald's. McDonald's hanging in there. Okay. I'm still looking for a pullback in McDonald's to enter again. Okay, I like the weekly chart on McDonald's. I sold on Friday last week, so it gapped up. It's not too far away now. It's only 7, 8 points, 9 points away from all-time highs on McDonald's, so I wouldn't be chasing it up here. But I would be looking for a pullback to the 9 EMA or 5 EMA for a re-entry. I don't have a position right now. Watching the S&P. S&P is showing potential bear flag. So if you're thinking about puts, I would be waiting for a bear flag. Okay, that fails. All right, so we'll push a little bit higher maybe and then roll over. Pretty bearish looking day. Bearish engulfing. At least that's what they're showing right now.
A lot of this volatility that we're seeing right now is just a function of what we're seeing with interest rates.
Mark, Noah, thank you both so much
Okay, we only have about 20 stocks left green on the NASDAQ 100. Travel-related names, seeing some strength. Pinduoduo, some Chinese, some Chinese names. Pinduoduo. Marriott Hotels is higher. Okay, so let's look at the hotels. Hotels, for some reason, have a bid. Okay, people taking vacation. All right, Marriott looks pretty good, sitting on top the 21-day. Marriott sitting on top the 21-day. Okay, Host Hotels had a nice pop this morning. It's drifting lower at the moment. It's above the 21-day. Let's look at, let's see, Marriott, Hyatt Hotels. All right, that looks pretty strong. Okay.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money. With a history and a geography degree, how did you find your way into trading?
Trading attracts, I think, a lot of the best and the brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out.
Host, let's see, Marriott. Marriott's got some decent buying going on in Marriott. I'm watching time and sales on Marriott on a 5-minute, 15-minute. Okay, daily just went on a buy signal on Marriott. Okay, so look at Marriott again. Marriott. Okay, looks like this could spring off of this level, head towards 232. So the 225, 230, or the 225, 235 looks good for a vertical. Let's see, Marriott. Verticals, let's see, it took 14 days to get here. Okay, Marriott, do they have earnings coming up? Let's see, Marriott. You see what Host Hotels looks like. 3 metrics green. 3 metrics green on Host Hotels. Marriott. Only two. So Host has the better. Okay, watching. We got yellow histogram bars on the S&P down here. Marriott could be timing this with a bounce in the S&P.
Everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions and option strategies. We'll cover Netflix, which hit an all-time high earlier this week on the back of positive advertising news, and Workday, which is down about 15% so far this year into earnings after the close. And Lifefolio breakdown consumer sentiment data, and Cava, the Mediterranean restaurant stock, is at all-time highs into their quarterly report. Now let's take a look at the major indices, which are off of session highs. Pretty big reversal that we've seen here this morning ahead of the show. The S&P 500 down just over
AMD at the low of the day. Watching AMD.
Down nearly 1%. Dow
AMD at the low of the day. See how this goes. AMD.
Down just over 0.6%. To help me break down the market action, let's bring in my co-host. That's Kevin Hinks. Kevin, you got any reason for this turnaround? Maybe a little bit of buyer's exhaustion here at this point.
Well, there's a lot of reasons why
after the market running like this, going into a major announcement tomorrow by Jerome Powell or a major policy discussion. Let's put it that way. Yeah, he's not going to announce anything for Jerome Powell. That frankly, Tom, may disappoint the market. He may talk about quarter point cuts and waiting after that and not giving the market as many cuts as it wants.
S&P starting to bounce.
There could be a lot of reasons that the outtrade between what the Fed is talking about, what the market wants, could start to come into focus tomorrow. So after what, not 8 days before yesterday, it was 8 straight days higher or in a row the last.
It's 12 o'clock. 12 o'clock. Let's go listen to
And then, like I said, tomorrow's a big day.
CNBC.
Talking in that time, I went back and watched a couple of the clips from that Monday with the VIX spiking.
All right, got a few more stocks going green on the NASDAQ 100, starting to reverse. Some buyers coming in.
To all that negativity. I think it was mostly a Twitter phenomenon, quite frankly. And that's probably why it came and went so quickly. The Mag 7, though, really are the story here. If you look at the drawdown that these names were in at the worst of that volatility, August 5th was the low, let's say. Tesla was in a 51% drawdown. NVIDIA was in a 26% drawdown. Amazon, 19% off its high. Alphabet, 17%. Microsoft, 15%. Meta and Apple had held up better than most, but both of those were down more than 10% at their lows. We've had a really big reversal in those names. Those names are still very important for the overall index, just mathematically speaking, but also emotionally, spiritually.
Okay, Advanced Micro, watching that one for a bounce. AMD.
That's exactly what's taken place. So we have a big question.
Looking for a bounce in AMD.
Next Wednesday when NVIDIA reports, and then we'll talk about that in a second. But outside of that, there is reason to believe that the most of the volatility that we've already experienced is probably as wild as things will get. Doesn't mean we're off to the races and we're straight up, but really to expect
Shorts covering, S&P shorts covering more.
kind of a VIX situation, I think would be a low probability bet.
All right, I'm sorry. You guys are always so well read, and I'm sure you know a lot of analyst notes out today. Notes saying that the rally looks like it's running out of steam, even as we approach record highs. Of course, the pullback today.
Shorts covering S&P.
Confirmation of people who want to see the markets go into correction or whatever else. Steph, I'm going to come over to you. If you don't mind, I'm going to bounce off something from Wells Fargo from you. They say the market may be getting ahead of itself. They say that they think the market again getting ahead of itself, especially as we near that 56, 67 on the S&P. They believe as we get closer to that number, you should trim in some areas that have started to actually lead the rally in this quarter.
Shorts covering.
Consumer staples, real estate, and utilities. Agree or disagree? Is this the time to trim or to ride this broadening even higher?
Well, I don't like the setup short term into tomorrow. We are up, as you mentioned, 9.8% from the lows. And expectations for the remainder of the year is quite high in terms of rate cuts. You have a 100% chance that we get a cut in September and in December, and now a 71% chance in
Marriott pushing higher. Marriott.
I think we're going to get cuts, but if we don't, and we get a couple of data points that suggest we don't have to, you might see some volatility. September is historically a very volatile month. And no, we're not going to, I don't think we're going to see what we saw 2 weeks ago in terms of the VIX and the volatility. But I do think we could kind of pause here, right? And I think, though, you want to be buying into that. If you see another, let's say 3 to 5% pullback, I don't know what the heck it would be, but if you do, that's why you want to buy, because cutting rates is positive for equities. Earnings have actually been quite good at about 10%. And you've had a couple of companies, very high-profile companies in the consumer space that have done pretty
Down volume still leading. Looking for some more short covering.
Target at 2% comps, 3% traffic. TJ Maxx, TJX is actually up 5% in the More Max division, 2% in home goods. I mean, Toll Brothers has net signings up 11%. DR Horton has gross margins expanding. All of these things are good. So I think if you were to get a pullback, you want to be buying. I do think, to answer your question directly, I do think we're going to continue to see an expansion into other sectors, a broadening out, because you have the economy growing at about 2%, and it's not just in technology, and that's translated into
Peloton on the move. Peloton.
Jason, coming over to you. Concerned at all that some of the biggest mega cap stocks haven't shown a lot of leadership BMO out with a note today.
That looks pretty good, Peloton.
493 seeing 3.8% growth this quarter. The Max 7 only 1.4% growth. Is that concerning as we go forward, either in your mind just about the rally being able to continue, or just about the strength of the rally overall going into what could be cuts, maybe even a neutral or a hawkish Jay Powell tomorrow? We don't really know. We know what we expect, but we don't know for sure.
No, I actually think it's healthy, Frank. I mean, if I'm thinking about the August lows, August 5th, right? The Nasdaq is up, 14%. The Mag 7 hasn't done as well in the quarter per se. But to Steph's point, when you're talking about retail, the retail numbers that we've seen over the last few weeks, whether it be Walmart, Target, TJX, all these numbers have been positive. We've talked a lot about the consumer and the concern about the consumer. Obviously, the consumer's not falling out of bed. So for me, as I see it broadening out and earnings, to Steph's point as well, above 10%. I mean, this has been the market that we've wanted to see. And if I look at turn to the speech tomorrow and what Powell has been looking at as far as a dual mandate.
Okay, futures continue to cover. Shorts continue to cover. Marriott, AMD. AMD pretty oversold. Man, AMD was off over more than 3%. Looking for the bounce.
Continue to broaden out and still move higher. Again, we did see the pullback today, so if you think it can, you got some data points today that maybe support that argument. But longer term,
I think it can. I think this move back towards 5,600 in the S&P has been
Goldman Sachs. Goldman. Yeah, pulling back to the 9 EMA. Goldman Sachs.
Seeing systematic buying pressure as well as the buybacks come back into the market. So I think that's a healthy development. The other one is the snapback has occurred because the recession fears have been rolled back. And the fact that we got through that hump, the fact that we got retail sales, initial jobless claims, outside of the data reports suggest that we're not.
Okay, S&P, AMD seeing some decent volume coming in. AMD off the low. Renzo, you were looking at AMD. AMD looking better.
So I think you put all those things together and they are positive for stocks. Now, near term, we do know that when investors price in the expectations to perfection, when the Fed actually delivers the first rate cut, we may have a period of consolidation. But as Steph mentioned, I think this is something that you step into.
Okay, so you have to be wary of any bounce at this point. A bear flag needs to be more than just a bear flag. It needs to take off to the upside. More shorts covering. For now, it just looks like shorts covering.
We're now coming toward the end of the quarter where 79% of companies have beat earnings expectations, and those expectations were not low. Now, you have a 60% beat rate on revenue, which of course is not as good, but it doesn't mean that those earnings beats were low quality. We just have this extraordinary circumstance where a little bit of loosening in the labor market, a little bit of help on.
All right, AMD continues to push a bit higher. AMD.
Continue to beat expectations, and I think keep this market where it is. Now, how do we get earnings to accelerate? Well, now we're in a situation where you still have a 30-year mortgage at 7%. That's probably on its way to 5%. If you just look at where implied rate cuts are for overnight rates, mortgage rates will fall. This is what's absent, this economic expansion. We have home prices at record highs, but we have existing home sales that, quite frankly, have been horrendous. And I think it's really pinching the consumer, this inability to do anything on the housing front. That's starting to change. This morning, we got existing home sales month over month that were positive for the first time in 5 months. And that's before
Marriott.
we get any help
A little bit higher. Marriott.
So a housing cycle, even if it's a muted cycle, a housing cycle is extremely important for the stock market, for the overall economy. It is one of the most important things that could happen.
What's Dell doing? I haven't looked at Dell in a couple of days. Dell has earnings next week. It's just consolidating for the past 6 trading days. Sideways around 110. Dell, NVIDIA looking for more upside. All right, AMD. Okay, AMD.
Both pieces. You gotta have revenues and you gotta have margins. And everyone is talking about the depth of margins and rolling over. How do you get a rolling over of margins when you have inflation coming down, commodity costs coming down, rates coming down? All that is very
Cheaper labor.
Cheaper labor, right?
Yeah.
So that's one point. Second point is we've already begun to see the green shoots in housing. If you look at the housing stocks, I own D.R. Horton, but any of them, I mean, you look at Toll Brothers yesterday, they had net signings up 11% in their quarter, and they said the first 3 weeks of August they're seeing very strong traffic trends. D.R. Horton had margins expand better than expected, 90 basis points year over year, which means they're not discounting as much. So these are very important trends. And yes, housing is going to, I don't think it's going to be a soft cycle. I think it's going to be a very hard cycle because we're 5 million homes short.
Okay, what's Roblox doing? Roblox had a nice day yesterday. Roblox back, trying to get back above VWAP. Roblox Doji at the highs on the daily. Roblox was a big one yesterday, very large one. Susie brought it to our attention that Joe K was talking Roblox. It's at the upper bands. Bands are opening up, top and bottom, so still looking for a follow through.
Good afternoon there. After yesterday's minutes, a big downward revision in jobs and commentary from Fed officials here, the market is positioned ahead of that Jackson Hole speech by the Fed chair confidently for September rate cut and a series of cuts to come. But there are substantial questions, maybe some get answered tomorrow by the Fed chair. Among them, 25 or 50 in September. Is the market too dovish in its outlook for 100 basis points of rate cuts? And how much underlying economic weakness or strength is there? Which gets to the issue of how far from neutral is the Fed and does it need to be? Philly Fed President Patrick Harker telling us this morning that he sees methodical cuts.
Okay, Target. What's Target doing? Target looking for the bounce. Target looking for the bounce. TGT Target. Okay, looking for a bounce in Target. It has dipped. So if you're looking for, if you like Target to the long side, you're looking for these dips to get bought. Target at present pulling back. Okay, we need this dip to get bought. AMD. AMD continues to push.
How much of a weighting is that in your decision? Obviously, the Fed has that dual mandate of inflation and also jobs.
I'm not hearing very much. I think it's one factor, Frank. I don't think it's a huge factor. I think the Fed was expecting a rather large downward revision. That's one. Two, it is in the rearview mirror. But three, Frank, when I went back and looked at this huge downward revision compared to the last time it was this big, which was back in 2009, you have none of the confirming data that you had back in 2009. It's not like the government revises the payroll data suggesting that we're at recessionary levels, and none of the other data confirms that. Back in 2009, Frank, you had
what's Chewy doing? Chewy.
650,000. You had the insured
Chewy still sitting here. Peloton. Peloton seeing some action off the low. Peloton. Could be an A pivot, looking for B and C on Peloton.
So there is no confirming data to this, which kind of lends a bit of credence, Frank, to this idea from Goldman that maybe it was overstated in terms of how much reduction there was.
Well, see, I think the question is, what does matter?
All right, what's Apple doing? Apple with a bounce.
What matters? We're going to hear from Jay Powell tomorrow. At least we're going to get to read his speech. We're still going to see a lot of forward guidance, but how much guidance can he give with those two big reports coming up?
Okay, yellow histogram bars continue to build, but I am wary of a bear flag on the S&P. Zero-day setup. Bollinger Bands are pointing down. We've got 7-to-1 down volume on the Q, so the wind in the air is more bearish for sure. So I would be quick to go long unless you're scalping. Looking at a potential rollover here on the S&P for puts. All right, AMD still pushing higher. AMD.
If they're 240 basis points above neutral, say, and let's say they have to stimulate the economy, where do you want to be able to come in and help the economy if it's needed? I think the Fed is far from that point, and that's why the market is banking on fairly aggressive cuts so that they can get into that position to help the economy if it's needed.
Well, Steve, I know where I would like to be. Jackson Hole, beautiful backdrop right there. Steve Leisman, great reporting as
A
always.
little bit of
Good to
smoke
see
from the nearby fire, Frank.
you. Good to see you. Stay warm out there. Let's get to it.
Okay, so the Bulls definitely need to show their hand and start buying. Shorts are covering, but that's it for now. It looks like shorts covering on the futures, S&P, the Qs, IWM. Just looks like shorts covering for now. We got a bearish engulfing candle on many stocks after a 14-day move. Today is day 14. We're not going to go straight up every single day. It'd be nice, but not the case usually.
And now I just think it's prudent to trim because it's up 32%. They did have a good quarter. The iPhone refresh cycle could be good.
Okay, watching Goldman Sachs
Muted in the beginning, and then AI as it gets into more
pushing away from VWAP. Goldman Sachs.
and I think we all expect services to be strong. It will, about 14%. That's certainly positive.
Goldman
I think
Sachs.
they've done a really great job on margins. We talk about margins before. So adding it all up, I don't want to be negative. I'm 5%. My index is almost 7%. I just wanted to take some gains.
All right, so you don't want to be negative, but it sounds like you're a little bit skeptical. So I just want to read a little bit more from this note from Luke, by the way. The rest of the thesis here is that Apple's in a position to create itself as consumers' Gen AI base camp. A lot of complicated mixed metaphors there, but you get the idea. The base camp for Gen AI, similar to what they've done with the iPod, similar to what they've done with social media with the iPhone. So even if the sales are muted, do you still think that opportunity exists in the near term to be that Gen AI base camp?
I mean, I think you can make a case for this company, this stock, to earn $7 to $8 a share by the end of next year, entering into 2026. I think everything has to go right. So I'm not negative on this name. 5% weighting is a very big position in any portfolio. So I like it. I hope that these notes and these analysts are correct, and maybe I'm wrong, but I'm still there in size.
Josh, you want to say something?
Well, I would, where you said in the near term by being the Gen AI base camp, I don't think so.
Yeah.
I don't see beyond college kids faking homework. I don't really see an immediate monetization strategy that anyone's going to like materially move Apple's earnings expectations based on from anything going on in Gen AI. This is about the future. It's not about the near term. I think AI is going to be massively successful in the iOS ecosystem, especially considering the fact.
Okay, Goldman Sachs looks like it could keep going here. Watch Goldman. Goldman Sachs.
As a result of it existing on iPhones, so whatever takes place in Gen AI, if there's going to be any kind of consumer payoff in terms of ROI.
TTM is turning more yellow, so bear flag's not failing yet.
But does that mean that it all of a sudden gets replaced next quarter? That was my only point. So it could, and I think it will get ultimately.
And historically, you're better off buying the second gen than the first gen. Anytime Apple has a step change in innovation, the first gen is proof of concept. It's really the second gen where they learn from the first gen. 100%. So I may upgrade my iPhone because I'm on a 13 Pro Max, and I may not. But when they do the second AI iPhone, that's a slam dunk.
Okay, and the stock is up 32%.
I agree.
So look, if this pulls back.
Okay, we got volume on volume, GS volume. There goes Goldman Sachs.
Jason, you're also making some moves within tech. You're buying Oracle. Shares up 34% year to date. What are you seeing? What's the opportunity that you're seeing at this point?
Yeah. So, I mean, when I look at Oracle, it's a legacy licensing and software database business, right? And I look at how that business has been cannibalized by.
There goes Goldman.
And they signed 30 new.
GS on the move.
Now it's a miss on revenue and a miss on earnings.
Okay, looking good. The banks. We need the banks. We need the banks.
Their AI run rate through 2026. I mean, it's a $25 billion potential business, right? So yes, it's run quite a bit. this year, but we had some cash on the sidelines, and we felt it was appropriate to add this one to the fray.
NVIDIA is coming up next week. Josh, you talked about it just a bit earlier in the show. We're going to show
A little pop there in Goldman.
Talk about NVIDIA as much as we once were talking about it, but heavy weighting in the S&P, heavy weighting in the NASDAQ 100. Talk to our data team. They see implied volatility.
Microsoft, NVIDIA, Palantir. What's Palantir doing? I haven't looked at Palantir in a couple of days. Palantir, PLTR, Palantir. Palantir turning the corner after a dip. That looks pretty interesting. Palantir. Nah, it's just flagging. Goldman Sachs, though. Goldman Sachs with a little volume pop there. Looking for a bounce. Goldman after 3 days down.
They're investing in it. They're investing in data centers. They're investing in some of those data center chips. So I think the CapEx cycle is very much alive and well, is being upgraded for 2024 and also 2025.
S&P. More yellow TTM bars, looking better and better as the time goes by. More shorts covering. Giving up on the short. So shorts had a good move so far. I'm not putting it out of the realm of continuation, but this does look a lot better. Okay, this bearish engulfing candle, if we close back above yesterday's closing high, the top of the body of that candle, if we close up there, that changes everything. But doesn't change the fact that we've got a double top. Okay, so the double top is still, for now, that's still very much resistance, as you would expect. TTM has turned yellow. TTM has definitely turned yellow. But we need to see more indicators going green. We got 270 on tick now.
And so I don't know if it's another drop in my quarter because the expectations are really high, but it would be hard for me to picture this being a bomb. And by the way, of all the Mag 7 names, I think it's the number 1 or number 2 closest to its record highs. The problem is expecting revenue of 28.
Okay, so this is what the 0-day looks like right now. Okay, 0-day, you can see TTM has turned yellow and pushing higher, but we still need up volume, down volume to dissipate, and these sellers reverse their trades. You can see tick is at 35400 over there on the right. Advanced decline line is still dropping, so got a lot of work to do. For now, the bears still have it. It just looks like more shorts are covering.
That's my indicator, Frank. That's your indicator.
Coming up next here on halftime, more of today's biggest movers, declines for Advanced Auto Parts. A lot of story there. Snowflake and Charles Schwab.
I didn't catch what Josh was talking about. He was saying that we got a bounce. Where do we get a bounce?
Are you following the halftime report? Follow the halftime podcast now.
Okay, we need to get above these pivots over here to get a chalk, a bullish chalk. Okay, moving back up as fast as we move down. From about 11 o'clock, we dropped pretty quickly. Now we're reversing that trend. That's why I don't like buying puts at the low of the day. That would have been a trap. You would have been sucking wind on those puts. Now, this could still roll over, but for now, it looks pretty good. These histogram bars have turned yellow, headed towards the cyan. So the cycle could continue back up to those Bollinger Bands. We need to get above 56, or we're above 5,600 now. So back above 5,600, that's a good sign. Okay, S&P is back above 5,600. Peloton looking good. Peloton, okay. What are you trading? You trading calls? Peloton? Let's take a look at Peloton. Peloton. Yeah, Peloton looks good. You trading calls, Mondo? Okay, so Peloton. Okay, yeah. Okay, so you posted that earlier. Okay, Peloton. Let's see, Peloton. Peloton. All right, let's see. Peloton calls. What are you doing there? Let's see. Peloton. PTON. PTON. Yeah, okay. So there's a lot of volume on Peloton at the 350, looks like. Okay. 450s. Okay, 450s. All right.
And welcome back to halftime. Let's hit some committee stocks that are on the move. We're going to start off with Snowflake. Shares sinking despite beating on earnings. Steph, you own this one.
Like the gift that keeps on giving. The beat on earnings, they beat on revenues. Product revenue growth was 30% year over year. RPO is up 48% on better bookings, and the gross margins and operating margins were in line. Guidance was higher too. I just think that they didn't raise numbers high enough, and I think gross margins aren't going to expand as they have to continue to invest.
Is that what it was? Because the guidance actually beat the estimates, and people said it was soft. It was very confusing.
It didn't crush it like it has been in the past, and so all of a sudden now everyone's talking about competition. This is a big enough market for a lot of companies to exist, and they're doing a really good job. This is the second quarter for the new CEO. Give it time. And again, it was up 25% into the print. I know it's still down a heck of a lot. Trust me, I know.
AMD still going?
Maybe the expectations got a little ahead.
AMD still going. Looks good, AMD. Here's AMD continuation on that bounce. AMD. Okay, looks pretty good, AMD. Let's see, what's Marriott doing? Marriott continuation. Let's see, Chewy. We're looking for a bounce in Chewy. Okay, Goldman Sachs looking for a bounce that follows through. There goes Goldman. Okay, looking good on Goldman.
Read-through to AZO, but this is obviously a challenging marketplace.
Any thoughts about Carlisle buying an Advanced Auto Parts Worldpac unit? It's basically,
Goldman Sachs still going.
Is it concerning to you? The idea here is
Nice bounce on Tesla, looking good. So far, Tesla coming off the low. All right, so if you like a trade, if you like a stock, all right, let's look at Tesla for an example. LA mentioning Tesla. Okay, Tesla's sitting right on the 50-day. Is this a lower high and we're looking at a lower low? Well, Bollinger Band said that's possible. That said, if I'm thinking about a long, I'm looking for a turn now off the low. This is the best time of the day to probably look at something like a bounce in Tesla. Tesla.
Situation to really stabilize. So I think it's kind of dead money until we see that.
Wow, look at the S&P 500 climbing up, scratching, clawing and scratching back.
Josh, we're actually flagging this move. What do you see here?
Well, really importantly, Uber is one of these companies that we are witnessing going from like kind of a money-losing, scandal-plagued regulatory nightmare into a darling. And in December, when they were added to the S&P 500, I said that was a critical milestone, and the stock has done very well, obviously, since then. But even more importantly, they have $9.5 billion in long-term debt at a blended effective rate of 5.25%. On Friday, S&P Global upgraded the debt of Uber to investment grade. Moody's is still just one notch below, and I think they'll probably follow suit. And what that represents for Uber shareholders, I think shouldn't be missed in the conversation. This is a company that, as the Fed lowers rates, will have the ability to refi that 5.25 debt somewhat lower, which immediately drops to the bottom line and becomes accretive to earnings. If and when they do that, I think it's just another wave of continued fundamental improvement and more reasons for analysts to grow more positive on the name. So I have been saying, I think this is a $100 stock. Been saying it for a long time. I believe in. I'm a long-term shareholder here, and this latest bit of news, I think, is just more confirmation that this company's fundamental transformation continues to improve the situation.
Well, today down fractionally, but as you mentioned, kind of a darling, up about 25% year to date. All right, time now for the headlines with our Contessa Brewer. Contessa, good afternoon.
Frank, good to see you. It looks like ceasefire negotiations and talks over hostage releases have reached a sticking point over Israel's demands to keep troops in Gaza and Palestinian prisoner releases. Reuters reports several sources among Western diplomats and Hamas say the militant group is concerned about the latest demand to keep troops deployed along two key corridors, which include the border between Gaza and Egypt. Neither side has commented. The Financial Times is reporting Taiwan's top foreign policy official is a secret threat to Washington.
All right, so we continue to bounce. S&P continues to bounce. All right, Tesla looking for the bounce to continue.
Described as an opportunity for a larger group of senior officials from both sides to hold detailed talks. And in Botswana, Canadian mining company Lucara Diamond discovered a 2,492,000-carat diamond in its mine.
Wow.
It didn't reveal the stone's quality. Who cares? The size alone would make
Wow, 2,000 carat diamond.
Of course, there was that more than 3,100 carat diamond that's part of the British crown jewels. Although when you see it next to it, it doesn't look quite that big, does it?
So you're saying you're not worried about the color or the clarity? You just want the stone, Contessa.
No, just big.
Our Contessa Brewer back in Englewood Cliffs. Thank you. All right, coming up next here on Halftime, opportunities outside of big tech. Anastasia says this area of the market is a, quote, massive investment opportunity. Why it could benefit from big time from a CapEx boom. We're going to explain
Wow.
on Halftime right after this break.
All right, 2,000 carat diamond. Wow, that's pretty impressive. All right, so we continue to rise up. Okay, what's AMD doing? AMD, looking for a follow through in AMD. Higher highs, higher lows. Okay, Marriott, Goldman Sachs. Nice push, Goldman Sachs continuation. Goldman Sachs looking good. Okay, let's see.
So there's a couple locations, and there's a new one opening up at the end of the month, closer to you, out in the burbs. But Andy, when you look at this, they're trying to mimic that Chipotle story, right? They expect to have 1,000 restaurants by 2032. Do we have like the happiness numbers that are comparable with maybe
Goldman Sachs continuation. Goldman Sachs is going.
stocks at all-time highs?
Running through some levels of supply.
Controversy got Chipotle a little bit caught up, but Cava customers are very happy. There's no doubt about it, and they seem to be telling their friends about their experience with taking friends to the restaurant, which I think is a really great sign. Last quarter the company put up great revenue numbers,
good earnings numbers. They beat on all metrics. Same store sales were a little bit light. The stock took a little bit of a dip, but then ran the rest of the quarter. I think that's the type of playbook that I would be looking for as an investor or a trader.
You're so crazy, David.
If they continue to put out those
All right. I like it though. I like it though.
the stock pulls back, that could be a really nice opportunity, just as it was 3 months ago.
Yeah, last quarter, 29% increase on revenue over the last 12 months. But they did raise guidance as far as restaurant sales, even though same store restaurant sales came in a little bit light on that quarterly number. What's the earnings score on this one, Andy, with the stock at all-time highs?
Yeah, with the stock at all-time highs and, a massive amount of growth in the stock, I think that we get a replay of what we saw last quarter. I think we could see a pullback on really good numbers, and if we do, that is a medium to long-term opportunity.
All right, great stuff, great data. As always, Andy, appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at Likefolio. Kev, there's only about 114 million shares outstanding, so smallish float, but they're expecting a plus or minus $10 move in the shares.
Yeah, that was one of my
Okay, let me look at Goldman on the daily. Goldman daily.
So it hasn't been
921.50 are all pointing up and to the right.
So you show the movement, but this is a name that has a chance to do some movement. And I'm not an expert on Kava. I don't know. It certainly appears like they're doing good things and their growth is there. But like whenever we talk about growth, don't disappoint in terms of growth. So Tom, what I did was really short term. If you want to play short term, this is one way to do it, Tom. I went with the long iron condor, right? Looking at the 23rd of August. So tomorrow or Friday, tomorrow expiration on this, Tom. I bought the 112, 115 call vertical, $3 wide. The 93.90 put vertical, also $3 wide. I put it in at $1.50. I think it's trading about $1.40 now, but this has a chance, like I said, to go to $3 if it goes to $115 or if it goes to $90. Your risk on this trade is what you spend on it, and remember, it's gonna whatever happens, it's gonna happen quick, Tom, because it's
Looking good. All right, so that looks good.
further out. Probably gonna cost you a little more. You got to adjust your strikes. This is in line with the strikes tomorrow and the expected move, Tom. About $1.40, between $1.40 and $1.45, with the hopes to make, between $2.50 and $3.
All right. Down August 23rd weekly cycle. So as Kevin mentioned, just over 24 hours to expiration. This is a earnings example here for sure. Buying the 112 call, selling the 115 call on the upside, and then on the downside, buying the 93 put, selling the 90 put. A $3 wide, you're paying roughly about $1.50 debit. We've gotten up there, as Kevin mentioned, it's about a nickel lower than that right now. For the debit you pay, $150 per spread is your risk, with the expectation that, hey, if it goes below 90 at expiration tomorrow or above 115, that's a double as far as profitability. You collect $150 on that. But it's a need to move type of strategy on this. And as Kevin mentioned, if you went out another week, it costs you about $1.60. So you have to start thinking about duration versus risk reward. But Kevin, we talk about this when small floats are out there, they're expecting about a 10% move in the shares either way. We've seen some pretty massive moves and 2 and 3 standard deviations moves post earnings from a lot of companies this past quarter, but that doesn't guarantee this one will, right?
Right. And think about it, Tom, the competitor to this spread is like the double calendar, right? But double calendars, look at some of the names today, like Zoom, blew through any double calendar expected move. If you notice that underlyings are making bigger moves than the 1 standard deviation expected moves, this is a way to capture that, right? This will still be okay no matter how far it moves outside that range, Tom. So if you think we're in an environment of bigger moves, switch to the Iron Condor, not the double calendar.
Break even, you want it to go below 191.50 or above 113.50 on the upside. So just need a move type of strategy. All right. Good look at the long Iron Condor there.
All right. So
At workday, the HR and human capital management stock is down about 15%.
Goldman Sachs pushing higher.
Into earnings after the closing bell. The bar is low on this one. Also, stick around.
S&P negotiating a little flag at the moment. It is 12:42 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. All right, cyan bar is starting to build on the 0-day setup. We still need to see up IM flip from red to green. Vald is turning higher now. Vald is turning back up. Tick is above 0. MACD is bullish. TTM is bullish. Okay, looking for S&P to push a bit more. Okay, Goldman Sachs looking for a push higher. Goldman. Goldman looking for it to push through this liquidity or this supply level and push higher. Goldman Sachs. All right, I'm going to take a 5-minute break. I'll be right back.
Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab. Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at workday ahead of earnings, let's bring in Ben Lichtenstein, Senior Futures Correspondent here on the network. Benny, looks like that dip got bought because I saw the S&P 500 down over 0.6% earlier, but now only down slightly.
Yeah, a couple big moves here today already, Tom. We're only halfway through the session. Initially, a little rally up in the S&Ps, the NASDAQ, the Dow, Russell before we sold off. And then to your point, we've come well off those lows already, finding our way back into the middle of the range that we've established for the most part. The S&P is up to 56.43 earlier this morning, to within 26 points of an all-time high. They sold off down to 55.81, and now they're hanging out right around this 56.10 level last I looked. 19,938 is where the NASDAQ topped out. The Dow up to about 41,000 and the Russell up to 2174 before again dipping down lower and then rallying back. But I'm not surprised to see this kind of price activity, Tom. A lot of unease out there ahead of Jackson Hole comments tomorrow from Fed Chair Jerome Powell. There's been a lot of focus on the data and earnings as well. I mean, multiple areas where attention has been directed to. So again, one thing I would point to is just the swift rejection we've seen off those August lows from earlier this month. I mean, we have a severe, the bottom that's been established as a result.
Yeah, Benny, and helping or put some pressure on stocks today, dollars higher, but yields, that 10-year, and I mentioned this earlier on our show, it seems like we bottomed out. We've had this range over the last year where this 3.78, 3.75 level has become a little bit of support. Is that what we're getting the bounce on yields from today?
It could be. I mean, we've definitely found a bit of a range, 4% down to 3.65, I think. So just below that 3.7 level. But yeah, currently hanging out right around 3.87. I think it was 4.01, the August high that we've seen. And then we've come off that level since. But I think, again, a reflection of investors' expectations, the anticipation of a September rate cut, and also a little bit of uncertainty in terms of whether that's going to be a quarter or 50.
All right, we'll continue to watch those asset classes. Dollar spiking, yield spiking today, putting a little bit of pressure on equities. Thanks to Ben Lichtenstein, host of the Future Show here on the network. But now let's bring in George Tillis, and now we'll bring Kevin back. George, we're talking workday into earnings. Stocks off about 15% this year. It seems like these stocks that you think there's a low bar, and I'll use Snowflake as an example. We talked about that yesterday, and that stock's getting pummeled today, even though it was a pretty good report. Out of the company, but the bar's low in workday going into these results. Are you seeing anything on the inside here or backdrop here that might give us an inclination that maybe the stock's overbought and it is low bar?
Yeah, so look, I'm going to compare the two. I mean, they're both in the software application space, but I think valuation is really the concern for Snowflake, and the market seems to agree with that. It's trading around 200 times this year's earnings and about 130 times next year's earnings. Now, Workday, if you look at it, it's been in a 2-quarter trading range. Year to date, as you mentioned, it's down about 15%. Over the last year, it's really only higher by about 2%. And so it's really been a serial underperformer this particular year. And if you look at last quarter's results, stock tried to make some headway from the previous quarter, because like I said, it's been in a 2-quarter trading range, and it gapped lower once again. Because of the fact that they gave revenue guidance was lower than expectation. But the kicker and the difference here for Workday is last quarter they did provide an update and higher margin guidance. So I think essentially we have a 1-quarter step back in this particular name. And in fact, if you look at the profitability profile of Workday, it's markedly improved over the past 5 years, irrespective of the fact that revenue growth guidance now, based on last quarter's results, we're about 17% for the full year versus historical averages around 20%. So we actually are expecting slower sales growth for Workday. But with that said, the profitability of this company has actually improved significantly. Now, if you look at the expectations for the quarter, they're actually quite modest from an earnings standpoint. They're expecting about $1.65 per share. That's about 15.5% higher than last year for the same quarter, $1.43. And sales are expected for the quarter to be about 15.6% higher at $2.07 billion versus $1.79 billion for the same quarter last year. Now, the reason I say this is going to be different than Snowflake is if you look at profitability for Workday, essentially the net income margin in the last year has been about 20% on gross margins that are higher by about 300 basis points. And they've actually had a full year of GAAP profitability last year. So I suggest what's happening here is based on revenue guidance and some deceleration in revenue, the stock has adjusted lower in the past year. But it seems to me that they've been focused more on operating metrics and margins. And right now it's trading around 30 times next year's earnings on 20% earnings growth. So that's trading at less than 2 times its forward earnings growth. And essentially, I think this will be a pivotal quarter. I think this stock could obviously fill some gaps to the upside by about $25 or so, but also could retrace back to those levels right around the 210, which pins it right back at its last quarter's lower end of the trading range.
Go from $311 to $199 in 2 quarters. You start looking for reasons why. And it appears, like you were mentioning, that they're working on expense management. They're working on revenue growth. Yeah. They talked about expecting profitability to improve gradually over time, to get the net margins to 11% by 2028. It seems like they're almost having a year of efficiency, like Facebook did, where they're getting their house in order and all the rest of the numbers start to get a lot better. And that's why it's rallied from 199 to 233. I think you're right, George. I think this quarter is pivotal that they show progress on all those areas.
That's the thing. So this is a situation, and I've seen this lots of times in the past. I try to explain it as best I can on all the programs I cover, but what we see here is really a 2-quarter trading range, and that is essentially the market explaining to us that they're waiting for the company to improve operational efficiencies internal to the business on the back of decelerating sales growth. Now, this is to be expected. The rate of sales growth as a company matures, which Workday is maturing from a growth company, is moving to the downside, but that needs to be offset, which I suggest it is for workday, through margin growth and enhancement. And the net income margin has expanded significantly over the past year, but the price has actually moved in the opposite direction. So we've seen multiple compression in workday, but aside from companies like Snowflake, it's not trading at a massively lofty valuation, and the earnings profile estimates are actually expanding greater than sales growth, irrespective of the fact that sales growth is decelerating. So that's what you want to see in a positive trend stock. So I'm not saying it's going to go higher. I don't know. But, it's starting to look rather interesting here, both from a price standpoint, because it's near the high end of that trading range in the last 2 quarters. And again, the valuation is compressed going into to next quarter with the guidance the company provided last quarter on terms of improving operational efficiencies and net income.
All right, great backdrop for us, George. I think it sets up for our example trades also where it could go up, could go down. We'll take a look. Thanks to George Tillis, senior markets correspondent here. Kev, so I got 2 separate trades here. They're both directionally opposite from each other, but they're the same strategy. So the first one I wanted to look at was a put diagonal to the downside. So we're taking advantage of that dispersion between implied volatility levels, really short-term positioning on these examples. So looked at out in the August 30th weekly cycle, buying that at-the-money 235 strike put. And then in the near term, August 23rd weekly options that expire in just 1 day, sell the 220 strike put. It's a $15 wide bearish put diagonal to the downside, Kev, paying roughly about a $7 debit on it. That means that's your risk, $700 per spread on that one, with a break even of about 231 to the downside, because you'll have that a little bit of extrinsic value in those options. But if you pay that $7 debit on a $15 wide put diagonal, Kev, the reward part of it at or near that 220 level or anything below the break even, it's going to be profitability.
This is the trade-off that we talk about between the calendar spread and the diagonal. If you're right on the diagonal directionally, it's hard to mess it up almost, right? Because you've got that profit line that flat lines at a much higher level because you've got 15 points between the strikes. Now, the trade-off is it costs you more money to do that, right? But if you're right, the payoff is better, Tom. And the risk with all calendars or diagonals, as long as you're long them, the risk is what you pay for.
Yeah, we mentioned that vol dispersion, buying about a 75% IV on aggregate in the August 30th cycle on the 235 put you're purchasing, selling about 178% implied vol on the August 23rd 220 strike put. So a bearish $15 wide put diagonal to the downside. Now let's look at the other side, the flip side here, Kev. We got the call diagonal on this one. Same strike on the purchase, right? Buying the 235 strike call, selling the 250 strike call on this. So a $15 wide bullish call diagonal, paying roughly about a 630 debit on this one. There's your risk, $630. But Kevin, this is just based on direction, right? You want this stock to grind up towards 250, but anything above that break even of about maybe 238, 239 to the upside is going to be profitability on this one. So it's just flip-flopping, but you're still taking that vol dispersion that you have between the option series and creating a bullish or a bearish trade, in this case, a bullish one.
Yeah. Now, this is an interesting trade because, like a double calendar, there's less of a debit to lose on the side that you're wrong. In this one, there's a little more of a debit to lose. So, it does come down slightly, but you're still profitable in both directions, no matter how far it goes, Tom. The profitability goes down if it goes way past. But if it goes to one of the strikes, still, just like any other calendar spread, that's where it peaks out, at the short strike.
Yep, the anticipated market maker move with the option markets price in plus or minus about $18 either way, but we've got the call diagonal up there. So I kind of wanted to show that, Kevin, that, hey, these strategies can be used in a bullish or bearish fashion, but the same underlying principle about vol dispersion is the reason they cost less than the width of the diagonals, right?
Exactly right. Because you're buying, basically looking at implied volatilities and you're buying a 75 and selling a 178, Tom, that makes, if you do the calendar spread, it makes it less expensive. If you do the diagonal, it makes it less expensive. These are all ways to play the dispersion in that implied vol. Doesn't guarantee you'll be right, but it gives you a better chance.
All right, good look at two different ways to play that, whether it's bullish or bearish on that. All right, that's going to do it for us today here on Fast Market. But stick around, Next Gen Investing is coming up.
This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week. Election trades are fraught with risk. No agenda, no hysteria, just good old fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Good afternoon and welcome to Next Gen Investing. Happy Thursday, everybody. Alex Coffey alongside Diane King Hall, who's in for Jenny Horn, who has the day off, joining me live from the New York Stock Exchange on what's turned out to be, Diane, a little bit of a red session. One that has been a market, I should say, that's been very green. Historic kind of run for the market off those lows from earlier in the month, but giving back just a little bit of that here as Jackson Hole kicks off.
That's right. It seems natural that this is occurring, especially ahead of hearing commentary from Fed Chair Jay Powell tomorrow. We've heard from some voices from the Fed today, and so it makes sense that you're seeing some of this cooling, especially given that the expectations, when you look at the CME Fed Watch tool before recently, had been this 50-50 split of expecting where you would see a rate cut come
September, right? The overall expectation is for a cut, but the question has been how much. And now there's been a deceleration of expectations in terms of the 50 bips that some were expecting, and you're seeing more expectations on the side of just 25 basis points. And so we know that Fed Chair Jay Powell tomorrow has to strike that balance between, where inflation is and what's happening with the job market, which we know there had been challenges within the job market and had led to that, initial sell-off that we saw at the beginning of this month, which we've since essentially recovered from, Alex.
Yeah, and I think you highlight something that's important too, which is the market is almost like a pendulum. It swings from one kind of situation to another. In the early parts of July, it was a question of, do rate cuts kick off in September? By the beginning of August, it was like, we need 75 basis points yesterday. Yeah. Both of those situations seem to have overestimated in two opposite directions kind of the reality. And we've watched that normalization now take place. So now it's sort of resuming kind of everyday market activity, which is one that might be a little bit more sideways as we kind of digest data point after data point, Fed speaker after Fed speaker, NVIDIA earnings next week. There's still a lot of things that are going to help decide the next major move for this market. We just got shocked, I think, by how big these kind of repricings were and how fast they happened. Now we're kind of back to something that we're a little bit more used to looking at. Any final thoughts on kind of the overall market here as we set up the show?
No, that seems to be what you're saying, seems to make sense, especially with some of the analysts that we hear from day after day. And then the overall expectations that we would see more volatility this month. It does seem like it's kind of that repricing that's occurred. We're back to normal, but obviously what's going to be key next week is not so much the macro picture, but what those numbers from NVIDIA will tell us about the state of AI.
Yeah, no, it's going to be, a big time event for this market. NVIDIA today, a little bit lower, certainly putting a little bit of pressure on the market. It's down about 2%, but another really nice recovery that we've seen in that stock. We'll talk Zoom Video, kind of a blast from the past as the video conferencing company is in center stage.
All right, Goldman pulling back to VWAP.
Microsoft and AI with Kevin Green,
Futures pulling back again.
Let's do upvote, downvote. A segment, of course, we do every day where we look at some of the movers on the board. They're not endorsements, they're not recommendations, Diane, as you know. The first one, though, was a fun one, and it can be ironically fun, but it's been a really nice trade for a few years now, which is the company Crocs, of course, parent company of the namesake brand.
Yeah, that's right. So Crocs is in focus today. You're seeing it move a little bit higher on this new news. It's Williams Trading boosted their view on Crocs. They boosted it to a buy from a hold. They have a price target of $163 a share. That their previous price target was $135 a share. That has to do with, that's off the news that Sydney Sweeney, that famous actress, that she is going to be working with Hey Dude, which is under Crocs, as a brand ambassador and a global spokesperson. The idea is that her joining forces with Crocs, with Hey Dude in particular, will help bring in young customers and just more brand awareness. And they've been trying to invest more into Hey Dude. Obviously, Crocs has been their, kind of tried and true brand, but Hey Dude had been flagging, right? And they recently had brought over the president of Stanley to run Hey Dude, and we know what happened with Stanley since 2020. Who don't we know who doesn't have a Stanley? So I suppose they're trying to do the same thing with Hey Dude.
Yeah, no, makes sense. And finding someone who's been able to utilize sort of that viral marketing of the new age of social media through things like TikTok and influencers, of course, has been a huge part of Stanley's success. And of course, anytime you can tap a pretty big time celebrity to, be an ambassador for your brand, that's typically can move the needle a little bit.
I'm here just scanning through some stocks now.
Nice performance over the last 12 months.
Looks like S&P is going to lose the low of the day here. S&P.
Recent success. Next one on our list is Urban Outfitters, a brand that I think most are pretty familiar with in the apparel space. Tough day though today, Diane, as the stock's down nearly 10%.
Yeah, it's right. Urban is certainly facing some challenges. This stock, as you mentioned, off nearly 10%.
S&P making new lows of the day.
Quarterly numbers. We have some analysts watching this one. They talked about some concerns about the consumer on their earnings call. Wells Fargo lowering the price target on Urban Outfitters. They're reducing their price target to $40 a share. They previously had it at $48 a share. They've maintained an equal weight rating, on the stock. They called out that mid-July slowdown that the company talked about, the higher than planned inventory. They talked about that on their call, some softness. They called it, the COO rather, called it slight deceleration in sales in the end of July to the beginning of August. So
The Qs, we're seeing 24-1 down volume on the Qs.
or the slowing of the third quarter, shouldn't call it sluggishness, but slowing of the third quarter. They maintain a neutral rating on the shares, but that stock is under heavy pressure. The executives on their earnings call talked about, they may have to do some more promotions and some markdowns because of this slowdown that we're seeing in sales, and they expect that it's going to hit margins.
Yeah, it'll be an interesting story to watch unfold. I know that the Anthropologie brand, Free People, still really, really popular, but it does seem like the namesake brand has sort of lost its luster in recent years. They do have exposure to that rental service, Nuuly, that falls under their umbrella. I know that's immensely popular, but again, if your namesake kind of biggest part of your business is flagging just a little bit, it can put a lot of pressure on the organization. So they do have some bright spots. It just doesn't seem like they're the big pieces at the moment. Staying in the kind of retail world here, let's talk TJX, a company that is certainly in the discounting world. And that discounting world has been an area that consumers have found value in. And so not a surprise to see a really, really impressive performer in the case of TJX.
Yeah, shares are a little off today, but remember they reported their quarterly numbers this week that were better than expected, and it showed up in this environment where we're seeing the consumers start to be choosy about where they're spending. They're looking for more bang for the buck, and we're seeing that play out at different places. Like we just talked about Urban, and one of the challenges there is the consumer's been turning away, at least from the namesake brand. But TJX, within their different brands, whether we're talking about TJ Maxx, Marmaxx, or Marshalls, they're continuing to have strength there. So Jeffrey's raising the price target of TJX. They have boosted it to $140 a share. Their previous price target was $130 a share. So there's a lot of room to run where the stock is now. They are maintaining a buy rating on TJX. They've highlighted the same-store sales growth. Comps came in at 4%. That was ahead of expectations. And they talked about that being driven, quote, entirely by increased customer transactions. And TJX talked about that they're seeing that this rise in customer transactions. So people are not pulling back when it comes to the value players. They're looking for, okay, I need to buy certain things, or maybe I want to buy certain things, but I want value for that. So where that is being picked up is...
So the way it looks to me, it looks like every bounce is getting sold, strength, selling into strength. All right. We're back down to the lows again.
Yeah, and I think it's really, really important.
Daily showing a bearish engulfing candle.
When it's sort of your time to shine, when consumers are
After 14 days up, just looks like people taking profits. Looks like every bounce now is getting sold.
I think it's safe to say they've been capitalizing on the environment, and they're continuing to do so. Yeah, the stock's down 70 bips today, but so is the market. So to me, this is just sort of a stock that's moving a little bit with the general risk assets today. Last one on our list, though, is Estee Lauder. This is, of course, stock ticker EL. Talk to me about this one as the cosmetic player is trying to get up off the mat.
Yeah, I mean, this one is interesting to see. It could be seen as potentially controversial take, but its shares are up today after getting beat up once again earlier this week. So shares of Estee Lauder up 1.5% after Piper Sandler boosting their view on Estee Lauder. They are boosting it to overweight from neutral. They have a new price target of $114 a share. Their previous price target was $95 a share. They said that after Estee Lauder's latest earnings, that they feel, quote, far more comfortable with the current valuation level. They have stronger conviction in the updated guidance. And they said that the management changes should be viewed in a positive light with regard to the valuation levels. They think that there's limit to the downside now, and they say there's, quote, little reason to suggest the bear thesis could play out much further here. Now, look, Estee Lauder down more than 30% year to date, but they see, okay, look, I guess the value is there now, Alex.
Yeah, potentially early to the call, right? There's nothing, I guess, if you were just looking at.
All right, look for more selling into strength as we bounce again.
Yet, but trying to kind of round off a bottom here. It's about $6 off its lows. It's through the earnings now. And it's a shop from the analyst front that wasn't overly optimistic. So it's not like they're doubling down on their take. They're actually seeing improvement in their
Hilton following through. Hilton, Marriott, Host Hotels.
Piper Sandler might be onto something or not. We're gonna take our first short break though, Diane, and when we do come back, we're gonna look at the first two names. We're gonna look at Crocs and we're gonna look at Urban Outfitters. Two stocks going in different directions. Stick around. We'll be right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. I'm Diane King Hall. Time now to take a little technical look at the upvoted stocks, not an endorsement. We're taking a look at Crocs and Urban Outfitters. For that, we want to bring in Rick Ducat, Duke of Data. All right, Rick, let's start out with Crocs. We're watching this one. It's been on the move today. It's been moving higher today. What's the overall trend you're watching, Rick?
Well, Diane, a little bit of a disappointment actually from this morning here, because when we look at our chart, we can see that Crocs has been in a short-term rally here after bottoming out at a key support point near the 112 level, that light green line there that represents the high point that we saw before a gap and then the subsequent low after the gap up. But anyway, so we rallied upward. We took out our moving averages, all three of the ones we follow in this segment: yellow 21-day, orange 63-day, purple 252-day exponential moving averages. So now when we look at today's price action, we can see that we actually made our way above that green line there near 143.25. That was a repeated low point, and then we did eventually break down below it. Old support becomes new resistance now. We were kind of peeking our head above that line. We have failed, though. We are below it now, as today's kind of general weakness has come through the market here. So a bit of a disappointment.
All right, another another low. potentially not much to do at the moment if you're thinking long. Weakness pretty obvious on the daily charts. Weakness persistent. Selling into strength. We got a bearish engulfing candle. Last time we had a bearish engulfing candle over here at highs. We didn't pull back initially until a couple of days later. Lots of volume on the rip higher.
Sure. When we look at RSI, we can see that the momentum indicator here that we typically follow in this segment here, trending downward for quite a while here. You can see that there was a peak that we hit back in March, kind of angling down across the subsequent highs from May. Then at that point, now we're finding ourselves once again quite close to this trend line here on the RSI, looking like we perhaps were maybe going to break above it here concurrently with price, but as price has faltered, so too has RSI so far. Now, we do still have a upward sloping trend line on both price and RSI. You can see they kind of match together there after we did see a little bit of bullish divergence on the RSI. You can see
Looks like a bear flag. I'm thinking we're going to test these lows again. Maybe take it out. Below VWAP, continue to make new lows.
But what the bulls would really want to see would be a simultaneous breakout in price and RSI above these two kind of resistance areas that we've mentioned.
Apple, no follow through. Did dip as well.
Broken above the 50 midline, is kind of hanging on to that area so far. So momentum has shifted back from bearish to bullish in this scenario so far.
And then what levels are you paying attention to as we, kind of in the back half of trading that would continue to kind of play out in the bullish
Apple.
favor?
Yeah, so starting to the upside here, the first level.
NVIDIA coming off the low.
It's the thing that I've mentioned before already. That area near 143.25, that green line there. So far, we haven't.
I can't help but think that we could see lower lows over the next few days. This is the first bearish candle. People are still looking to buy the dips. We're below 5,600, so we know that below 5,600, we are losing that positive gamma tendency to buy the dips. So I'm being a little bit more cautious at the moment. See if we can manage to hold this level over the next couple hours. I'm skeptical. The last bounce we got at 11:30, 11:35, it looked like we saw selling into strength. They let it run up to about 56.36, and they started selling. So if it's an institution, they're not just going to sell and sell and sell and sell. They're going to let the markets bounce a little bit so they can take a little bit more off into strength if that's what they're going to do. We've had a 14-day rally. Today's day 14. You should expect that we're going to pull back a little bit. If we don't, that's great. But for now, I'm thinking we could see more downside. Just watching this next bounce to see if they sell into strength again.
Seemed a little bit optimistic. You had an upgrade and price target hike in the stock, some new ambassadors with the company. And so say you're excited about this one, you see upside and you want to look at a bullish example trade. We have one for you. So what we're looking at in this particular strategy is a bullish call diagonal spread, utilizing some of those levels that Rick talked about. And so with this strategy, it's going to have a mountain-like aspect to the risk profile, but it's going to continue off without any upside risk. So there is a calendarized, aspect to this. But what we're looking at in particular, and this is the first level that Rick was talking around 143. We actually went to 145 for this, but looking at buying the September 145 call, this is really the anchor of this particular strategy. It's the biggest component of it. And then selling a near dated, further out of the money strike at that next level of resistance around 150. And so with that in mind, it creates, a risk profile strategy that benefits from a move to the upside. Now, the debit for this particular strategy was $3.50 at the time I looked at it before the show. So with that in mind, that would be the max risk associated theoretically with this strategy. So one Diane with $350 in risk that benefits from a move not only just to 150, but really anything to the upside, with the best case scenario being a move right to that short strike at 150.
Goldman Sachs bouncing.
All right, that was an example trade on Crocs. Let's go back over to Rick for the next upvoted stock. We have Urban Outfitters in focus today. The stock has been under.
Goldman Sachs moving back up to the highs.
How did the chart look?
So there's somebody that's still there buying.
Quite a bit of pressure here, but we have recovered significantly off of those lows that we found ourselves in when trading open today. So definitely a tough situation here. We were down much more, though, as I said earlier in this trading day, we were down about 15.3% or so. Now we've erased that to only about 8.4%. So definitely some improvement there. But as we look and kind of sort through this chart here, we can see that we had several phases of our uptrend here.
S&P.
And we can see as well that from that blue upward sloping trend line, that was the steeper one here, we have faltered quite a bit. We are down in a downward sloping channel now, with our shorter term white trend line there going across the highs, angling downward here. We extrapolated it, duplicated it, put it along the low point there to give us a projection for where we might find some support based on this. And, we didn't quite reach that point today. It would roughly line up with the lows on our light green line near about 34.25. That was a low point that we saw all the way back in the beginning of the 2024 year. But we've fallen through our moving averages. The moving averages are trending downward here. Heavy volume today, a volume spike today as we kind of assess this move here. So not what the bulls would want to see, to be certain here. Kind of a rougher
Hotels, Marriott,
but, exacerbate
Hilton. These are seeing a little bit more activity. Hilton.
Support levels that you're paying attention to on the Urban chart, Rick?
Sure.
Host Hotel.
RSI, our measure of momentum here for this one, we can see that momentum has roughly matched up with the price action, trending downward here, going across the peaks. And the RSI trend line does begin a little bit.
See, ISRG. Trying to hold on to VWAP, pushing higher. These stocks are bullish. FANG, Diamondback, trying to reverse off the lows. Diamondback, Pinduoduo, Chinese stock. That hit the high and got rejected. DoorDash. These are stocks that are bullish on the NASDAQ 100. Currently higher on the day. Gilead, G-I-L-D, Gilead. Gilead has an obesity drug too, right? What's Lilly doing? Lilly, Doji.
Think about the trend and the volume profile. What are you paying attention to in terms of significance about what it signals for the patterns going from here for Urban?
Sure. And volume profile can be very interesting to add to your charts because it kind of fleshes out some of the key price areas. It shows the areas with the heaviest trading. And when we look, we see that thick red line that's right near about 42 or so, 42, 41.50. That's the volume profile point of control, the area of heaviest trading. And that's roughly where price stopped yesterday as we were kind of struggling to break above that resistance.
Why, they're not working anymore?
No, they always rather large rejection today that took us below.
Don't yank them by the
No,
cord.
it's not there. They don't break there. They break at the.
In terms of support and resistance, like I said before, green line 36.32. That was a low point. Matches up with some more heavy volume around that general area. If we were to break even lower beyond that point, our light green line there, that was another low point from January of this year. That comes in around 34.25. So be on the lookout if things continue to deteriorate. There's some levels that traders probably should want to be aware of if we do continue to fade here. To the upside, though,
S&P just sitting here at the lows. Nothing to do at the moment.
Low point all the way back in mid-May or so, and then we bottomed out around that area several times in recent weeks here. So that's one mark to clear. And And then the pink line that I mentioned earlier near about 41, another low point, and then subsequent high points after we broke down through it. So definitely a lot of hurdles to the upside in this game. Bulls have a lot of work to do to make their way back to a more comfortable situation here in the stock.
Oh, they certainly do. Be on the lookout. Rick Ducat, our chart master, as I like to call you, the Duke of Data. Great work on the charts, as usual. All right, let's go back to Alex Coffey. Alex, you've got an example trade queued up for Urban Outfitters. Break it down for us.
Yeah, Urban, Rick talked about a lot of things on the technical front. We're moving post-earnings now in this stock, so it's not unlike a name like Urban to make a big move post that. But a couple things that stuck out to me. It gapped down from a low yesterday of around 40, so we have sort of an upside potential resistance point. And then today's low was just over 35. The stock's already actually cut its losses by about 40% intraday. So we sort of have this nice new range that's been kind of carved out by the price action. And, you know, sometimes post earnings, a big move happens, and then the stock sort of works its way into that new range. And so we're looking at a strategy that would look to kind of benefit from that taking place. Doesn't mean it's going to, but it's risk defined in the event that it doesn't. Looking at a short iron condor, you have the risk profile here over my shoulder. And what you'll see is we've sold the 35 put in September and the 40 call in September. That's
All right, looking for a bounce in the S&P.
Our lines in the sand that we want to stay.
Let's see. What if we sold some 5,700 calls? If we sold them, let me see. Analyze that trade. S&P. Like go out a few days for some nice premium. That's Friday. Calls.
And you're looking for a max profit of 67. So kind of creates a strategy that we talk about when it comes to these premium collecting ones. Break evens would be 34, 33 on the downside. Short 35 put, net of that 67 cents that's collected, and then you simply add it to the call side. So in this case, the 40 call gets that 67 cents added to it, 40.67. So a range bound strategy might seem counterintuitive, but the big move happened because of earnings, and now looking for it to settle down into this new range.
All right, settle down. All right, that's Alex Coffey, co-host Next Gen. We're going to have to break shortly, but coming up next, it's FOMO time. We're going to be looking at Zoom. Don't call it a comeback. That stopped soaring after its latest quarterly results. The Next Gen Investing will be back after a short break.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend.
All right, so we're not getting much in the way of a bounce on anything. Nvidia coming off the lows. Nvidia.
Stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
All right, let's see what that looks like. Nvidia.
Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
All right. Looks like we're going to move lower, folks. Looks like S&P is going to move lower.
And live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Accelerate your market knowledge.
And shift your perspective into Bogian. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Gates. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
back to Next Gen Investing. It's time for FOMO. Alex Coffey alongside Diane King Hall joining me live from the New York Stock Exchange today in place for Jenny Horn, who has a day off. Talking Zoom video, there's no puns to be made here. You wouldn't say it's zooming to the upside or anything like that, Diane, I know, but I can't resist. So really impressive move, a bounce back in this name, jumping 12.5%. Probably something that investors have been longing for quite some time, but better late than never.
Yeah, right. And you have analysts boosting their view on Zoom off the back of its quarterly numbers. You had Wells Fargo raising its price target on Zoom to $60 a share from $55 a share. They're maintaining an underweight rating on the shares. Baird is maintaining an outperform. Their price target is now $77 a share. So they've lowered their price target on Zoom. But Zoom certainly performed better than expected following its latest quarterly numbers. BofA, another analyst, they're maintaining a neutral price rating. So it's a little bit of mixed views in terms of the analysts' views on this. But when you look at what Wells Fargo said, they noted that the results, they came in line with expectations. The revenues modestly above the prior guide. So that looks good. They saw meaningful free cash flow outperformance. And they said that the growth picture has, basically, it's come to a cleaner place in terms of what it looks like for Zoom. And it's just a very different Zoom than it was a year ago. Zoom has now strengthened large accounts and talked about that on its earnings call. And they gave guidance that was ahead of
Goldman Sachs dropping back down to the low now. Goldman, all right, the S&P moving. All right, let me take a look at some hedges here. If we get any more ugly, TZA for IWM. TZA, let's see, IWM. I might buy some TZA. If we move back to the 50-day, TZA. Okay, let me take a look at this TZA. S&P moving lower, so this is not good for the markets for now, short term. TZA.
Just never was going to make sense for a company that does one thing like Zoom did, and it was an important thing at the time, and it still is. But we're looking at a stock that's just off of its lifetime lows, and I feel like you're going to look at that and say that this is a big flop for a company that's gone public. And if you've been an investor from the top, it's been a terrible investment. I don't mean that to disregard that performance. It happened. But we're talking.
All right, so I'm going to start hedging with TZA. We're at the low of the day, so I could wait again for another bounce, but this looks like it's going to get ugly. TZA, going to start hedging with TZA.
Increasing large customers and creating some stickiness with its customers. So that can't completely be discounted, especially when you look at these numbers. It may never see, I mean, you're right, those valuations that we saw once upon a time for these, like those pandemic poster children, doesn't make sense in a climate that we have today. And like, as you mentioned, Zoom may be a victim of its success in the sense that, it was necessary.
Okay, so this looks bearish.
Individuals operate now, but it's not going to see the highs that it did once upon a time. But where it is now may make more sense. And look, to be fair, on a year-over-year basis, the stock is still.
Okay, so I'm just going to start hedging with TZA. Just prefer the IWM for now, because if we start to see weakness, I think it'll show up in small caps pretty fast. So it's just a hedge for now. Just a hedge for now. All right, well, a little bounce. So I'm looking for another bounce that gets rejected.
Weighing in here, it doesn't seem like the vast majority of them, Diane, are really believers. There's still a lot of neutrals that I'm seeing, a lot of equal weights on this stock. What's it going to take to change the tone there? Is there going to be a couple more of these quarters, you think, in a row?
Yeah, I mean, look, one quarter doesn't make a trend. So Zoom will have to continue to show strength.
Okay, Hollow on the move. All right, so some of these cheap stocks are moving. Hollow on the move. Big move on Hollow.
In revenue with these large customers, so they'll have to maintain that sticky customer base.
Hollow.
Show that they
Meanwhile,
continue this trend and continue to increase revenue.
And we will see if they do or not. I'm looking here, what's about 64% in the hold camp, 30% in the buy camp. The average price target is higher than the stock. Currently is at about $74 a share, but doing a lot of work here to cut into that potential outcome to the upside today, up about $7.60 in real time. I do have an example trade to take a look at here, Diane, and it sort of plays into, maybe this run is sort of a one-day thing and it's a little bit of a grind here if it is to continue higher. What I looked at was a long call calendar, but just at the 70 strike. So it's only going to need about a 5% rally or a little bit less than that to get to that level. And so what I looked at was selling the September 70 call, buying the October 70 call for about a $1 debit. If it hits that mark, then you would benefit. Its risk profile looks like a mountaintop. It has risk in both directions. So Jenny and I, Diane, oftentimes describe this as sort of throwing a dart. If you have a price in mind and you want to limit that risk, this is a way to benefit from doing what you think is going to happen, but you can kind of contain that risk to maybe what to some could consider manageable if it doesn't. And so kind of aim small, miss small with this one. $100 in risk, but one that could benefit if it moves to 70. Any final thoughts on Zoom video as we look at this market that's actually on session lows as we speak?
No, I think what you said makes sense, especially like the throwing a dart model and where you see the analyst committee on when you see more in the hold camp versus in the buy camp. That makes sense.
And we'll see where the next few trading days bring us. A little bit of market volatility.
okay, nice little pop on that one. Okay.
Seems like years now. Stock down 80% in 3 years. We know the market seemingly going up significantly.
Hollow.
Hollow. Short break. We get back. We're going to check in on one of the market generals. That, of course, is Microsoft, as we got a guidance update from the company. There's also AI legislation in the mix in California. Kevin Green has got the latest. He'll be with us right after this.
All right. So a nice little pop there and Hollow. As the markets move lower, okay, Holo.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
All right, what are some of the other names? These security stocks like Zscaler above the 200-day, looking for a bounce. Doji for now, 208, 203. There's probably some sellers in here. Once we get through this level, could see Zscaler push higher. Let's see what Palo Alto is doing. Palo Alto. Okay, that's pulling back. CrowdStrike. Okay, grinding higher. CyberArk. Okay, and the Cyber ETF for security stocks. Okay, outside day. Bearish engulfing. Okay. So if you're worried about the downside, maybe consider hedging with your hedge on the watch list. At the bottom of the list, I have a number of hedges that you could look at, including gold, which is drifting a bit lower today. Gold. All right, and silver. You also have SPXU, QID for the Qs, QID. QID with a bullish engulfing candle. That could turn back up, head back towards 45, 46. Okay, if the Qs continue to move lower, QID, Qs. All right.
Refocusing on, we are seeing shares down on the session, a broader equity market is also down on the session here, but they do believe that Intelligent Cloud, they did revise their revenue guide to 23.8 billion, 24.1 billion. That is actually down from 28.9 billion. More personal computing revenue got adjusted to 12.25 billion, 12.65 billion. Prior expectations 14.9 billion to 15.3 billion. Now, once again, this is kind of the realignment that's taking place. So, for instance, Microsoft 365 revenue from the commercial components will be consolidated under the productivity and business process segment. Copilot's going to be moved to more personal computing segment, and under search and new advertising.
Hello.
Have the Nuance Enterprises, which is
Hello. What's NVIDIA doing? NVIDIA still testing the lows. NVIDIA.
Why we're seeing that readjustment when it comes to guidance, so they can just kind of right size it. Sometimes it may take a quarter, or maybe even 2 quarters for analysts to really get adjusted to these changes as well. So that being said, we are seeing the shares down here in the session, but it's not a really aggressive move, but it is causing some overlaying pressure on the broader equity market at the moment.
Do we think some of that, though, in terms of the stock reaction, is that kind of because of this change in how they're shifting how they report their units, or does that have to do with some of the broader market action that we're seeing?
I think this is actually just how they're reporting their units and that readjustment. So this is actually not out of the ordinary, especially when you have such a secular trend like artificial intelligence. A lot of times when you have these new projects, they might live and house in certain segments that as they grow over time, it may align with a new segment. Google actually did this about a year ago, 8 months ago, where they kind of readjusted their cloud business and readjusted some of the AI spend to other segments of the business. This is not outside of the ordinary, but this does kind of shake up the modeling that a lot of analysts have. So we'll have to go back and kind of reconfigure how they're modeling out the forward guidance moving forward and how it's going to play into the forward multiples as well as sales multiples.
Speaking of that trend in artificial intelligence, Kevin, probably expected, but we're starting to see the beginning of regulators trying to take a look at what could be described a bit as the wild, wild west at the moment in AI. It seems like California's taken a stab. What are we learning from this AI bill that's being tossed out there?
Yeah, so this bill is going to be SB 1047. Now, they are going to be voting on this by August 31st. States here, they're really looking at mandating safety controls and testing for models that cost over $100 million to develop. It also requires a kill switch for AI models.
So Bloomberg, all they're talking about is the Democratic convention. No coverage of the markets. What's going on?
Third-party auditors that are going to be looking at these codes, looking at these AI models in order to provide a safety assessment. That one's going to be a little bit
Okay. All right. So if many are thinking that Powell could induce some more volatility like we're seeing today. So with the 10-year yield in particular, watch the 10-year spiking, not spiking, but popping a little bit. It's still in a downtrend. 921, 50-day are still, and the 200-day is still overhead. RSI rising. So 10-year yield could catch a bid for the next couple of days. So that would mean we might see more downside in the short term. So hedging's not a bad idea.
I would have guessed it was because of those NVIDIA calls, Kev. But jokes aside, speaking of calls, though, is this a market today that flows have taken over, or is this just a sleepy market ahead of Jerome Powell that was ripe for pushing around?
Yeah, I mean, the flows are definitely gaining some steam here. We did actually see a significant amount of call buying flows that took place earlier this morning, and then now we're just kind of seeing a little bit of unraveling. We have the economic data that was mixed for the most part, and we also had a weak 30-year tip auction, but not a lot of people really kind of follow that. But now you're seeing a lot of put buying taking place into the market. And that's really kind of creating this domino effect to the downside. We're kind of in a negative gamma situation when you're looking at just the volume for today. So if you're looking at support right now, looking at 55.50, your resistance level for the first area of resistance for the S&P 500 is going to be 55.80, and then obviously there's a significant amount of concentration at the 5,600 level. So a little bit of a pullback. We saw consolidation over the last couple of trading sessions. Yesterday we had the VIX up, we had the S&P up. That's not something that's normal, and usually this is the result of that correlation that's taking place. So I wouldn't worry too much about it, just more of a pullback and trying to reset expectations going into Jackson Hole.
And really quickly, KG, before we lose you, I just want to go back to Microsoft and the new reporting structure. What new visibility does that give us when it comes to AI and the spin? Because we know that a lot of what's happened recently with these big players in the Gen AI space is there's more questions about what return are we getting on this investment. Does this new reporting structure give that clarity?
No, it actually probably makes it a little bit more murkier. So they're splitting up a lot of their AI functions into other business segments. So you're going to have to kind of look at each and every one of them to see how they're performing and if you are seeing a decent rate of return, as well as the margins on those individual segments here. So this is kind of, once again, kind of a situation that does occur is you have a new technology that kind of hits the street and kind of is housed under one business segment. Over time, you start to try to fit those.
Okay, so that's TNX, 10-year yield. Look at TZA.
And then also your adjusting spend too. So a lot of these metrics that we've been focusing on for a very long time, price to sales, the amount of expenses and CapEx spend, that's now going to be kind of separated out and blended across multiple segments. And it may make it a little bit difficult, which is why analysts are going to have to readjust after the first two quarterly announcements that we'll have in the next 6 months.
Should make it fun, though. I'm looking forward to the next Microsoft earnings event now. Maybe some added volatility in store. Thanks to Kevin Green, though, as always. Going all over the place here today. Senior markets correspondent for the Schwab Network. Always got good insights. Coming up next, though, Diane and I will be joined by George Tillis. We're going to do under 30, and we're going to cover SentinelOne with George. One we talked about with him a few weeks ago. We'll see what's changed in the cybersecurity world.
Okay, S&P looks like it's going to move a bit lower now. Okay, Apple, NVIDIA, everything is pulling back. Apple at the low. That got stopped out very early on. Tesla still moving lower. All right, so you're getting your vote. The vote is for more downside short term. Okay, so yeah.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customized to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Trading the trending names every day. It's fast money.
All right, S&P looks like it's going to move lower. All right, so hedge with the idea that if most of your positions are longs, you're protecting your longs, just neutralizing your position. Apple continues to pull back. Okay, we only got about 15 stocks green on the NASDAQ 100. That means 85 stocks are red on the day. Consider selling some call credit spreads overhead. Let's see. Let's take a look at a few examples. Let's see. NVIDIA is going to report next week. I don't know. I don't know how much you're going to get out of call credits at this point because the premium is going to be pretty high. The expectation is pretty high. Let's see, S&P cash. Talking to myself. Okay, Apple. Yeah, no follow through Apple.
Uncertainty and misdoings that has benefited SentinelOne.
Well, I think SentinelOne is benefiting from the collateral damage that has been created from CrowdStrike's outage, and I think if you look at the technologies that's essentially CrowdStrike is really good at, it's the endpoint security. And if you
Apple.
look at some of the other major competitors out there, like Palo Alto, they seem to be focused more on network security, and of course, cybersecurity at the data center and internal network security. So essentially, SentinelOne seems to be the periphery, endpoint cybersecurity company that competes very well with CrowdStrike. And I think the saying, if you will, that CrowdStrike has created for its customers is probably going to be ongoing for quite some time. If you look at, the elements of credibility, technology prowess, and even competitiveness, SentinelOne has actually been improving their customer base quite significantly. They actually secured some contracts with major customers like AWS and Microsoft. And I know CrowdStrike was integrated as a third-party cybersecurity software with Microsoft, which is a concern for Microsoft's software as well. But nonetheless, I think if you think about the nature of what's happened here over time, the major customers versus Delta Airlines, they know that they can't essentially hold CrowdStrike liable based upon what was denoted in the contract they signed. They're trying to legally go after them.
Okay, let's see. Goldman Sachs jumping around. So probably not the best day to put on a lot of risk. Probably not the best day. What's McDonald's doing? McDonald's looking for a dip to start a position again. We started one back here the last time it hit the 9 EMA. It pushed above the 200-day, came back down. An entry there. I wound up buying the 280s by accident. I meant to buy the 275s. Had the 280s. Took those off last Friday. Popped up this week. Looking for a little dip now. The next dip to the 921-day, I'll probably buy another position of McDonald's for now. McDonald's, just waiting for a little dip. S&P, let's see, TZA. TZA is probably going to move higher. TZA gapping up. Okay, let me look at the IWM small caps. Okay, with the 10-year bouncing, small caps will start to fade.
Recently, you had top brass from CrowdStrike sounding off in the press saying that competitors are being, they called it shady, pushing themselves and saying that this could have happened to any of its competitors, not just them. What do you think about the pipeline for CrowdStrike now? Like, will this, kind of shift in customers moving over to SentinelOne? How long does that trend look?
Yeah, you can short what the SOXX short. That's a good one too. Yeah, I like that too.
Customers like Delta can't switch. So I just think over time that this whole outage is going to create a credibility problem that will be ongoing for quite some time. And the transition can happen slowly, but it also causes, some of the smaller customers that are looking for providers at the endpoint level to choose maybe one that wasn't in the news based upon, a flawed update, and that is SentinelOne. So new customer acquisition growth as well as large customer growth, and that essentially is very important because customers that spend over $100,000 really improve the bottom line for businesses, because at the margin, additional sales cost of sales don't increase relative to the total revenues generated from those larger customers. And the large customer growth for SentinelOne as a percentage of total sales is close to 10%, which means they already have room for improvement in a large customer space. So I think this is a good opportunity for SentinelOne contingent upon some large customer growth, acquisition from
Okay, TZA.
even prior to this issue that CrowdStrike caused, the net revenue retention rates for Summit One were over 115%. So they were already getting existing customers to spend more. Now, if they add additional customers, that'll trickle down immediately to the bottom line. So all of this last to say is the stock is still pricey relative to next year's earnings, but next year's earnings can change based upon some outlook in terms of customer transition to SentinelOne from CrowdStrike.
George Chillis, we got to leave it there. Appreciate it as always. Great insights. Diane, thanks to you as well for joining me for the hour. We leave the viewers with markets on session lows. Basically giving up a week's worth of trading right now as a little bit of red turns into a lot of bit of red here intraday. Thanks as always for tuning in. Coming up next is the watch list. We'll see you tomorrow.
This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the president.
Rejected at the 50-day.
Next week it's going to be a crazy political week. Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, intellectual skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
All right, so let's take a look at SMH. It got rejected at the SMH getting rejected at the 50-day moving average.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly? It's controversial. The old guard is saying, oh, we're off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Okay. So hedge a bit. That'll help neutralize your portfolio.
Good afternoon. Welcome to the watch list. I'm Nicole Pedalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. Lot to digest. You had revisions on labor numbers, jobless claims, earnings, and Jay Powell tomorrow.
All right, day one. All right, so this is day one on the rejection.
Pandemic winner, Peloton shares spiking today after reporting earnings this morning, and we'll dive into what investors really liked and
focus on the energy sector as we've seen increased activity from investors in that space. And our panel standing by to break down Agilent Technologies earnings from last night. In the meantime, originally I was going to say winning week on Wall Street, probably still higher for the week, but for the NASDAQ and the S&P, but pulling back a bit here. The NASDAQ's now down 1.5%. The S&P's down 1%. The Dow is down 0.75%. The S&P's sitting at 55.65. The small caps also lower by about 0.9%. Oil and gold are mixed. Gold's down about $30, and oil's at 73.11 a barrel. 1789 on the VIX, so that's been gaining some momentum as we've been selling off. And you do see here that the dollar's at 101.46, hovering around 8-month lows. Bitcoin 60,230.
Okay, we continue to drip lower.
The big picture here is the economic data that we have to go through. We've gotten claims, Jay Powell tomorrow, Jackson Hole. What stands out? What are you watching for?
Hey, Nicole. Yeah, markets appear to be getting jittery ahead of Jerome Powell's comments tomorrow morning.
Nah, they're not getting jittery. They're just taking precautions. They're reducing risk. That's my opinion. Markets aren't jittery. Maybe some people are jittery. I just think it's we've been up for 14 days straight. What do you expect? Okay, Microsoft pulling back, Apple pulling back. Okay, looking for bounces.
That was, a bit higher than consensus at 54.1, but the manufacturing was lower. It was the service.
What's Peloton doing? Peloton. Peloton, nice bounce on Peloton.
What we've had all week is the dollar's been lower, yields have been lower, and crude oil has been lower all week, fueling a rally in the market. All those have reversed today. Dollar's higher, yields are significantly higher. Crude oil is up 1.7%. That weighs on stocks. And like I said, a little bit of nervousness ahead of Jerome Powell tomorrow because, the difference between what the Fed wants in terms of interest rates and what the overall market wants may be a big out trade there that Jerome Powell may have to address tomorrow, Nicole.
Right, understood. Yeah, a lot of talk about whether or not the
Peloton,
50 basis points, 25 basis
Goldman Sachs. Let's see, SOXS. Pushing higher. TZA. Pushing higher.
Snowflake down over 13.5%. Earnings per share were a beat, 18 cents versus 15 or 16 estimates, depending on who you read. Revenues, $868.8 million versus 849.6 estimates. So a beat on earnings per share, beat on revenues. The guidance for third quarter, $850 to $855 million in revenue for a full year 25, fiscal 25, $3.366 billion in revenue. Now, Oppenheimer put out a note saying investors are concerned about competition and Snowflake's ability to execute in AI. They think the revenue upside smaller than the previous quarter.
All right, NVIDIA, good thing. We could see a little pullback in NVIDIA before earnings, and then earnings come out and just kick ass, and we gap up. So I would agree with Jason. The best thing for now is for NVIDIA to pull back a little bit with the expectation that we're going to bounce next week when earnings come out.
Chief Investment Advisor, EGSI Financial. Thank you for being with us. How do you feel about the market? And look how we're selling off throughout this day. What do you attribute this sell-off to?
Well, I think it's there's a lot of anticipation on Powell's comments this week, and depending on his comments, because sometimes they're not what everyone's expecting. I think it's going to have a huge determination on the outcome of the market. With the jobs numbers coming out being revised downwards so much, over 800,000 jobs, I think Powell's playing catch up again, just like he did with inflation, and he's going to have to lower rates. I think it's going to be at least 50 basis points. I really believe that, and the market's going to rally after that. But they really want to wait and see what Powell's comments are going to be.
That's interesting. So you feel pretty certain about the 50 basis points because there's the argument as to why there shouldn't be 50 basis points. What do you tell those folks? Why is 50 the right amount?
Well, you know what? The revision of the jobs numbers, really just reaffirms what we've been saying. That we've been in a rolling recession for a long period of time, especially when it comes to manufacturing and housing, and the disparity.
All right, we continue to fade. Continue to fade.
In order for Powell to have lead the legacy,
TZA.
soft landing everyone's talking about, he's going to have to lower rates and make a big push to lower rates sooner rather than later.
All right, so yields.
If the numbers were accurate,
Yields bouncing. A little bit, not a whole lot. Let's see what junk bonds look like. Junk bonds. Okay, junk bonds starting to show more weakness, but still up there at the highs. What's Tesla doing? Tesla continues to drift lower. Tesla.
So this is, it's expected. We're going to continue to see a lot of volatility, but I think we have a very narrow window between now and the election. And the market is going to react positively when Powell lower rates, even if it's just a quarter.
Tesla.
But if we get that full
240, 245. Tesla.
We're going to rally between now and the election, but the election is really going to determine what's going to happen to markets going forward.
And at this point now, what about some of the other things such as gold, oil? I mean, how do you feel about some of those commodities?
I love commodities. I've been a big fan of commodities over the last couple of years. Oil has been down, and obviously it's coming back up a little bit. Gold, I know people are saying that by the end of the year it's going to be 2,600. I think it's going to be north of 2,700 by year end. Again, depending on the outcome of the election. But I like commodities. They're a big fan.
Yeah, it's interesting. As I look at the market here, and you do think that commodities, for example, you mentioned gold heading higher. What's the takeaway here for the consumer?
SQQQ, nice little bounce.
Because if the consumer
SQQQ.
and they don't spend, that'll kill GDP, and then you have a recession.
SQQQ.
And we're already starting to see that. I mean, consumers are already starting to spend less right now. When you look at
What's UVXY look like? UVXY.
So people are already starting to pull back.
UVXY.
We're seeing that through.
All right, hit the highs, pull back. VIX.
Are not as far out as they were.
VIX. Okay, that hit the highs.
We're already starting to see the slowdown.
I don't think we're going to get near 30 again. Maybe 20.
And that is, reduce government spending,
We've been up for 14 days. 14 days off the low. 3 weeks ago, we put in a low on a Monday. So not unusual to see some weakness.
So everyone's trying to wait to figure out what's happening, and
Qs are 25 to 1 down. Qs are 25 to 1 down. So let's take a look at the New York FANG index. Okay, big bearish candle. All right, so RSI turning down. RSI will drop below 50 here shortly. RSI. So hedge, just hedge. If you still have a bullish leaning. Okay, this is turning down. This will turn red shortly.
when you're trying to spur on economic growth, that is not the way to do it. There's three things that we need to do. It's opposite of those two things right there. What we need to do is lower corporate tax rates. We need to get rid of regulations and reduce taxes on the middle class and the working poor, because the the working poor, that growth, it continues to expand all the way through the middle class right now. People are having a really hard time just meeting their bills at the end of the month, which is why credit card debt is gone so high.
Yeah. Ed, it's great to see you. Ed Siddell.
New York Fang is telling you that you should be cautious, bearish, neutral at worst, neutral to bearish at worst. But we definitely rolled over, so price action is telling you what to do right now. You might say, well, we'll probably bounce right there and close right back up to the highs. I doubt that's going to happen, but it's okay to have that idea in the back of your head. You just got to see price action do it. Right now, price action is weak. Weak, weak, weak.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Little bounce, little bounce. Okay, let's look at breadth. Breadth should be echoing what we're seeing. Should be moving lower. Okay, for now it is. It's still above zero, but pulling back. NASDAQ pulling back the fastest. It was also up the fastest the last couple of weeks. Okay, let's look at NYSE. Okay, that dark line is still moving higher.
Welcome back to the Watch List. I'm Nicole Petalidi. It's time for Options Corner every day, where we analyze unusual options trades that we've seen throughout the day. Schwab and Tom White, host of the market here on Schwab Network. First thing is taking a look at Washington Hers, with Washington Health, which has been a clear winner. It's up over 80% this year. And you found a bullish trade, so there may be some more upside potential here for this name. Let's check it out. Tom?
Yeah, the stocks had a really good run this year. A lot of that is probably based on the fact that they're going to start carrying those GLP-1.
All right, looking for another little bounce.
Last quarter was only about 15 million in sales. It's only about 5% of what they did. Now they grew revenue over 50% last quarter from year-ago levels on that over $300 million in revenue. And that's based on, that telehealth medical care, whether it's skin care, hair care, mental, sexual health that they're selling. That's the big component that's made up a bunch of their earnings, why the stock's higher. But I think there's that optimism based on the GLP-1 drugs moving forward. Now, Needham came out with a note today, raised their price target on it to $24, initiated with a buy rating on this, and they said that more positive than negative impact from GLP-1s coming down the pipeline for the company. $1 billion in revenue, growing 40% plus is what they expect. So pretty positive note out of Needham on him and hers today. And we saw some unusual option activity also in there. This was out in the September monthly cycle, so about 29 days till expiration. Saw a trader buy 1,500 of the 19 strike calls in here. He paid only a debt of 60 cents. These are out of the money to the upside. to that break even of 1960 over the next month here. About 17% above the current share price of him and hers. Call volume about double normal daily average volume that we've seen over the last week of trading. So yeah, people keep plunging into this one. As you mentioned, it's up about 87% so far this year, so it's had a good run. This trader thinks it's going to continue over the next month.
Yeah, 87% this year, 150 almost for 1 year. And to your point, will move higher possibly. Needham has a $24.
S&P cash.
It's just, I guess there's still a lot of optimism about the potential for this.
Trying to bounce now. Probably gets back a little ways, I would think. But the trend is changed.
Over 130, now down about 3% on the pullback in the overall market. But this is all going to be about earnings next week on the 28th. Nicole, can they continue their about average $2 billion beat on revenue? I think those are the expectations going in, anywhere around 30 billion.
S&P cash trying to muster a bounce.
Revenue of about 28 billion. Will they be able to achieve that? Well, they're having some delays to Blackwell chip. That might cause some concerns, but demand continues to outstrip supply at this point. Citigroup kept a buy rating on it today. They came out with their $150 price target, but they did say that the delay in the Blackwell chip won't have that much effect because they've already got a backlog of orders, and that wasn't supposed to be released until the fourth quarter. Anyway, HSBC yesterday raised the price target to 145 from 135. And that AI demand is going to be the driver for this one going into earnings. But we did see some unusual option activity. I think trying to take advantage of that earnings event because these options trades were out in the August 30th weekly cycle, so 8 days to expiration. You'll capture that earnings event next Wednesday. They bought over 20,000 of the 130 strike calls, paid an average debit of about $7 on those. So the break even for these traders at 130.
Okay, watch hologram starting to move higher again. Hollow starting to move higher again.
Calls have traded on the day in there today, Nicole. So we typically see massive volumes on a daily basis in NVIDIA. But this is that one earnings event that could turn the whole market because it's such a big component within the S&P 500 and within the NASDAQ 100. And yeah, we'll have to wait and see on that one. But some bets to the upside here on option activity.
And you know what? No one is out on NVIDIA. Not yet. They still love it. I know you're talking about the Blackwell, and we wait for that. The Hopper.
Roblox, RBLX. Nice follow through on Roblox. Nice.
Nicole, it seems like they had active investors getting into this one. The stock ran up to about $123 a few months ago, and now back down around that $90 level. It's kind of fallen out of favor. On their last earnings report, they said they expect flattish attendance at their parks. So that's a concern moving forward, even though they're coming out with some new attractions across the multitude of their parks. They're adding more cruise lines. ESPN Plus is going to be a standalone app in 2025. But earlier today, Disney Board of Directors named Jim Gorman, the former CEO or chairman of the board of Morgan Stanley, and they named him as the executive chairman to their committee for succession planning. They've also got Mary Barra on there. Also Calvin McDonald. So they got some heavyweights on this board as they look for a successor to Bob Iger moving forward. That was the news out on it today. It's not helping the stock much, but over the last 5 months, it's fallen from that $123 level. But that being said, we did see some unusual option activity in here also. And this was out on the August 30th.
All right. Goldman.
Days to expiration. Trader bought in the money call. The
Okay, Goldman.
Over 3,000 times. Paid an average debit of about $2.26, so that break even of 91.26 over the next 8 days.
Hello, Goldman Sachs.
Buying some deeper in the money.
GS.
Value on the over the next week that we're going to see some more gains for Disney, and it's been a rough stretch for this company over the last 5 months.
Yeah. There's so much.
Oh, yeah, looks good.
Succession plans, to oversee
GS, Goldman Sachs,
and what happens there. But Disney is certainly, it was such the darling. But Disney,
October
I think
14th.
on the last subscriber growth, I can't remember exactly, right? Didn't they do really well in the last subscriber numbers?
Yeah, on their streaming platform, they finally made money on that. It wasn't a lot. Yeah, it wasn't a lot of money, Nicole, across their different platforms. But then you've also got that purchase of the
Where's
last remaining
Goldman?
stake of Hulu, and they keep jacking up the
497.
price on that, the expectations on that moving forward. So a bunch of headwinds on this company, and now that Carl Icahn's out of this stock, he got out of his segment that he was in when he was trying to put people on the board. He and Triad Partners also were trying to get members on the board. And once the stock went up after the activist investor news, stock's falling from those levels.
Yeah. He was giving credit, to Bob Iger, because he was like doing that proxy fight and sort of threatening and then just saying that they had turned it around and doing the right things. And so the stock moved up, but now it's going back down again, right? Well, it's a little bit better now. But thank you, Tom White. Always great to see you. Thank you so much for Options Corner every single day here on the watch list. Well, coming up, former winner during the pandemic. Then it wasn't. We're talking about Peloton. But guess what? It's back up today in a big way. It's up 27% today. Let's see why and what's going on in the turnaround plans. We'll be right back.
Okay, hello. Penny stock. I'm just going to watch this for a minute for the fun. Looks like it wants to break out. Similar Roblox, obviously different sector, but Roblox having a nice pop. This is exactly what I'm looking for on Hollow. You can see how price action went sideways from about 12:30 on, and then we had this breakout following through on yesterday's bullish volume. So 45.50 to 46 is the target on Roblox. Don't buy it at the high of the day. The better opportunity was when the markets were moving lower. This was hanging out above VWAP. Roblox looking very strong. Okay, so I'm looking at Hollow. It's a penny stock. Just for fun, watching this one. Looking for the breakout. See if this can't go for $1. By tomorrow would be nice.
Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So, what all this for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on
Schwab is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab.
Hello.
Hello.
I'm
Tom White. I'm Kevin Gates. Catch me on Fast Market. Weekdays at noon on the Schwab Network.
Fast Markets, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Fedelides, live on the floor of the New York Stock Exchange. Former pandemic darling. After getting pummeled, is getting
The weather, it's getting to be that weather now where you don't need AC at all. You just open the windows. Nice out.
I mean, 37% in one day after the earnings. It was a nice beat. They ended the revenue decline. Good news here, huh? Why?
First off, Nicole, thanks for having me on. It has been an impressive run in the stock today so far. They did eke out a year-over-year top line growth figure for fiscal 4Q, 0.2% year-over-year top line growth, and they did deliver a positive adjusted EBITDA result in the quarter, which was not what was necessarily expected. But overall, the $200 million cost out plan,
Looks like Hollow's going to go.
seems to be on track based on management commentary. They realized 15 million of that in fiscal 4Q. But on the other hand, there are continued expectations of revenue declines in fiscal 25 based on management guidance, not to mention connected fitness subscriber declines expected based on management guidance. So it seems that the cost model or the operating model of finding cost efficiencies and operating leverage is what's driving a lot of this story.
HOLO looks like it wants to go.
And the guidance for next year still are not implying growth at the moment.
Yeah. Look, I mean, I think about what Peloton is, right? It's the bikes that everybody got everybody going. It was the treadmills. The rowing machine never really happened or took off. So, but they're doing well. They have the Bike Plus rental business. They are focusing a lot.
Hollow has got up at 90 cents is where there's a lot of supply. 90 cents on Hollow. The penny stock, just watching it. Cayman is trading this one. I got some shares as well. Looking for a follow through. Let's see what happens here.
Well, the ability to acquire subs, as we've written in our research, is still, in our view, reliant on the ability to sell hardware. And the rental model was a way of bridging that gap between spending all this money on the hardware up front versus acquiring the subscriber. But the rental model for refurbed bikes essentially relies on the 30-day return policy and to see consumers make that return. And so actually the regular bike rental program has been suspended because there is insufficient.
Okay, so here's your 60-minute. Here's your 60-minute S&P 500. So you know the story. You're bullish above the 20 EMA, you're bearish below, or at least neutral. So watching the S&P 500.
We haven't revised anything since the result. Those are our estimates going into today's result, and so we have to assess what the company's prospects are given their guidance and the trends that they've been.
All right, S&P is trying to turn the corner. Remember, the hedges are just that, hedges. I have longs. I want to protect the longs, neutralize my portfolio. So the hedge is exactly that. It's just a hedge. So I'll hold those unless we, like, for some reason, just rally like crazy into the last hour and a half. I don't see that happening, but damage is done. We're below 5,600. Maybe we get back above 5,600. We are above 5,600. No, that's futures. Okay. So we need to see a nice follow through. Right now we're watching the 60-minute. 60-minute, the rule is bullish above the 20 EMA if it's rising, bearish below the 20 EMA if it's dropping, and that's the case right now. We're rolling over. First day. So that's why the hedge, all right? So we could bounce and get back above the 20 EMA, in which case I could take the hedge off tomorrow.
And so the incremental sub and the incremental hardware purchaser may be a broader subset of the consumer than what the initial.
Okay, getting rejected. S&P.
Yeah, and then the big picture here, this is top, right? The mirror was bought by Lululemon, right? And so, Peloton, I wonder, there was a time that people were looking at Nike or Apple or Amazon to maybe buy Peloton. Did you ever think of Peloton as a takeover target?
Well, what we can say, we can't speak to any kind of transaction potential, but what we can speak to is that we've seen deals done in the past in this space, and not too distant past. We did see Google acquire Fitbit in 21 for $2.1 billion. It's a real question of what to do with the hardware business versus the content and the subscription business. And Peloton has shed its vertically integrated hardware production and logistics piece, so that makes it a lighter asset.
Yeah, that makes it actually probably easier to purchase. But as you said, you can't comment on potential deals that may or may not happen. That was a good one. You brought up with Google and Fitbit. I forgot about that one. Good one. Good to see you, Paul. Thank you so much. Paul Golding at Macquarie, U.S. Equity Research. Still ahead, we'll focus on why the energy sector is seeing increased activity lately and why it's an active space for investors. We'll explain. Be right back.
S&P just grinding back up. S&P.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennie.
Peloton, watching the reversal here. Peloton. You guys looking at Peloton? Okay. A nice move on Peloton. Looks, are they somebody gonna buy them out or something? Connected fitness company, Peloton said will start charging a one-time $95,000 activation fee for new subscribers that bought used hardware on the market. Okay. Roblox doing well. Okay. Peloton at the highs of the day. We'll look to get some Peloton shares tomorrow if it pulls back a little bit, or start at the open tomorrow. Looking for a follow through in Peloton.
optimization and track market trends with up-to-the-minute news and insights. Trade brilliantly.
Welcome back to the Watch List. I'm Nicole Petalidi, coming to you live from the New York Stock Exchange. Glad you're with us. We have been seeing some selling throughout this day, certainly higher VIX, right? Some nervousness ahead of Jay Powell's speech tomorrow. 90 minutes left in this trading day. And you can see some down arrows now after we had gone over the unchanged line earlier in the day. So here you go. The Nasdaq's down 1.3%. The S&P's down 0.75% at 55.79. Let's get to Ben Lichtenstein, senior futures contributor here, taking a look at the markets. Some things that stand out to you with 90 minutes left today.
Yeah, red arrows across the board, Nicole, that's for sure, right? All four of the major indices coming under pressure after initially starting off the day with a little bit of a lift.
There goes Hollow.
Trades within 30 points of the all-time high that we saw back in July. Let's take a look at the move lower off that upper level that we saw earlier this morning after jobless claims and some of the other data this morning. The market seems a little bit concerned heading into Fed Chair Jerome Powell.
Hollow breaking out.
Jackson Hole tomorrow. And in some ways, maybe no surprise, right, Nicole? You can see pretty easily identifiable trend here. Again, as I mentioned, within 30 points of an all-time high. That's that top left corner here, 56.43, all the way down to 55.63. I mean, that is a wide range trade, almost 100 points lower today off those highs. Take a look. The reason I'm not surprised that we're seeing a little selling is maybe some of those short-term long positions that were put on the rally we've seen off the August lows that spiked down to that 5,100 level. Maybe some covering or closing out of those positions ahead of Fed Chair Jerome Powell. Could be a big day tomorrow as well. But again, inching our way back up towards these upper levels, these all-time highs is extreme. And I guess, well, by definition, we don't spend a lot of time on extremes, right? So look for it either to get rejected or for us to attempt to break out here and try and get back something going into new historic levels, Nicole. But again, I think tomorrow's going to be somewhat pivotal.
Yeah, even today, I mean, we've seen these big swings, right? We were down 300, now we're down 200. We were in the positive. Certainly the search for direction and wanting of clarity. Maybe we'll get some of that tomorrow. And then in the meantime, Bitcoin, which sometimes doesn't move on a risk-off kind of day, is still at that 60,000.
Peloton.
Yeah, Bitcoin's kind of been
Peloton. I wouldn't be surprised to see a little profit taking soon, but it's holding the highs pretty well.
62,000 actually, but it's again kind of just a drift here right now as I look at price activity. Let's begin with a 1-minute candle chart. The rally up to that level again, well, just shy of 62,000, 61,995, and here you can see again, as mentioned here, not a lot of conviction one way or the other. A little bit sideways action today. It's step back. Look at the daily time frame. Longer term chart, the candles going all the way back to, we're talking September of last year, when it was trading down around that 24,000 level, all the way up to all-time highs, 74,415. But since, again, kind of a drift, series of lower highs, series of lower lows, rejecting this level we saw briefly below 50,000. Again, if you remember, while the broader market was selling off a couple of weeks ago in the beginning of this month, but it really hasn't participated. Remember, we were just looking at the S&Ps, which found their way back up near those all-time highs. I mentioned just 30 points off it today. Well, you can see on this chart how crypto's struggled a bit, to say the least. And again, just now trying to work its way back through the middle of the range that the S&Ps have worked their way back towards the upper extreme thereof. So let's keep an eye on this. Maybe a bit of a canary in the coal mine, one could argue. If we roll back over and take out those lows from around 50,000, this will possibly be, again, one of the telltale signs there.
Yeah, understood. All right, Ben Lichtenstein, thank you so much. Good to see you, Ben. Good luck there at the markets and Bitcoin as well. We'll turn our attention over to energy in the space over there. Right now, oil is at 72.94. There's been a lot of swings that are happening there as well. We saw $80 not that long ago, and then we moved to some recent lows. So what's going on here? Roy Barron, co-president, co-CIO, Westchester Capital Management, a space you follow closely. What are your thoughts on what's happening as we hover around in this range?
Hi, Nicole. Nice to see you again, and thanks for having me. Energy is a consolidating sector, if you go back 12 months, the trailing 12 months has been almost $500 billion worth of mergers and acquisition transactions. That includes subsidiaries, not just mergers and companies. And there are a ton of reasons for it. There's the move to there's a transition away from carbon into renewable energy. It's made a lot of these companies more valuable. They weren't worth much when everybody was, when oil was cheap, but oil's moving up. There's regulatory standards that are changing that make it much more difficult and much more expensive for companies to produce oil. In addition, there are other companies that, as oil runs out in their reserves of where they're drilling, are looking to expand geographically. So we're seeing cross-border deals as well as domestic deals.
Yeah, I think it's interesting how you talk about how the transition in this group overall, we've seen that in technology, right? Old tech, original tech, and how these companies have to evolve. To your point, in this case, in energy, moving to and evolving to renewable energy, which does provide new opportunities, perhaps. When you look at these names, I mean, within the group, does there seem to be winners and losers in your mind right off the bat?
Well, we look at companies that are involved in mergers and acquisitions. We don't really speculate as to the future targets. But once they're announced, what we're seeing is a trend towards consolidation, towards your old line oil companies picking up the new technology, because a lot of this, the decarbonization requires a lot of technology and technological know-how. So sometimes it's cheaper to buy than to build, and we're seeing that a lot. But there's also a lot of consolidation.
Peloton moving back above.
Reserves as the energy boom kind of fades out a little bit, and the economy may.
What's S&P? 0 days just sitting here doing nothing. 2-1 down volume in the New York Stock Exchange. 2-1 on the Nasdaq Composite. 3-1 down volume on the SPY. 10-1, 10.7 on the Qs. 4.7 on the Diamonds, the Dow Industrials, and nearly 3-1 down volume on IWM. So I'll keep that hedge on TZA. And looking at SOXS. Okay. That got rejected. Semis got rejected at the 50-day SMH. That's the main reason behind a hedge on this one. Okay, so looking for a higher low. So with the lower high for now, a higher low probably back down here at the mean in the middle of the Bollinger Bands. Makes sense. And then a push higher into September, October. So hedging right now, not really trying to call a direction. By the end of the year, is now in litigation or actually arbitration, which Peloton. Peloton at the high of the day. Nice reversal on Peloton. It's expected to close sometime in 2025. The arbitration starts in May, but it's trading. That's why S is trading at significant value, significant discount. Peloton, if it does make a change in direction, this could be a decent move, maybe a double. Discount on an annualized basis to what you're going to receive when the deal does close. Plus, you flip a coupon in Hess. While you're waiting for it to close, you receive dividends.
Right. Marathon, Conoco, another interesting one to you?
Yeah, that's a good one. It's pretty straightforward, or it's, people may call plain vanilla, meat and potatoes, or whatever you want to call it. That's about $16 billion. That also, as you can see a trend here, sometimes deals are for cash, sometimes they're for stock. This is a tax-free exchange of Conoco shares for Marathon. You're getting about a quarter of a that's also trading at a decent discount. I mean, if you own Marathon, by the time it closes and you end up with Conoco shares, you're going to make about 9% annualized. Plus, you're going to receive, the dividends if it extends longer. They also expect to close that in December. It's gotten a little bit of antitrust scrutiny. So the government has asked for additional information about the transaction. We don't expect that to encounter a problem. We do expect it to come in for a landing fairly smoothly sometime in December by the end of the year. But there's a number of other, as you pointed out, there's 10 pending large billion-dollar-plus deals.
Yeah, we had the graphics up. Our graphics team did a good job getting those up there, remind people some of these deals because there have been so many. How much does the price of oil matter in these deals? I mean, because it wasn't long ago we saw it at 80, and we got pretty close to 70 recently as well. How much does the price of oil matter, and where do you think oil is headed?
I think it matters to the extent that companies are buying other companies for cash. The value, if you do a net asset value of an oil company, you would include the value of their reserves as well. But when you're doing a stock-for-stock deal, the value of the acquired stock will go down and up along with the value of the target. So for these particular transactions, the price of oil doesn't matter. And in addition, and we actually just got off the phone with Chevron talking about the Hess deal, they take a very, very long-term perspective. I mean, the gentleman at the IR contact over at Chevron said to us today, he goes, we're in this thing for the long haul, multi-double-digit years. And so we're in this as a combination. There's cost-saving efficiencies, and we think it's going to be a great deal.
Okay, Peloton looking for a change in direction. Oh. Okay, breath-wise, we're still looking at a downward leg probably, unless something changes. All right, it's S&P moving higher now. Okay, tick is tick is at 336, moving higher, tick. So with an hour and 12 minutes to go, we've got some nice follow through so far. Okay, semiconductors. Let's look at NVIDIA. NVIDIA turning the corner. NVIDIA turning the corner.
Come on, Carl's the only choice you need, right? Neil, tell me you know this. Gotta run, Carl.
Schwab. Have a choice in how you invest with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support in the Schwab trading.
NVIDIA, looking for a change in direction. NVIDIA.
And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
The risk is that we could continue to move lower over the next day or so. So although we're pretty well extended to the downside, we could see a bounce. I'm hands off at the moment. Wolf, you're looking at Wolf. Okay, you got buyers at the low of the day. Wolf.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network. Welcome back to the watch list. I'm Nicole Penelides. We're taking a look at Agilent Technologies, which pretty much flat, a little bit higher on the day after its quarterly report. And it had a slight beat. And the thing that everybody's talking about is that the lower end of the range was raised for the guidance going forward. And that's viewed as a positive. Joining me now, Julie Utterback is with us, senior analyst over at Morningstar. I know you kept your fair value target, I believe, at 151. But the highlight of this report was that on the outlook, the bottom was raised a little bit, right? What did you think of that?
Yeah, thanks, Nicole, for having me. Yeah, I think you summarized it very well. From our perspective, if you take a look at what happened last quarter back in May when they lowered their targets for this quarter and the rest of the year, it was a really solid print. They exceeded expectations, those lowered expectations this quarter, and it was nice to see them solidify that guidance with pushing up the bottom end of that range instead of backsliding like they did last quarter. Nice to see that guidance solidified and on target still.
Yeah, understood. You know, when you think about the business that they're in, life sciences, diagnostics, chemicals, how is the business overall? Is it a growing business? I know there's competition, but do they have potential for some great things ahead?
Yeah, they sure do. I would highlight that, obviously it's been a tough couple years for the likes of Agilent and the other life science tool makers post-pandemic. They've been in this reset period in 2023 and 2024, but the long-term underlying growth drivers of this business still remain intact. Think about one of their biggest end markets, pharmaceuticals. They're connected to the growth of pharmaceutical volume, and that's a really nice place to be frank with you. And, management highlighted on the call yesterday that, lab activity at their customers was really good. They, solid mid-single digit growth in some of their recurring revenues, so those consumables and services that help those lab instruments run. However, they still need to get over some of these challenges, specifically those instrument sales. They're high ticket items. They've been delayed in this uncertain environment for over a year. And so, that's been a pretty tough situation for Agilent to be in. Also add on top of that, the situation in China, where there's been a big macro decline there for not only Agilent, but other life science makers as well. And so we've seen a big decline in demand from that business. And Agilent's concentrated in instruments and China. So it's had a rough go, but it looks like things could ease in terms of the pressures there. And in the long run, we'd expect Agilent to be able to return to more normalcy in 2025 and beyond, getting back to more mid-single digit top line growth and probably high single digit or low double digit earnings growth in the long run.
Okay, it looks like Hollow wants to keep going.
Improvement in those areas in 2025. That would be a good thing. That would be a plus for the company. But
The high at the close on near the close on Monday was 70 and change, 70 cents and change on Hollow.
So you do foresee better days ahead. What's the catalyst for that?
Yeah, I mean, I think there has to be more certainty at the end customer. As management said on the call, pill volumes are still increasing. So eventually you have to replace some of those systems in the field. And actually their book-to-bill ratio on instruments this quarter was above 1 for the second quarter in a row. So that's a good sign for future instrument sales. Getting those end market customers more comfortable, it seems like on the order front is a good thing. Also in China, obviously the comps get a lot easier here on out, but there's a government stimulus program that's going to be coming down the pike here later this year or early next year. And so we should see some improvement in demand in that geography. And again, that's a pretty big percentage of Agilent sales. So to see that turn back around would be important for Agilent.
And Agilent, you have 3 stars. I'm out of time, but are there any names that you do have 4 stars on, Julie?
Not in life sciences right now. I wish we were talking a year or so ago. We had a lot of undervalued names when this reset period looked like it was going to last a little longer than it wound up lasting. And
right.
Okay. So
we'll leave it there. You make a good point because Agilent is up 20% in 1 year, but year to date is relatively flat. Thank you, Julie. Appreciate it. Julie Utterback, senior analyst over at Morningstar. Good to see you. That's going to do it for us here on the watch list. Thanks for being with us. Market on Close is next.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
Okay.
Impact your financial future? Next week is going to be a crazy political week. Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed. Stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money. With a history and a geography degree, how did
NVIDIA. Okay, just drifting a bit lower. NVIDIA. Okay, so SMH, lower highs, lower lows. Currently looking for a higher low. Not much to do at the moment. What's AMD doing? AMD did manage to run up into 245. Had a nice run up off the low earlier. Made a new low. Okay, AMD. So semiconductor is looking pretty weak. Let's see some of these names. Intel, bear flag on a daily. Lam Research, LRCX. All right, KLAC was very active last couple of days. It's also reversing, pulling back a bit. Applied Materials, also showing weakness. Broadcom, AVGO. Then I had a nice rally over the last 13 trading days. Today, reversing off the upper bands and watching the 50-day. So if we hold above the 50-day, maybe this one's going to be better than the rest. SPY turning over a little bit.
Pretty much across all 11 sectors.
We deployed a fantastic array of new technology. The companies that are
ASML, that had activity this morning. That also turned over. ASML. Analog Devices pulling back. So all the semis, most of the semis that we follow are pulling back. On Semiconductor, Micron Semiconductor. All right, so all of these are pulling back. Okay, for now, that's the way it looks. That's the way it looks. Okay, who is oh, we got a report tonight. All right, we've got okay, tonight we've got earnings. Tonight we have earnings. Workday, Kava, Bill.com, Intuit. Is that this week? It is this week, right? Yeah, the 19th. Okay. So Kava, Workday, Bill.com, Intuit, Ross Stores, Red Robin. Okay, so the last couple of retailers did really well. TJ Maxx, maybe Ross Stores has a move. Okay, that already gapped up. Ross Stores has earnings. Can't really do anything with it now because it's already elevated. Ross Stores. What's Abercrombie and Fitch doing? Abercrombie, okay, holding up above the 50-day. TJ Maxx gapped up, holding. Dick's Sporting Goods. All right, following through. What Macy's? Macy's had earnings on Wednesday morning. That's still sitting at the low. Target had earnings. Target. Okay. Looked like it was going to reverse. Now it's reverse moving higher. Now it's reversing, moving lower. Target. What is Uber doing? Uber. Okay, flagging. And Lyft. Lyft. Okay, Lyft is still hanging in there. All right, the cybersecurity stocks like Palo Alto, those are reversing a little bit. Zscaler sitting on top the 200-day. Will this be a lower high? Right now, we've got sellers or people who want to get out at 203 and 208. They got stuck when prices moved lower. So we need to get through 208, 208.50. Okay, sector-wise, XLB Materials, been moving higher. Buyers at the low of the day. XLC Communications, that would be Meta, big name in the communications sector. Meta sitting here. Okay, Energy's been bouncing, but not going anywhere. Financials, Goldman Sachs, looking for Goldman Sachs to follow through. Got a triple top. If the banks take off, that would be a great sign. JP Morgan looking good. Goldman Sachs, Morgan Stanley looking for a follow through. Wells Fargo. Okay, PNC Bank. Some of the smaller banks, Ozark. What about PacWest? No, that's Palo Alto Networks. PacWest is PACW, right? PACW, PacWest. Did they get bought out or something? PacWest. Yeah, they must have got bought out, right? PacWest. What about HBAN, Huntington Bank shares? HBAN. Okay, HBAN looks good. Huntington Bank shares. Okay, Goldman Sachs looks like it wants to push higher. Looking at the 5-minute chart. Okay, small bank.
The notion that we were going to get a big dramatic move from the Fed seemed to be the message again after downward revisions. Here's the catch, though. We're kind of running out of time, and the data's not that terrible. The force 50 basis points, I don't think, and we haven't got any messaging from
GDS.
So we probably still have to extract.
Okay, that one's on the move. I wouldn't chase it, but yeah, it looks good. Peloton still pushing. And pulled back in just now. Okay.
Now it got to the 120, which was a pretty nice breakthrough, but still not enough to get us above the July highs around 135. So instead, now what you've got on the chart is a pretty easy course correction.
Oliver bloviating his ideas on NVIDIA. NVIDIA, yeah, it's been making lower lows, lower highs. Looking for NVIDIA to pull back a little bit more, and then for earnings, pop back up.
Speaking of the Fed, let's get over to CNBC's
who is at Jackson Hole ahead of an important day tomorrow. Hey, Steve.
Yeah, hey, Carl. Market attention is focused on Fed Chair Jay Powell's speech tomorrow morning here at Jackson Hole, and hopes are pretty high. He will lay out a dovish path for rates risk with UHA and Evercore ISI, right? And we expect Fed Chair Powell to use his Jackson Hole speech to explain why the Fed is now sufficiently confident inflation is heading back durably to 2% to begin dialing back rates soon, September, he says, and provide a basic framework for the cutting cycle ahead. Philly Fed President Patrick Harker affirming that sentiment this morning, telling CNBC here in Jackson Hole that he thinks the Fed needs to not just cut and start cutting in September, but to begin a series of what he called methodical cuts.
It was all inflation for a while. Right. Now we're starting to see things, the balance of risk getting more equalized. So we do need to take more into account when it comes to the labor market, for sure.
What does that mean, taking more into account?
Well, I think
Peloton.
this September we need to start a process of moving rates down.
All right, we got less than an hour to go. An hour to go.
Say if he's in the 25 or 50 basis point camp, it's going to depend on the data. Powell can be expected to be held back a little bit by an inflation and employment report that's still to come between now and the next meeting. The market fairly aggressively.
Okay, so Huntington Bank shares. That one looks pretty good. Huntington Bank shares. Nice little bounce back up. Huntington Bank shares.
Bouncing back and forth, a 50 or a 25 in November, but pretty secure about 100 basis points between now and the end of the year. While those minutes yesterday suggested good agreement on the committee about the direction of policy, still some disagreements out there about how far and how fast to move and just how restrictive policy is right now. Powell's going to obviously reflect on some of these disagreements in his speech. Okay?
Steve, I was just thinking about those in the 50 camp.
Huntington Bank shares.
JPM, Citi, Wells, all arguing for 50. You know who else is in the past few minutes, Steve, is Bharat Ramamurthy, former deputy director of the National Economic Council, on the tape saying the FOMC should strongly consider 50 in September.
I saw that. It's an interesting question about whether or not you want a down payment on getting where you need to go. And that's really the question. I ended my report there, Carl, with that question of how restricted the Federal Reserve is. So think about, I don't know, maybe a spotter in the Olympics where you were a week or so ago, right? You want to be close enough to catch the person if they're going to fall. So how does the
JP Morgan. Looking pretty good.
to be able to provide stimulus to the economy? Where is that point? If you think about and do the quick math on the 3%, say, or 2.8%, whatever you want to call it, neutral rate, the Fed at 540, it has to get to a place where it can help or catch the economy if it falls.
JP Morgan with a triple top, either a triple top or a breakout. Okay. So if we do see the volume looks pretty good there. I don't know. Volume looks to me like institutions have been picking up shares over the last couple of weeks. If you want to own a bank and you're an institution, what do? You probably buy the best bank out there. Debatable, but best bank out there is considered, I guess, JP Morgan. Last time I looked, Citigroup had the best book ratio, price to book. It's not moving much. Wells Fargo. Okay, Goldman Sachs does tend to move a lot. Looking for Goldman Sachs to get going. Okay.
The issue for the equity markets is that if you look at the Fed Fund futures, they're pricing in a 3.5% Fed funds rate 1 year from now. So when you walk away from tomorrow, I think he'll be very dovish, but is it really going to change that expectation even further than 3.5% 1 year from now? Very unlikely. So I think their words will be parsed tomorrow. We'll see some volatility, tomorrow around that, but I don't think the narrative is going to change. The cut cycle is about to begin, and it's going to be fairly aggressive over the course of the next year, in my view. Now, in terms of how equities play out over the course of the next 6 weeks, we all know that seasonality around September and October is very negative, but that's not enough. It's really what else is going on. We've had this 8% rally over the course of the last week and a half. A lot of it has been on systematic buying, meaning CTAs, vol control funds, buying stocks because vol has come in.
Markets are just stuck to the bottom.
Stages. And what we have ahead of us is we have an economy that is slowing, and our view is that it is going to continue to slow because the things
Okay.
Policy, high prices, and declining excess savings are all going to continue.
S&P
for the
500.
next 6 to 9 months. And so we think
Okay,
this
we'd
is
like to
a
see us back
signal
above 5,600. So we're
continue in a downward direction.
Peter, it doesn't sound
down
like
here near negative gamma.
looking at going longer volatility and that consumer fundamentals in aggregate do look to be softening, right?
That's right. And I would agree with Eric's viewpoint. And I would say, look, it boils down to a simple question: what's priced in? How can we really reasonably get 100 basis points of cuts implied by the Fed funds future market? 3,500 trading at 23 times 2024 earnings. That seems like a real cross-asset disconnect. I would further in the rates market point to the inversion of the yield curve, which has been persistent for some time, but we're still at about 135 basis points from 3-month to 10-year. Mr. Harker just expressed the reason that not only is inflation going in the right direction towards 2%, but he's concerned about the labor market. So I agree. The messaging tomorrow will be balancing the risks between inflation, which is done, and it's been done in our view for some time, and risks to growth. And risks to growth are really going to be in the forefront, especially with asset prices where they are. You don't get a spike in VIX to 60. Inversion in the yield in the VIX futures curve for 12 days by 3 points without there being some underlying structural concern.
That's an interesting thought. What do you make of that? That quick preparation into this?
Yeah, look, I think that clearly, we always have to take into account the reflexivity between monetary policy and financial conditions. But I want to take a step back here and remind everyone that equities does not matter for the Fed. It is not the Fed's job to prop up equities. It is corporate credit. And so when folks are talking about starting off with a 50 basis point or, God forbid, intermediate cut, which is where we had gone to.
What's LQD doing? Talking about the Fed supporting credit. LQD continues to push higher. Corporate grade, investment grade, corporate bonds, ETF, LQD, that continues to move higher.
But the wealth effect from equities is not that strong. It doesn't feature heavily in the Fed's models. And in fact, all of their models are the 3-month moving average of equities. So you have to think about putting on the Fed's goggles every day and looking at the world through their lens. And so that kind of market volatility is always assumed to be temporary.
All right, TLT, looking for that to head towards 100. Off today, looking for a higher high tomorrow, perhaps.
Obviously, Leisman is there. It's a big boondoggle. Did you look at his view behind him? Yeah. When he's not in the chair, he's wetting a line. Okay, he's fishing. And so, but it's about it affords the opportunity to talk about lags on monetary policy. And so, while Chair Powell's not going to give any indication of anything other than that approaching September cut, nothing about the cadence.
Okay, we got 46 minutes to go. 46 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. I'll be here till 4 p.m. 4 p.m. closing bell. We got about 46 minutes to go. All right, starting to see a little bit more short covering. That's about it for now. Not expecting any kind of big moves. Maybe overnight we can see a pop back up, gap up in the morning. We're already down quite a bit.
I think his tone, he starts out in many of his press conferences, at least as I've observed them, sort of sticking to the script. But for example, it was several press conferences ago, he was asked about hypotheticals relative to what it would take to hike, and he wouldn't give them. But he was more than happy to recite hypotheticals about what it would take to hike. And it's those little nuances, I think, that tend to make him a little bit more dovish in tone, perhaps, than he even intends. And I'd just like to address Ellen's point, and I generally agree with her. That said, when we think about the equity cushion underneath the corporate credit, in the Merton Scholes model, for example, you really can't separate credit spreads from equity valuations. They're integrally intertwined. And I agree, the Fed's not looking at them at a tick-by-tick basis. But I think what my point is that if equity volatility persists, the Fed will notice that. In and of itself, standing alone, first order, they will notice that.
Into the close. The JP Morgan looking strong. American Express, the financials looking pretty good. Travelers Insurance, financials, Goldman Sachs. Okay, Boeing with the bounce. Okay, Boeing. S&P 500. What is NDSN? Nordson Corp, whatever they do. Huntington Bank shares. RF. Regions Financial. All right, so some of these smaller banks are doing very well. Okay, the financials looking pretty good. State Street Bank, looking pretty good. Okay. Okay, there goes Hollow. HOLO. Hollow. Looks like it's going to go again. All right, so lots of volume on this risky penny stock. Okay, let's see what this looks like. HOLO. Okay, making new highs. All right, got 43 minutes to go. 43 minutes. The market's pushing higher.
And I wonder how you're thinking about small mid-cap plays versus mega-cap tech and the Qs and so forth.
Well, I think when you get into a cutting cycle, and once the Fed gets underway and we're sort of establishing what the cadence and magnitude is going to be and how quickly we're going to be there, then I certainly think that people will continue to push on mid-cap, small and mid-cap stocks, just because that's the sort of how you play the Fed playbook. For me, I stay shorter to medium term.
HOLO.
Economic strategist hat on.
Hello.
And longer run thematic with my global head of thematic investing hat on, right? So I'm looking more of not what the earnings are going to look like for Dell and Nvidia, but how is AI going to diffuse globally across the global economy? And so that's a much longer term view. If I could just leave you with one last thing to watch for at Jackson Hole, though.
Resistance at 90.
He used to say that real rates were significantly restrictive, and he stopped saying that last year.
Supply at 90 cents. Hollow, you got resistance up there, Cayman. So at least get up to there and reassess.
And so I just think that's really important. And don't forget, this is a very scripted, unlike the Q&A, right? This is extremely scripted. There is no going off script. It's extremely scripted.
So what he says he will intend to say.
Yes.
That's a good reminder. We'll listen for that tomorrow if we get it. Peter, Eric, Alan, thank you all. Appreciate it for a great 8 block. Let's send it over to Kate Rooney for a look at the biggest names moving into the close. Hey, Kate.
Hey there, Carl. Let's start with Snowflake. So shares that are continuing to fall down double digits today. Comes a day after earnings where the data and cloud analytics company showed slowing product revenue growth. Product revenue was still up 30% if you look at a year ago. As Morgan Stanley put it, Snowflake's results, they were good, but quote, perhaps not enough. The stock is still down more than 40% year to date. And then take a look at Intel as well. That stock falling after Bloomberg reports the chipmakers director, Lip Bhutan, is stepping down from the board after about 2 years in that role. The move following a quarterly report earlier this month, you might remember, that showed Intel in its stock suffering.
Okay. Hello.
We're just getting started here. Up next, the top technician, John Colobos, is breaking down some key levels, watching the 3 big reasons he is still bullish right now. We're live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
Okay. NVIDIA still making new lows. NVIDIA. All right. So the tech stocks are taking it on the chin. All right. So hedging. I like the idea of hedging with SOXS. Semiconductors rejected at the 50-day moving average. That's probably going to last a couple of days at least, I would think, right? Be funny if we came in and we were gap up. I would be fine with that. We gap up above the 50-day. I don't think that's going to be the case, but it'd be fun. Just a hedge, SOXS. SOXS is a hedge on semiconductors, 3 times bear. That's currently up 8% today. Okay. All right, many of these stocks are off. Applied Materials, Intel, NVIDIA, ASML, Supermicro. Okay, that one's sitting tough. I have a put credit spread on that one. If it starts to fade, I might take those off. Okay, let's say we come in tomorrow. You're thinking to yourself, let's say we come in tomorrow. What you're going to do? What you're going to do? If we come in tomorrow and the markets are lower, in particular the tech stocks, if they're lower, what you could do is sell premium overhead. Obviously, you could do inverted ETFs for hedges like SOXS. You could do that. Maybe you don't want to complicate things. Maybe you just want to take that SOXS and just build a position on this for now. However, there's also the possibility of some of these names like Applied Materials. Maybe you want to sell call credit spreads up here, say 220, 225 for a nice credit. Looking for prices to fade a little bit more or bounce, stay between the Bollinger Bands. So I would sell above the Bollinger Bands or below. Right now, we're moving lower, so I'd rather sell call credit spreads. So I would sell maybe the 220, 225 or something like that on Applied Materials. NVIDIA, I probably won't do anything with NVIDIA because that could go either way. Stocks like Tesla, maybe you want to do something with Tesla. Sell the 235, 240, call credit spread, something like that. Depending on how it opens tomorrow. All right, S&P is going to make new lows here.
I would say it's a still bull market. My report today I sent out was a long and winding road to S&P 6,000. So I think we can continue to push up higher, but it's going to be
long and winding road. GS, Goldman Sachs. Okay, looking for shorts to cover. SPY still fading.
Most of the cross-asset volatility measures are still elevated. The market is still exposed to an uh-oh moment. It could be another swoosh lower, or we continue to move sideways. So there's still a lot of volatility, and it makes sense. We got Jackson Hole tomorrow, and we got NVIDIA next week. We got the Fed. It makes a ton of sense. So when you tie it into today's tape, we're pulling back. It makes sense.
You also look to the cumulative AD line, which is that one of the more bullish indicators we have at the moment?
For me, yes, I think it absolutely is, and it's actually leading the S&P to new highs, right? So the S&P 500 AD line is breaking out. The S&P 1500, which is even broader, right? The big caps and the small caps in there, that's also breaking out, and that's quite interesting. That's actually very bullish on the surface. And the last 2 times this happened,
SPY
2018.
coming back down to the low. All right, so we're closing at the low. Going to be closing at the low of the day, it looks like. So that looks pretty bearish. Bearish engulfing candle, S&P, bearish engulfing. Just about everything is showing you bearish engulfing, except for some sectors like financials looks good. All right, so this should be pretty obvious. Financials at a triple top. What are the New York Stock Exchange doing? New York Stock Exchange closing at the triple top high. S&P equal weight index not falling off, so that's a good signal. Okay, if this was falling like it was in the last move, the first week of August, if it was doing what it was doing in August, then I would definitely be hedging a lot more. But for now, I'm just hedging a few hundred shares of TZA, a few hundred shares of SOXS because of the rejection. That could very well turn around tomorrow. I doubt it, but that could turn around tomorrow. So SPX, equal weight index, not much going on there. You could do SPXS, the short. Okay, that's starting to bounce. That's $7 per 100 shares. Maybe you want to hedge with a few of these. SPXS. Let's see what SPYD is looking like. Look at that. SPYD just hasn't come back.
Now, with the Fed needing to, people hoping they're going to cut, that should help more companies, the companies that are closest to the economy. So I think I'm answering your question the right way, but that's how I'm viewing it as. There are two different markets here. One's impacted more by the Fed, and ones that are more impacted by AI.
How about seasonality? Is it as treacherous, do you think, September? As some
Yeah, and that's one reason why I'm saying it's going to be a long and winding road, right? So every September tends to be bad. We all know this, right? Technicians, not technicians, and I know that.
Okay, Nail. Yeah, interest rates. Josh was talking about that too. XHB, Pulte Homes. You're looking at Pulte, PHM. Toll Brothers had a problem, right? There was some bad news or something at Toll Brothers. No, it's still higher. KBH, KB Homes, NVR, Ryan Homes.
Coming into Labor Day, it's very possible if he comes back to work, maybe the election dynamics change a little bit. Maybe Harrison might start winning, and maybe corporate taxes are coming in place. Let's rethink things. There is a risk, for sure, as we head into September. Things may change.
Right. I think one of the main takeaways out of earnings season might be that the election cycle, is weighing on capex, but we haven't really seen clear examples of how it might affect equity behavior.
Yeah, that's fair. And I think next week too, like some folks are asking me, who's more important? Which is more important, Jackson Hole or Nvidia next week? And I think they're equally important. I think Brett will improve and Jackson Hole's positive, but the stock market itself will hold up fine if Nvidia does what it has to do.
Tom, thanks.
Per share.
Kava is preparing to report today. Look at results at the top of the hour. That stock has had a wild run up nearly 140% this year. We're going to run you through what to expect from that print. And don't forget, you can always catch us on the go by following the Closing Bell podcast on your favorite podcast app. We'll be right back.
$9,000 per share for Ryan Homes. Ryan Homes trading at $9,000 per share. Wow. That's crazy. 100 shares, $90,000. Definitely a good builder. What you looking at, PHM? Let's see. Beazer Homes, BZH. Remember when remember this one was like $10, Beazer Homes. Also, you had Hovnavian, HOV. Hovnavian, that was like a penny stock. It was like $4. Like $4. Now it's 234. 234. Hovnavian. They're big in the Northeast. Okay, so let's see. Let's take a look at some of these builders because there might be something that looks good. We'll check the earnings as well. If you like the idea of builders, because we're looking at 5% probably pretty soon, 5% mortgages. Now it's getting back into the realm of possibilities. You get incentives, a interest buy down from a builder for first home buyers, get your interest down to like 4.5%, 4%. I mean, that would be freaking awesome for your first home. Let's see, builders. Let's see who's doing well in here. Okay, Alcoa Beazer Homes is only $30 per share. Can you see? This got an ATR of about $1.50 a day. $1.50 a day. Now, under the best circumstances, you could probably see $3 by the end of the week. By next week, I should say. So 10%. 10% under the best circumstances, obviously. Beazer Homes, they build quite a bit in the Northeast, I figure, right? Beazer, BZH. Okay, so Beazer Homes beat. They report again in October. Beazer Homes reported October 1st, my birthday. Not the best numbers. Beazer Homes, 16 states, 3 geographic locations in the United States, west, east, and southeast. So mostly east, southeast. They do some in the west as well. Beazer Homes, single family, multifamily. Okay, so that looks okay, but I'd rather buy something that has all 4 of these metrics green. Let's look at, Frando's looking at Pulte Homes, PHM. They build a lot over here on the Northeast. Okay, they beat Pulte. All 4 metrics are green. Pulte, PHM. Let's see, Pulte. You're looking at Pulte? All right, August 30th. Pulte Homes. Pulte Homes.
Is unit growth a story on this name?
Yeah, absolutely. It's one of the fastest unit growth stories out there in restaurants today.
Where does it rank in your universe overall relative to some other names that you might have to say with the buy rating?
It's probably my top 5. I mean, it's again, given the dearth of transaction growth.
Okay, Pulte Homes looks good. Pulte Homes, all 4 metrics are green. Like it the best. Pulte Homes, let's see what KBH looks like. KB Homes. Okay, 3 metrics green. Let's go to Toll Brothers. They do high-end homes. All right, 3 metrics there. Okay, what Lennar? Let's look at Lennar. Lennar builds a lot as well in the East Coast. Lennar as well. Lennar looks good. Let's see. Lennar. Lennar. It's $180 per share versus Pulte Homes at $130 per share. Who else? Meritage Homes. I believe they do a lot in the West, right? Meritage, or is that Tri Point? I forget. Meritage MTZ. No, MT. Meritage MTH. Meritage Homes. All 4 metrics. This looks pretty good. They got good earnings growth. Meritage. High growth regions of the South and Western United States. Okay, Meritage. MTH. Let's take a look at that. MTH. Okay, they're $195 per share. Okay. What else? Let's take a look at Meritage, Toll, TriPoint, $40 per share. TriPoint, TP8, TriPoint Homes. They beat 4 metrics green. Look at the growth. Look at the growth in TriPoint. Now, TriPoint's probably not a bad idea. It doesn't report again until October 24th. I might buy some TriPoint. TPH. Could just buy shares and sell covered calls. Let's see. It's got $1.40 per day right now. Okay, so it's pulling back a little bit. So yeah, maybe buy some TriPoint and sell some covered calls. Let's see. TriPoint. What are the options going for? Maybe just some limit because the markets might pull back. Let's see. Pretty big spreads, about $1 spread in their options for October. Dollar spread. Yeah, that's a pretty wide spread. So I would just buy shares, most likely. TPH. TPH. Let me look at the. What's the daily look like? Daily's been on a buy for a while. TPH. TriPoint Homes. TPH. Nice bounce off the 200-day. Let's zoom in a little bit because I want to see what kind of volume institutions. Yeah, they've been buying. Stochastics MACD turning 44, could be 47. Could see 47. TriPoint. With that big spread, you might be able to sell some. You might be able to sell some. What you call it? Sell some covered calls on TPH. Pretty big spread. Put a limit out there. Let's see, 47. Let's see what the 47s go for on TriPoint. 47s, October. Okay. Let me go with single. Starting to get used to Thinkorswim. I'm beginning to like it now. Okay, the 50. All right, so $2.10 for the 45. It's right at just outside of 45. It's definitely going to get to 45 before October, I would think. September 20th. That's only a month away. Let's see. 570 for the 40, 45, 50, 55. Okay. So just shares probably. Shares on TPH. Okay, TPH looking for a follow through, push higher. Okay, Hollow continues to push high. Hollow continues. Hollow. And going into the last 20 minutes of the trading day, Hollow. Okay, Hollow. It's a penny stock, just watching this one. Have some shares with Cayman. So this is running here. Hollow.
Just about 20 minutes to the closing bell. Let's get back to Kate Rooney for a look at some of the key stocks to watch today. Hey, Kate.
Hey, Carl. So shares of Williams-Sonoma today slipping after the kitchenware retailer lowered its annual sales forecast and then posted future revenue
The missed estimates, the company's earnings per share did come in better than expected. That stock, WSM, having its worst day since May. And then you got Urban Outfitters today, dropping more than 9% after reporting second quarter sales. And those stores that were open for at least a year, those were down 9% from a year ago. That was more than the 8.3% decline that analysts had been expecting and looking for. Shares of that clothing retailer, they're down more than 18% just so far this month, Carl. Back to you.
All right, Kate, thanks. Meantime, Peloton shares soaring, as you might know today, as the fitness company's turnaround plans seem to be paying off. We're going to break down those details when Closing Bell returns.
Okay. Hello. Hello. Moving higher. Hello. 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 All right. S&P moving back down to the lows. Hello. Trending. 50. It's up 30%. 30%. Hello, 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 man. That one's going. Hello. All right, so we've got 18 minutes to go, eh? 18 minutes. Okay, we got a few minutes left to go for the closing bell. Got 16 minutes. 16 minutes. There goes Hollow.
Don't forget to tune in to the newest episode of CNBC's original podcast series out today, The Crimes of Putin's Traitor, a real-life spy thriller exploring the secret life of a young Russian oligarch who was part of the historic prisoner swap between the U.S. and Russia earlier this month. Follow and listen wherever you get your podcasts. Up next, Advanced Auto Parts sinking on some weak results. We're going to break down that number and the key metric weighing on that name when we take you inside the market zone.
Hollaback girl. All right, just watching the close. TLT. S&P still grinding lower. AMD lows of the day. Okay, that's going. All right, we've got 16 minutes to go. 16 minutes to go.
We are now in the closing bell market zone. CNBC senior markets commentator Mike Santoli going to break down some of these crucial moments in the trading day. Brandon Gomez on Peloton, tracking for their best day ever. Phil LeBeau with the big move in advanced auto parts, and our senior markets correspondent Bob Bassani watching the final minutes of this session. Mike, let's begin with you. There's a little VIX spike.
TLT.
Ahead of tomorrow? Yeah, I think a little after.
Let's see S&P. Let's see what the S&P is doing. S&P 500. Okay, a little short covering end of day, but closing near the lows. Okay.
Let's not be leaning too far in one direction ahead of how big picture. It's been this great run. We sort of stalled out, or maybe just paused around the 5,600 level of the S&P 500. We kind of know what Powell's going to say. The question is, is it going to be taking credit? Information technology down a full 2% here. We did get an all-time high on Meta earlier in the session. Talk about that, and then I wonder, did the retailers that printed add any color to what we already knew? I mean, in terms of tech, it was a rebound that was more selective than we got used to in the first half of this year. I mentioned the NASDAQ 100. If you look at semis, they really didn't take back as much of the correction losses as the rest of the market did. So it seems as if there could be sort of an ongoing and subtle leadership shift. The equal-weighted S&P is really not down much at all today. So it seems as if for now things like banks are stepping in. When it came to retail, I I think in general, you want to take it in aggregate, starting with Walmart's results, going through what we heard today, and then we're going to hear some more after the close. In general, better than feared. In general, 4% annualized wage growth plus 4% plus-ish unemployment rate is still a formula for the pie growing, if more slowly than we thought before. Maybe it complicates what we hear from Powell, just because, again, the consumer economy is maybe a little more resilient than we feared a couple of weeks ago, even if it is still in slowdown mode.
We mentioned earlier today, Mag 7 on pace for the first relative underperformance against the S&P in nearly 2 years, Mike. At the same time, you got the equal weight S&P at an all-time high or close to it. Is the market trying to sniff out earnings power that's shifting around?
It is probably, I mean, one of the big explanations for why the Mag 7 really dominated in the first 2 quarters of this year was it was just a scarcity of earnings growth. They had pretty much all of it. They have now. I always do want to emphasize.
Okay, we're still drifting lower, S&P. All right, so TZA, SOXS, those are my hedges for now. Okay, there goes hologram again. HOLO. It's up 30% now, hologram. 32%. Still going.
Hey, let's have these mega caps just, correct a little bit and have some fun elsewhere.
Mike, stick around. Let's get to Brandon on Peloton. I got to say, Brandon, when I first saw the print this morning and I saw digital subs down 26 year on year, I wasn't sure this was going to be the result.
Yeah, Carl, look, it's been a wild ride today. Obviously, we'll get into some of those numbers. The stock is surging on a better than expected quarter. Progress for the stock, yes, as you point out, but still a long way to go, especially when it comes to subs. Sales increase, but first, sales increase in 9 quarters for the company, now prioritizing what they say profitability, free cash flow over growth. Now the question is, how are they going to do that? Well, interim co-CEO Karen Boone said on the earnings call, "We're not going to spend inefficiently to acquire unprofitable subscribers," arguably perhaps a past strategy. The company's CFO also updating on the company's promise to deliver $200 million in run rate cost savings by the end of fiscal 2025. Peloton making massive cuts to its sales and marketing spend, running less promotions. The company delivered approximately $15 million of cost savings this quarter alone. The majority of that.
All right, got 7 minutes to go. 7 minutes to go.
The debt restructuring. All this comes as Google's Fitbit and Amazon's Kindle announced product integrations in the past few weeks. And then you have hedge fund manager David Einhorn's Greenlight Capital acquiring a whopping 6.8 million shares of the company, according to 13F filings. Carl, the CEO search still on over at Peloton, though they say they do have quite a few specific folks in mind to turn the company around.
Now 30, almost 36%, Brandon. I was just thinking about Barry McCarthy and wondering.
Looking for a follow through. We're at the highs of the day. Trying to push a bit higher. The recent high, 70 cents. Okay. S&P making new lows here. So hedge with TZA, I would say, probably not a bad idea. TZA. We've got 6 minutes to go. TZA, zipping higher. TZA. SOXS is probably not a bad hedge either. Trading at the highs of the day. SOXS. Semiconductors getting rejected at the 50-day. Now, these are hedges. So if we do pop up tomorrow, I'll be fine with that. The hedge, I'll reassess it tomorrow. But for now, semiconductors getting really slapped 3.5% lower at the moment. All right, there goes SOXL, SOXS.
Was previously $3.75 to $4.25. Comparable store sales -1% to flat, down from flat to 1%, and then operating margin 2.1% to 2.5%. That's a cut from 3.2 to 3.5%. Any way you look at it, this is a company that is in transition, and as part of that transition, they did announce today that they are selling their WorldPack unit, a subsidiary of theirs that they were trying to sell, and they have reached an agreement to sell it for $1.5 billion. So
okay, hello. Look where SMH got rejected too over there on the right. S&P 500, sorry. S&P got rejected there. 56.50. Okay, moving lower. We're making a new low.
Phil, while I've got you, I mean, it's not a great take today, but Tesla is a relative underperformer, down almost 6%. There was some discussion yesterday about Ford and the tweaking of the EV strategy. Is that good news or bad news for Tesla?
I'm not sure it's bad news for Tesla. I think Tesla is its own story, Carl, to be quite honest with you. And I don't think it's going to do a whole lot. Look, it won't do a whole lot, in my opinion, until you get the Q3 deliveries, the first 3 days of October. And then remember, October 10th is when we have the Robotaxi event. Those are the two catalysts that are out there for Tesla shares. And then obviously Q3 results. But the big one is going to be Robotaxi Day on October 10th.
Phil, thanks. A lot going on in cars and airlines. That's our Phil LeBeau. Let's get to Bob. What do you make of this market?
We ran out of steam. We have been on a tear. The S&P 500's up 6% almost the last 8 or 9 trading sessions.
Okay, so other stocks, Peloton, fading from the high of the day. It's off 20 cents from the high. We got 4 minutes to go, less than 4 minutes to go. Peloton, what's Roblox doing? Roblox had a good day. RBLX, Roblox. That's we got a little bit of profit taking on Roblox. Okay, Roblox pulling back. What's Microsoft? Okay, Microsoft, big reversal candle. Microsoft.
Leading. They have been lagging recently. Energy stocks, oil has been on a downtrend for a couple of weeks now. And look what the market leaders are today. Banks, energy on the upside, and real estate, which has been a leader for a while. So I like the rotation again here. I think if you put it all together with the earnings holding up, you have inflation waning a bit, job growth is slowing. It seems like a very low bar for the Federal Reserve to cut rates. Obviously, we're going to hear from Powell tomorrow on that. But the volume today is 30% below normal trading. There's no particular catalyst. There's just no buying.
2 minutes to go.
It's a lack of buying interest that was happening today.
What do you make of the fact that we're going
What are these people screaming about? Oh my God. Really? First time ever being to the floor of the exchange, you like scream like a schoolgirl. Okay. Okay, we're ending the day, NASDAQ 100. We're ending with about 20 stocks green, about 80 stocks red. Wow. A lot of stocks down on the day.
And I think Goldman today also reiterated their tracker with a healthy 2-handle as well.
Yeah. So when you have that and you have 10% earnings growth for 2024, 15% for 2025, you're looking at the numbers that are still very, very supportive for the markets right now. It's pricey though. Then if you get these sudden sell-offs, all of a sudden when people don't want to play the multiple, they're not paying less because their earnings are going down. They don't want to pay for the multiple. That's the problem.
Finally, we should point out oil recovered a bit after getting awfully close to 72.
Yeah, that's a tough game to play. Is oil a sign that the global...
Okay, AMD is trying to bounce. There's shorts covering. NVIDIA at the lows of the day. Apple at the lows of the day. All right, so that seems to be the theme today. Lows of the day. Tesla, that's the closing bell. Microsoft, lows of the day. Microsoft. Okay. So it's been one of those kind of days. All right, folks. I hope everyone has a good evening. I'm your host, Cousin Vinny, coming to you from theclosingprint.com at the closing bell. Have a great evening. Take care. Everything will be fine. Put some hedges on TZA and SOXS for semis. Other than that, we'll take another look at it tomorrow if we need to take more hedges. Have a good one. Take care. We'll see you tomorrow. Ciao.